Hi everyone, this is Greg Lewis from MetaStock. Thank you so much for joining us today for our Trader Summit. This is an 8-hour, 8-presenter event, and we're really excited about it. We have a lot of registrants today, so we're really excited to kick it off here in about, 6 minutes and 12 seconds. So, sorry, I'm still getting a lot of things from my my coworkers. So to kick things off today, Jeff will come on in about 5 minutes, and the first speaker is Dave Aquino, and he'll be talking about impulse trading, maximizing profits in a volatile, unpredictable market. Speaking of volatile, unpredictable markets, it of course still is a situation where we're coming from our homes. We haven't yet returned to the office. For that reason, you might hear my dog snoring in the background. Apologies if that's the case. I'm not sure if the mic's picking it up. All steers are coming in today. Make sure you say hello and chat. We will be simulcasting today on both YouTube and GoToWebinar. Now, it doesn't matter to us which way you watch it, but if you are watching us on YouTube right now, you might want to go over to traders-summit.com. That's traders-summit.com and register, because a lot of in fact, all of our presenters are offering freebies, and that might be something you want to take advantage of. But as far as watching the recorded event, it will be here on YouTube. So this is where you want to go to watch the recorded event, all 8 hours of it. Also, Jeff Gibby has pointed out several times, I've said this event starts at 8 a.m. Eastern. I meant to say 10 a.m. I apologize, whatever time it is. Apparently it's too early for me because I can't think straight. But to be sure, this event will start in about 4 minutes, technology notwithstanding. And we look forward to all of the presenters and all of you guys commenting and asking questions, and make sure you do a lot of that. Jeff Gibby is monitoring the YouTube chat here, and he will pass all that on to the presenters as we go along. So if you have any questions at all for the presenters or Jeff Gibby or me or whatever, go ahead and chat it in at any time. I see we've got, let's see, we got a lot of people coming in already. Brian Pickens says hello from Kansas City. Faisal says hello from Pakistan. Sheen, I'm sorry if I'm saying your name wrong. Sheen says hello. And still got a lot more people coming in. So anyway, I'm going to go ahead and mute myself, and you can listen to some jazzy music for the next 3 minutes. And thank you so much again, and successful trading.
Good morning, everybody. I hope you're doing well today. Welcome to the Online Trader Summit. We're going to go ahead and get it kicked off. Number one, thanks for coming. I hope you enjoyed today. I was looking at the list of speakers today, and I thought two things. One, what a great group we've got, and two, there's a good amount of hands up today. So let's go ahead and get started. And I'm going to go ahead and start us off with a legal disclaimer. So let's go ahead and see if we can get these slides moving. Today's demonstration is designed to instruct you on using MetaStock and the company software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So there you go. I do want to spend just 1 minute saying, hey, thank you to our sponsor, Stocks and Commodities Magazine. They do a really, really good job. They've been actually supporting the Online Trader Summit for 7 years, if you can believe it. We've been doing this thing for 7 years now, and it's been a great event. We love it. It's been very, very. I'm really, really happy with how well it's gone. And now we're putting it on YouTube and a lot of simulcasting it, and it just keeps getting better and better. And so, thanks for coming today. Thank you, Stocks and Commodities, for actually sponsoring the event. I do want to let you know when you registered for the summit, if you registered and are watching through GoToWebinar, you did have an option to get a free issue of Stocks and Commodities. If you're watching on YouTube today, you can actually go to metastock.com/traders-summit and fill out the registration form and request a free copy of the magazine. Anyway, they do a great job. We love them. It's a great magazine, and get a free issue. You might as well. We're, of course, MetaStock. We're going to be talking and using and playing in MetaStock all day. And we'll have some special offers as we get going. But let's get to our first speaker. Today, our first speaker is Dave Aquino. Dave has worked with us for a number of years. He does a very, very good job. He's going to kind of talk to you a little bit about how he got started in trading. And we always really, really enjoy what he has to say when he comes in here. So we decided to let him headline today. So how are we doing today, Dave?
Doing really well, Jeff. How are you?
Doing great. I think the coffee kicked in just then.
Yeah, I know.
I have a little bit of energy today.
That was a really nice introduction. I'm looking around. I'm like, is Jeff talking about me or who is it? I just wanted to say thank you for inviting me to the Online Trader Summit, because every time I get an opportunity to work with you guys, I jump at it. And the last time was a lot of fun. I'm sure this time is going to be a lot of fun. You guys do really good work. And just as a little aside, I actually started using MetaStock way before I joined Basecamp Trading. I was dabbling in the markets, just getting my feet wet. So I've seen your product like for years. And so when the very first time I got to speak with you was like the really cool thing. So I really appreciate you getting a chance to be here.
Right, we did. That was like 7 or 8 years ago.
Yeah, well, like I said, it was even before then. So
yeah. All right, I'm gonna you got
okay.
it. Start. We can hear you. Have a good. We'll see you in about an hour.
All right, sir. Thank you very much, Jeff. All right, everyone. Again, thank you very much for the opportunity of being here. I see there's a nice sized crowd. I hope all of you have your coffee, especially you folks maybe on the West Coast of the United States. But hey, I know there are MetaStock users all over the world. So wherever you are, thank you for joining us. Again, my name is Dave Aquino. Let me just talk about the topic I'm going to talk about today. We created an add-on of one of our most popular indicators. We call it Trender Pro. As you can see, it's in the second version. And we utilize this indicator all the time in our trading rooms and as individual traders. It is profoundly influencing the way we trade in a certain aspect from the standpoint of directional trading, taking and understanding and writing trending trades, things like that. It's very popular with very experienced traders, but also traders that have, just getting their feet wet, because the concepts are easy to understand. The techniques are easy to apply. And with this version that we've created for MetaStock, it's actually pretty straightforward. So I'm really looking forward to sharing with you some of these details. Okay, and we'll go ahead and move forward here. Jeff already gave you some of our risk disclaimers. These are ours. Basically, what we're trying to tell you is be careful when you start trading, especially when you're new. Don't trade with money you can't afford to lose. Now, no trading system or methodology is 100% surefire, but even the most professional traders, most successful traders will tell you that's the normal case, because that's why we call it trading, you know? So as long as you're trading with the probabilities and trading to your strengths and learning some fundamental trade setups and using some fundamental tools, you too can succeed with your trading. So with that start, I can see everybody's kind of questions here. I want to get a feel for the room. How is your trading going? Are you consistently making money? And maybe you're here just to enhance and learn more and to be able to continue to improve your craft? Um, or have you been losing money? Maybe you've run into some roadblocks, and maybe you find yourself trying a lot of different techniques, but not having much success. Or have you been doing this a while and you're just about to the point where you're making it, that you can kind of see a light at the end of the tunnel, that if I just push myself a little bit more, I should be able to um, uh, make money on a regular basis, even just to the point of pushing just past break even. Okay, and we've been doing trading instruction at Basecamp Trading for me personally about 7 years plus, and so it's I've seen the evolution of traders, and I see that it is a process. So wherever you are on this hierarchy, there's definitely something you can learn from today's program. Okay, so the question is, when you seek to trade, okay, again, this is one of our good friends, uh, uh, Dave Glissmeyer. And when he first came to us, the crazy thing was he was really interested in trading stocks and options. And he was having a fitful time. He'd make some, he'd lose some. But he had basically, when he initially started trading on his own, he had just recently sold a company for about 2.5, 3 million. By the time he got to base camp, he was just around 500,000 left of that nest egg. And this is what he had to live off consistently for the rest of his life. And he was, as you can see, demoralized. So what we did was get Dave all settled down, and basically we cut his trading activity down by almost 80%. He focused on specific types of trades, primarily trend breakout type trades, and in a very short period of time, his 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 equity curve. Sorry, it's a little bit early in the morning myself. His equity curve went from a flat pattern, you can see right here, and it took off. Okay, and you can see this is a relatively small account. We started him small, and then as he gained in experience and technique in just the limited things that he could trade, he did quite well. And he continued to expand his trading from there. So I show you this not because of the steepness of the curve or saying, hey, look, he went from 2 to 3,000 up to close to 25,000 within several months. It's not the case. What's important is once you develop a technique that meets your needs, that meets your strengths, you can quickly accelerate from a position of losing money to breaking even to making money very quickly. Okay. Again, Jeff introduced me there. Again, made me blush a little bit. But for those of you that don't know me, my name is Dave Aquino. I'm a partner and head of options trading at basecamptrading.com. I graduated from Vanderbilt University back in 1995, and I've spent 24 years of in the markets. First as a general securities broker, and then a registered investment advisor, and then as a trader, an individual trader just like yourself, and now as a trading coach. Um, right after college, which I actually majored in molecular biology, and 1 year of medical school, I decided that wasn't for me. I applied to a number of brokerage houses, and I was hired by Merrill Lynch, sponsored for the Series 7, and became a broker at a ripe old age of 23. I was there for about 4 years. I learned a lot about the markets, the stocks, bonds, options. I was around at the time we used to trade stocks and bonds in eighths and sixteenths and before decimalization. So it was amazing that the transition the markets have gone through in that time. After being at Merrill Lynch, I joined the Vanguard Group. I joined their high net worth department, and my last 12 years at Vanguard, I spent in the asset management group working with ultra level client households. Me and a small group of people managed about $660 million. We were responsible for generating derivatives income for these traders, and did that for for these clients. Did that for a number of years. Now, this is where it gets interesting. One day, after working with these ultra rich people, I decided that I better get out there and figure out how to make money myself. So I actually was in a seat very similar to yours. And you heard me talking to Jeff about I actually was using MetaStock before I joined Basecamp Trading because I was trying to figure it out myself. And MetaStock has a very good platform for that. And I was sitting in a seat very similar to yours, listening to a speaker one day, and I decided I want to learn how to trade on my own. I found my home at Basecamp Trading, and after doing that and being in the trading rooms with Thomas Wood for about 4 months, I was talking to him about me adapting his strategies to the stocks and options market. 3 weeks later, I have a job with Basecamp, and I've been here ever since. So it's a tremendous opportunity once you learn how to trade. Who knows? You might have the opportunity to share that knowledge with others. I consider myself a trading instructor, mentor, and a coach. And just a little screenshot of our family. We have a live boot camp every year. This was last fall in Raleigh, North Carolina. So Basecamp's a great place to hang out, trade with your friends, keep learning, keep making money. All right. So how many of you have ever heard this before, this term? The trend is your friend. This is one of the most important concepts in the markets. One of the biggest ways that people tend to get in trouble is that they are not paying attention to the current trend. They get stuck on thinking about what they're thinking about, but they're not paying attention to reading the market. It's almost like a sailor going out on the ocean, deciding they want to go north or south without paying attention to which way the wind is blowing and which way the current is coming. Okay? It is much easier to trade with the trend than against it. Okay? If you're not sure which direction the trend is moving in, you better wait before you place a trade and be sure of it and then go with it. And then once, and this is one thing Trender Pro 2.0 is going to help you with today. Once you identify that trend, keep riding it. It can run a long, long way a lot of the time, as long as you're on the right wave. You guys will have to excuse me if I pause every once in a while. I have a little bit of a cough, so I will try to work through that. All right. Oops. All right. So in today's webinar, I'm going to introduce you to Trender Pro 2.0. I'm going to show you why momentum trends can help you no matter what your trading style is. And then I'm going to show you some examples of Trender Pro and the MetaStock add-on, and I'm going to show you that to you with current market movements and current stocks. Okay, so what does MQ Trender Pro 2.0 do? Okay, it is designed to help you quickly and easily determine the market environment and direction in any time frame. In my example, basically Trender Pro is telling you which way the wind is blowing, how strongly it's blowing it that way, and how quickly and easy you can get onto that trend. Okay, once you're on the trend, Trender Pro 2.0 helps you stay in winning positions longer, and it helps you filter out lower probability trades, therefore increasing the profitability of your position. Okay, Trender Pro 2.0 also easily helps you determine if a market is what we call strongly bullish or maybe neutral bullish, kind of in the middle, neutral, which is non-directional, neutral bearish, which is a slightly more bearish, and very strongly bearish. Okay, so we are basically taking the temperature of the market. So why use Trender Pro 2.0? Okay, basically Trender Pro 2.0, if you know what the trend is, it keeps you from trading what we call the wrong side of the mountain. Okay, you want to trade the side of the mountain that's easy, as opposed to the one that you have to work up and fight against the current trend. Okay, it also helps you ride out larger moves. How many of you have ever taken a trade, had a position, all of a sudden you get spooked by your position because of some a little erratic movement, you exit the trade, and later on when you look at it hours, days, weeks later, the trend had continued and you missed out on a major move. Okay, that's what Trender Pro is designed to prevent. It helps you ride out those and stick out those larger moves. Okay, Trender Pro also helps you avoid choppy markets. Now, we always emphasize the market is bullish, the market is bearish. Well, guess what? There's this messy middle that tends to be very choppy and very neutral. Those are the markets you try to avoid. Those are the markets that you sit on your hands. Those are the markets you try your best not to enter directional positions or not tend to take large directional trades when you're in. And that keeps you from losing money from little losses back and forth while you're waiting for the next big move. Okay. Also, Trender Pro helps you increase your win-loss and reward-risk ratios. Because if you're always trading with the trend and you're taking trades in the same direction of the trend, you will greatly increase your win-loss ratio, and your reward-risk ratio improves much better if you can hold a winning position longer. Okay? So you're probably thinking, okay, Dave, that's enough text. Can you please show me the indicator? And here it is. This is Trender Pro or 2.0 on MetaStock. And let me get my little marker out. Okay. And generally speaking, it has three different sections. The top section here is the chart itself with its various colors and symbols. Then you have MQ momentum down here towards the middle. And then you have MQ trend. That's the ribbon at the bottom. Now, all three sections work together to give you a clear picture of the directionality of the market at the current bar and where it's been in the past. Okay, so make it a little bit clearer. Again, here's the same layout. This is Apple on a weekly, Apple on a daily. So the colors on the bars themselves in the upper section give you an idea if we are bullish, neutral, or bearish. Okay, and I'll give you a description of all the colors later on. Then you have symbols placed above and below the bars. Okay, these symbols give you arrows that dictate, the trade direction and the type of trade this may be. So this is the signal right here. This is an entry signal, and it is a bullish entry signal. And you can see this is where we transition from neutral to bullish. And then as we continue to move higher, the bars tend to stay green. And we go ahead, and this area is what we call extended. It's still bullish, and we continue that run, but we're a little bit more careful as we trail stops in the extended area. Okay, so those are the highlighted bars. Those are the symbols. Again, here are the same signals right there. These are trailing stops. I'll explain to you those in a moment. And then you can see how it does continue to move higher. In the second section, this is MQ momentum. This is one of our most popular indicators. It comes with the add-on. It is, if you've ever used MACD, it is very similar to that. However, our MQ momentum indicator is much more responsive. You see the sharp pivots in this this line, and MQ momentum is designed to do that because primarily that aids us in identifying changes in momentum that lead us to a clear understanding of divergences, things like that, and then quick changes in momentum, higher or lower. Okay, the differences are the difference between driving a Toyota Camry and driving a Ferrari or a Lamborghini. This indicator tends to be much more responsive and can pivot the changes much quicker. Okay, and then the last section at the bottom is called our trend ribbon. What we've done is adapted our indicator called MQ trend. So it's actually pretty straightforward on this ribbon. If MQ trend is reading bearish, we have a red ribbon. And if we have a bullish reading on trend, our ribbon is reading green. So one way we can easily utilize this is when the trend is bullish, we are looking for bullish entry signals and transitions from neutral to bullish. And verification that our MQ momentum, and you can tell from the slope of the line, also is reading bullish and positive. So all along, all three sections can work together to help us read trend, direction, entry points for entering the trend, verification of momentum, and verifying that we are on the correct side of the mountain or trading with the trend. If you do all three at the same time, in whichever time frame you're trading, you can actually increase your profitability and increase the overall win-loss percentage on your trading. Okay, so again, we've simplified that coding so that not only do you have strongly bearish signals, you have neutral signals, you have strongly bullish signals, but you have transitions from strongly bearish to neutral bearish and vice versa, and then neutral bullish to strongly bullish or vice versa. Okay, those little intermediate levels actually are very useful because some of our strongest signals come from the fact, and I'll show this to you later, is that when we go from neutral to strongly bullish and we jump, or neutral to strongly bearish, it's almost a screaming signal that something has drastically changed. So when you're moving from neutral to bearish, if you skip the transition level, it's actually a very good signal. It's actually one of my favorite signals, and we have set it up as an exploration. I'll show you in a little bit. Okay. The other aspect too is if we continue strongly bearish for a while, we can get overextended, and those tend to be colored in gray. Now, that does not mean that the bullish ride is over or that the bearish ride is over. It means you need to tighten up your stop losses in that area because we've been moving so far, so fast that a pullback is increasingly likely. And what we'll also get in our trends are these yellow bars that pop up every once in a while. And this is where you can trail your stop. Because a lot of times in a trend, you're just following along, but you're not quite sure at what points you can trail your stop. So in this particular case, you have an area of consolidation. Now you don't see the ribbon, but this area here is bearish, okay, bearish. And then when we flip from bearish to bullish, we go, the line becomes green. So what we're looking, when the trend turns bullish, we're looking for opportunities to go long. So we start to break higher, and we'll normally get a symbol here to go long. We go from neutral to green, and then these yellow bars are where we can trail our stop. We usually trail our stop at a little bit of a distance, and then price momentum continues higher. You get another stop, trail stop there, and then it continues higher. If it keeps running for a long period of time, you can see the very bullish bars go gray right here. And that's okay. That means be careful. We're moving too fast. It's getting too hot of a trade. Trail your stop, we may get a pullback. Okay, there's a chance here that you get stopped out, especially on that trailing stop. What I mean by trailing stop is you'll enter a trade, and then with anticipation, it's going to go up, correct? But you have a certain point at which you will say, okay, if it goes against me, I'm going to exit the trade. That's your stop loss. If it's gone a certain distance higher, you're going to move this stop loss to the next level, and you can go behind those yellow bars. It moves up, you can move your stop loss again. So what you're doing every time you move up your stop loss, if price comes back, you'll get exited. You'll exit from the trade at that level. Okay. Well, basically, what you're doing is you're locking in your profits as you hold your long position. Okay? But you can see the trend is your friend. This thing primarily stays green and it goes even extended the whole time we are bullish. Okay. And this could be easily daily bars. So when you are in a multi-bar breakout, Trender Pro 2.0 can keep you locked in, because maybe you start worrying about this sideways price action here and you exit the trade right there. 2 months later, price is up here. Okay, then we start to pull back. Maybe that looks like a double top to you. Maybe you decide to exit here. Well, guess what? It keeps going higher. Okay, the thing about Trender Pro and a high functioning trend following indicator, it keeps you in the trade because it does not at any point in this upside move go from bullish to neutral. It's in the entire time it has been bullish, and the only time it's a different color other than green is when it gets overextended because it's moving too fast. But that's it. So if you put that together with your MQ trend ribbon, okay, you're going to be bullish. The current trend is bullish. The price action is bullish. You're locked in and making money the entire distance. Okay? Now, Trender Pro works on a functionality in which we are referencing multiple price action and momentum filters to determine market bias. That's how we know if it's neutral, neutral bullish, very bullish, or neutral, neutral bearish, very bearish, overextended, what have you. Okay? And the nice thing is Trender Pro can be used in different market environments. Okay, it adapts to volatility. It also adapts to time frame if you're using it in different time frames. Okay. All right. How do we read Trender Pro? These should be pretty straightforward. These are the colors. Again, strongly bullish, bright green, neutral bullish, dark green, neutral is blue, neutral bearish is red, strongly bearish is red. And then the yellow bars, I think someone asked about that. That's why I went into some detail about the trailed stop. That functionality is pretty useful. That way you have an idea where you can trail your stop and give you a place to lock in your profits. Okay, this is the same chart I showed you earlier. Here are the yellow bars. And there's a formula that creates the yellow bars. Usually there are little pullback areas. Pardon me. Pullback areas on the bullish trend. Okay, so enough description, enough pictures. Let's actually look at Trender Pro 2.0 on MetaStock. Okay, so here it is. I pulled it up on a layout that this is the daily, this is the weekly. I was told that a lot of MetaStock users prefer the white background, and that's what we have here. Let's start out straightforward with a stock everybody's familiar with. Here's Amazon. So now for longer term traders, this particular view is very useful. Okay, this is Amazon on the daily, Amazon on the weekly. Okay, so it doesn't look that bad, does it? I'm going to show you Apple in a minute, but this is the run up at the beginning of the year. Here is the pullback in March. the consolidation mid-March, and the explosion in April and May and June. That's the weekly. More recently, we transitioned because we started going into the sideways pattern in Amazon. We were trading this in our room. Here's the downside move again, right? And then Amazon caught its balance here in mid-March. We went neutral. Now, here's the trick with Amazon. Someone asked me the other day, how could we have caught that major turn higher in Amazon? Well, you can see even in this area of pullback in February and March, Amazon actually never went bearish, okay? Because it pulled back to an area on the weekly where there's a lot of support. Now, of course, these are huge market moves. So I'd probably default more so to the daily. But you can see when the markets was falling here in February and March, pardon me, we were slightly bearish, and then we went neutral. Okay, when you're bearish on the trend, you catch your bounce, especially in this falling market. Okay, you notice momentum, MQ momentum, this line starts to turn, and then we went neutral. So this is where we pay attention, because what's happening is you're still bullish on the weekly, okay, but you've transitioned to bearish, but you have a divergence of price and momentum. Now, again, that's not an automatic turn, but it consolidates. This is where it's important. In this 1 week period, you get a long entry. Okay, we transition from neutral to bullish. Okay, neutral to bullish. And then immediately we get this jump. I think that's about the 13th of April. Okay, Amazon goes bullish on trend. We had already a long entry 3 days before. We go from neutral bullish to very bullish. Okay, we start to move higher for a week. We go into consolidation. Now you might start to worry, maybe I shouldn't be in Amazon anymore. We're bouncing around. We're bouncing around. We're still bullish on trend. These bars are still bullish. We pull back, we get a yellow bar, and then we start to move higher. At this point, you can trail your stop just below, some distance below the yellow bar. Okay. Then we go ahead and move higher, and then you get a little bit of back and forth. I get a long exit, long entry. So it's almost like we get out, we get back in 2 days later. It goes up. We get out, we get back in, we goes up. Okay, so it's a little bit choppy, but right now in Amazon, we are still bullish. Okay, again, very, very strong. Can this be used on MetaTrader? I don't know. This is MetaStock, and but you can definitely, if you can pull up your Forex chart in MetaStock, you'll be able to see this. Okay, so does everybody kind of understand this from the standpoint of Amazon? And again, I'm not cherry picking. I just picked Amazon because if it's one of the top 3 stocks in the world, okay, that the ability to understand trend down here, to get signals, symbols, that long entry, long exit. So you would have ridden this all the way from about 2000 all the 20 to 2450 before you got an exit signal. And then you got back in and you keep riding it higher. Okay, you notice pretty much the entire time, okay, for almost a month, you are actually bullish the entire time of Amazon. So you're capturing this big chunk of upside movement. Okay, here's another one for you, Apple. Okay. think I typed that in correctly. Right. So here's that pullback situation, right? February. You notice how we're moving around. I say within, what's crazy is you actually get a short entry. One, two, maybe the third day the market starts to fall apart right there. And that's even before we transition from bullish to bearish. Well, the one aspect of this is if you are watching the daily charts ahead of time, you see how the market was moving up, 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 up right in this area. Do you notice what momentum is doing? Momentum is actually falling. We call this a bearish divergence. Even price is struggling to move higher. Okay? Struggling to move higher. And this is falling. Okay? That is a bearish divergence. That's already giving you warning signals. So by the time, and look, you trail stop long. Here, right at the top, long exit, long exit. You're out of the trades up here if you happen to be bullish. You're out. And 2 days later, you get a short entry. This market, this momentum is screaming lower, so much so it transitions from a bullish trend to a bearish trend. You're in there at that short entry. Okay, we stay bearish, and it continues to fall all the way through the 23rd of March. And then we start to get this double bottom. Okay, we're still bearish there, but look what momentum is starting to do. It's starting to turn. So maybe you're not automatically believing that, oh, we should really be bullish here. That's fine, because technically this is still bearish. But once you go into this consolidation, you're paying attention because sometimes you're going to get long entries just prior to the transition from bearish to bullish. Now, if you want to wait till we actually turn bullish on the trend, it's not usually too far off from this transition period. Okay, see, we go from neutral to bullish, and pull back, and then this bullish, and then now you are running higher. So basically, from end of April, you're bullish, you're bullish, you're bullish, you're bullish. Okay, there you go. How about Tesla? I know Teslas are always very popular. Okay, so even disregarding Elon Musk's antics, saying that his stock is not worth certain things, Trender Pro can't be fooled. Okay, you have a bullish trend, you have bullish momentum, you have a long entry, and even though we are consolidating for a couple of weeks, it's in position to take advantage of a bullish move. Very straightforward. Here is Boeing. I know it's something that a lot of people like to see. Is now, oh, sorry, I mistyped. Boeing. I'll just have to select it. Sorry. See, there's the search. Usually it's Boeing. I'll do it the name. Sorry. There. Is that Boeing? Yeah. Boeing is still reading bullish. I still be careful because I still pay attention to the weekly, but the weekly is actually showing the turn in momentum also. So I think because of this pennant, because we already have a long entry very close to the beginning of June, but the volatility has been crazy. This a pennant. I would still be bullish on this, but we still need to start breaking above the previous day's highs. The way I tend to trade this is I pay attention to the trend, the momentum, the color of Trender Pro 2.0, and then I do pay attention to the price action in the weekly. Sometimes the trend takes a little while to change, and the colors, I probably prefer that Boeing turns neutral on the weekly before I take a big position on the on the daily. All right. And then last but not least, let's look at target. Okay, I actually have to select this one because for some reason it doesn't like it when I type in its name. Oh, it thinks I'm going after something else. There it is. Target. Oh, let me see if that's it. No, that's not target. Is it? Yeah, that should be target. No, hold on. Let me switch to a different one. I apologize. That's not one of my strongest points, making sure I'm going to search under the name.
Hey, John.
That's Dave.
Oh,
It's okay.
I was writing down a question from John that I promised for earlier. I can't see what you're searching for, but the symbol that we're looking for is TGT.
Thanks, buddy. I was doing TGT.O.
Yeah,
That's what John instructed me to do.
Okay.
Yeah,
Can
it's
you?
going to be.
This looks a little bit interesting. Type in TGT, but drag that dialog box over so I can see it. I think I
Sure
can help.
thing, Jeff. It's okay.
What you were looking at,
There you go.
TGT.D, which is the. So now click on symbol at the top where it says search.
Okay. All right.
And then just scroll down until you change it to starts with. This will help you forever.
Oh, there we go.
And now it's the very top option.
See, John didn't tell me that, Jeff. He wanted me to sweat it out. I know I'm teasing him because he's actually listening to our presentation today. So no, thank you very much, sir. I appreciate it. I found it earlier when I was kind of looking for making sure I had all the symbols. So I must have mistyped it earlier. Thank you. Anyway, so here's target. Okay. This one has been quite hot recently. Okay. It's a bullish trend. You can see the market action. You've actually gone from neutral to neutral bullish to very bullish. Now, notice we've actually transitioned back to neutral and you had a long exit. Now, a lot of people that tend to trade trends, you notice that the weekly trend is still very strong. But the fact that we've gone neutral here could signal an area of consolidation. So maybe you're tempted to go long again rather quickly. My suggestion in a situation like this is to actually wait till you get another long entry signal. Okay? Let the indicator do what it's supposed to do to help you. Okay? So, anyway, those are our sample charts. So, just to kind of wrap it up here, I don't want to run over my time. The key benefit of Trender Pro 2.0 is to help you stay in the trade longer. A lot of traders need confidence, especially when we get these day-to-day wiggles that move us up and down. If Trender Pro is telling you to stay in as long as you can, because that will enable to you to capture much longer moves. The other thing is, a lot of times we're reading price action. In this particular case, we have a momentum that's falling. Oh, guess what? It's Boeing. Okay. And it's, you read price action, it's falling. This is a setup we call a micro trend breakout. So we go from bearish to bullish, and then we transition from neutral to bearish. It breaks the ascending trend line. Normally we go short. We get a signal for a short entry. So that helps you confirm the setup that you're trading. it's working out and you take the trade, well, guess what? Boeing goes ahead and continues to go ahead and drop much, much further than expected. Okay, Trender Pro helps you confirm the moves that maybe you don't have quite the confidence to go ahead and take. Okay, MQ Momentum, again, I talked about this a little bit in the primary set of slides. It is our primary and momentum indicator. It's included with this add-on, and it's very useful to help us understand speed and direction of price momentum. I primarily watch the slope of the indicator line. Okay, if it's a negative slope, I'm reading accelerating, declining momentum. And if it's a positive slope, I'm reading accelerating, bullish momentum. Okay, and again, I showed you in the other chart my definition of a divergence. Here, price action is showing we're getting lower lows. Price momentum is showing that MQ momentum is showing price momentum is going up. Eventually, we turn higher. Okay, price and MQ momentum can help us detect turns in the markets. Okay, and then when you put it all together, price, MQ momentum, and Trender Pro, you have a really strong way of reading the markets. This is what I was probably showing you earlier. You can see price is actually going down. We're bearish on Trender Pro. MQ momentum is going up, and we transition from bearish to bullish. And then we can take the trade here at the long entry. And then from that point on, we go ahead and move higher. Okay. So what's included in the MetaStock add-on? I'm going to do this quickly because I know Jeff has some stuff for you. It is our primary indicators, MQ Trender Pro, MQ Trend that creates the ribbon is built in. Our average true range indicator is built into Trender Pro. And then MQ Momentum is also included. That helps you manage and read momentum direction. In Expert Advisor, we have the highlights. That's the color coding of the bars. The symbols, these are the Momentum Trender Pro 2. I'm sorry, Momentum Trender Pro 2 in signals. The long signals, the buy signal, the long signals, the short signals, the entry signals, the exit signals. Okay, the ribbon across the bottom, that is a direct function of MQ Trend, keeping you on the right side of the trade. There's also an alerts function, and there's also an expert's commentary. The other aspects are bullish and bearish explorations. My personal preference, I have two. This Trender Pro 2.0, the surge breakout, and here Momentum Trender Pro 2, bullish surge breakout. This is when we jump from neutral to strongly bullish or neutral to strongly bearish. And this breakout is within the last 5 bars. So we're not isolating, just herky-jerky action. I want to play breakouts. And those are two of my favorite ones. Again, the other aspects are the layouts. The one that I was showing you was the weekly and daily layout in white. Those of you that can see it better, generally my charts are black, but I'd use the white for you today. But you also have one where you have 3 windows. Monthly, weekly, daily, black and white. Okay? So again, those are the colors. Another thing, you can set up that you get alerts. So whenever you saw those arrows with the long entry, arrow with a short exit, whatever, you can get a pop-up that comes up when you get that bar, and it will signal the long entry or short entry. It can do that advising for you. Okay? So basically, if you get an exit signal here, the other, oops, The other aspect is there's expert commentary available to you. I know a lot of you use expert commentary with MetaStock, and we have some a lot of detail there for you. And Momentum Trender Pro highlights, definition of the signals, and it gives you a readout of what the current MQ trend is, all to help you clarify exactly what your charts are telling you. Okay, and again, the explorations, you can play around with them. We include 8, and plus, of course, a very detailed user guide. So those are all included, and in the end, Momentum Trender Pro is a great choice. It's easy to understand. It's intuitive when you get used to the colors of the bars. The signals are clear. Entries, exits, where you trail your stops. MQ Momentum gives you a clear indication of the current state of price momentum and where is it going. The current trend is given to you on a ribbon across the bottom at all times. It creates alerts so you can do a lot of the heavy lifting for you. It works in all markets. Someone asked about Forex earlier, works there. Individual stocks, works on all time frames, whether you're a long-term trader, swing trader, or even day trader. The explorations are great because they can do a lot of the sifting through all the signals for you. It's great for people just starting out and experts that really want to get a firm understanding of trade. It's pretty easy to understand, simple to use, and all the rules are consistently applied. So again, Trender Pro 2.0 is great for our traders. So if you're ready to learn more, I'm going to turn it over to Jeff.
All right. Sorry about that earlier, Dave.
That's okay. No, I appreciate the help. I was struggling a little bit there with Target.
That I promised to ask, so that's why I got a little confused. How do you, John wanted to know, do you have time for just maybe a couple questions real quick?
Sure. Go right ahead, sir.
John wanted to know what your recommendations are for trailing stops.
Trailing stops. It depends a little bit on the security. We have futures traders that use Trender Pro absolutely for absolutely everything that they do. And from what I understand, they trail by 3 or 4 ticks at all time. For individual stocks, it depends on the size of the stock. I tend to trail within a couple of dollars for say a $300 stock.
Bertrand wanted to know if you had any issues with blowing out stops, like in commodities, is what he said basically.
Well, the problem when you mean blowing out stocks, you mean you're in a position and then it has an explosive move?
Correct. Yeah, I believe that's what he means. I just read the question.
Well, the one thing I personally am very careful of is when you're like, let's say it was Moderna and they just got approved for the COVID-19 vaccine. It's not something, because that's a news-driven event as opposed to a technical analysis event. You can't catch that on pretty much any indicator because that's an unknown. But those explorations that I was telling you about, if all of a sudden an individual stock has some good news or maybe even earnings, you could get one of those explorations show up on that bullish surge or bearish surge. And those things could potentially run for a while because you don't normally go from a neutral state to strongly bullish or strongly bearish. So I like those. Those happen much more often, and you're much more likely to get follow through.
One more question. Nitin wanted to know if you wait for the higher time frame to align with options.
It depends. That's a very good question. The majority of the time I do, but it depends if I'm watching for a reversal in the smaller time frame. Because if you think about it, when you use a smaller time frame and a bigger time frame side by side, the smaller time frame can be as if you're zooming in to what's going on inside a bigger time frame. So you actually get an up close snapshot of what's going on. And if you're starting to read divergences and turns on the smaller time frame, that will eventually lead to a change in trend in the higher time frame, if you kind of can see what I mean. But if the bigger time frame is already trending, and then the signal to enter on the smaller time frame concurs with that trend, then basically it's a continuation pattern. So that in a way, that's two different things. But as long as you understand how each time frame is related, you can interpret trend or pro. And the signals are very good in both cases.
Right. Thank you.
Okay. All right,
Appreciate
Jeff.
it. Any final thoughts? 10 seconds.
No, again, Trend or Pro, I would think, and our one of the gentlemen that trade the trading room in the futures room swears by Trend or Pro. It's almost like if you took any other indicator away from him, if you just gave him Momentum Trend or Pro 2.0, I believe he could make money. So what you guys are getting with this my MetaStock add-on is amazing, because you get an integration of a number of very useful readings on the market, and it pretty much serves it up to you. It does all the heavy lifting, all the scanning, gives you all the signals, all the alerts, everything you need to interpret exactly what's going on.
Thank you very much, Dave. Good job today.
Thanks, Jeff. Nice seeing you. Thank you. Thanks, everyone.
All right. Okay. I think Dave did a really good job of actually showing everything, talking a little bit about everything that's included. You know, I love the fact with MetaStock you get the ability to run the scans and the explorations. I love the expert advisor. And I just want to kind of show you, in case you're not familiar with MetaStock, I want to show you what an expert advisor looks like. I know we're running a little bit behind in time, but that's okay. We can make it up a little bit in the, we certainly won't rob Wendy of it. But here's Apple. I think we were looking at Apple a little bit during the presentation. You know, with the color coding, you can scan for any of these entries or any of those scans. Scanning is one of my favorite things in MetaStock. But you also have all of the color coding and the ability to see where the entry signals actually show up on a chart. And what we try and do is we try and document it in at what we call an expert advisor commentary. So, and the way that that works, I'm just going to go ahead and open it up real quick here to show how kind of this looks at a chart. When I open up this commentary, it's going to actually show a signal of the bar that it's actually looking at. So obviously it's going to default to the bar you trade, the furthest to the right bar, right? But it'll give you some updates in terms of what we're looking at right now with Apple, which is just kind of randomly the stock I decided to highlight this with. It says right now we're strongly bullish. The market is currently strongly bullish and indicating that we're likely to move higher. This can indicate that Apple will continue to move higher. Watch for signs that the market may be losing energy and moving back to neutral, in which case we'd start to go green. But it's going to give you that. Right now, the MQ trend is bullish. Anticipate generally rising prices. And if there's anything specific about a particular day, I can highlight that particular day. And right here, we had a bit of a golden bar. And it says right now the market is currently pulling back from a bullish extreme and presenting a golden bar. This indicates a pullback typically after a strong bullish move. Here's what you should look for to happen. And here's how to manage after this golden bar. So all of that is kind of very, very clearly defined in the program. It's one of the things I love about MetaStock is the ability to go in and see on any particular day what the indicators are trying to tell you, because they sit there and explain it to you. So in any case, let me go back into the sides here. This is basically everything that's included in MQ Trender Pro, which is an add-on for MetaStock. You also do have the black template and the white template. I think it's funny. Actually, it's a little bit behind the point, but they actually added the white templates because I said I like white templates. You do have the ability to look at them in either white background or black background. The MQ Trender Pro by Microquant is normally a one-time cost of $1,495. And what we're doing here at the summit, as part of the launch event, we're going to release it for $995 at the summit price. The other thing that we're going to do is if you've bought value charts and if you own the other product that they've released called value charts, I've negotiated a special price to get the Trender Pro as well. So you can actually pick up MQ Trend Pro 2.0 if you're a value charts customer for $4.99. So you can get the package for $9.95, but if you've already bought value charts, you can actually get a much better, a bigger discount of $4.99. We do back all of the products we sell on a one-time purchase with a money-back, 30-day money-back guarantee. It's a kind of risk-reward you should enjoy as a trader. Unfortunately, it doesn't work that way in the market, but when you're buying our software, you do have the confidence of knowing you can get your money back if it doesn't work for you. So we do back it with our money-back guarantee. You can give us a call at 800-882-3040. You can visit us at metastock.com/saleschat. Okay. We are going to be talking about a few different add-ons in MetaStock all day long. MetaStock has been rated #1 in its price category I believe it's 27 years in a row right now. And we basically have a package. If you haven't tried MetaStock, if you haven't tried Zenith, if you want to try it with all of these great add-ons that we're going to be talking about today, normally they'll cost you about $5,000, but we're going to break down a cost where you can get it for $2,545 today. So almost half off, not quite half off, just about. Again, give us a call at 800-882-3040. We'll be spending more time in MetaStock and showing you why it's been rated #1 in its price category for 27 years in a row. But this is a great way to get started with some of our most popular plugin services and add-on services. I do want to say thank you again to Stocks and Commodities for sponsoring today's event. They do a great job. I love Stocks and Commodities. I don't think I've gotten it. They get delivered, unfortunately, to my office, so I have a few issues I haven't read. But it's such a great magazine, and we're going to give you a free issue. What you need to do to get your free issue is go to metastock.com/traders-summit and just fill out the registration form. If you're watching on YouTube, it'll say, hey, get my free magazine. There's also free bonuses that we're including for anybody that's interested in additional things that some of our presenters are offering today. So if you haven't already, go up to metastock.com/traders-summit, sign up for your free magazine and anything else that you're interested in while you're up there. Okay. And then let's get back to schedule. We're running about 7 minutes late. The next presenter we have is a lady by the name of Wendy Kirkland. I absolutely love Wendy. Hey, Wendy.
Hey.
How are you?
I'm doing great. Thank you. What a great group you have here today.
Yeah. I said this a little bit earlier, but I think we have one of the most handsome groups of presenters, and that's probably why we have better than normal attendance. So, in any case, I just turned on the screen share to you.
Okay.
Are you?
I will get my program up here.
I'll let you know when we can see it.
Okay.
Hey, Jeff.
It looks like it's up as far as I'm concerned, so we'll.
I'm not seeing it on my end. Let me try it again. Let's just do this.
Okay.
Okay. Now it should have popped up a message.
Oh, I have a show my screen tab.
That's what
here.
we're looking for. Okay, go ahead and do that. Perfect. I'm gonna turn off my camera. Okay. All right, I can see your screen. It looks great. I can hear you well. I'm going to go ahead and let you take over.
All right. Well, thank you very much. Welcome, everyone. I'm so glad to see you here. That today we are going to discuss the MetaStock program that I have designed and work with through them. It pinpoints market trades. So to know a little bit about me, I've been trading full-time for about 14 years. I administer a few advisories, and I've written a number of strategy books. And one of my favorite things is the MetaStock program. So we're going to get right into that. That the elements of successful trading, whether it be stocks or options or futures or Forex, is to, first of all, pinpoint equities that are going to have consistent big moves. and then zero in on the equities that are either overbought or oversold. Find equities that have formed a top or a bottom and have reversed and are starting a new trend. And then you enter trades that have given a confirmed confirmation signal. And that is what the MetaStock program does for you. So for those of you who maybe are involved in Forex or in just purchasing stock, and you maybe don't really understand or know what an option is, or if trading as a whole is totally new to you, let me explain the two types of options. First, there's call options, which gives you, the buyer, the right to require the grantor to sell the equity to you at an agreed upon price at an agreed upon time, no matter how high the price is when you decide to sell your option. They must sell it to you at the agreed upon price, and you in turn can sell it for the higher price and keep the difference. The buy and sell happens behind the screens for you when you close the trade. Now, a put works a little differently. It gives you, the buyer, the right to require the grantor to buy the equity from you at the agreed upon price, at the agreed upon time, no matter how low the price is when you decide to sell your option. They must buy it from you at that agreed upon price, and you in turn buy it at the lower price and then keep the difference. The sell and the buy again happens behind the scenes for you when you close the trade. Now, the other day I was thinking about this, and I was thinking about being shut in at home and so on. And I really realized how fortunate I am as an option trader. I am just an everyday, regular person. I'm a mom and a grandmother, and at this point, a great grandmother. But I realized that option trading is a work opportunity that is 100% about me. And in this case, it would be 100% about you. We are in total control. And this is an unusual setup or work opportunity, if you want to call it that, that has no restrictions in a sense. Like, there's no college degree that is needed. Yes, you need to study a little bit and understand what options are, but it's open to anyone who wants or has the desire to learn it without any prior education. You need a laptop or a computer, but there's no other special equipment. Location isn't an issue. It doesn't matter where you live or what the population is or what industries are in your town. It just doesn't matter. Age doesn't come into play. There is no race or gender or ethnicity or religious bias. None of that is important. There's no special physical conditions, height or weight or fitness or infirmities or disabilities. You can trade from anywhere. I have traded when I have been on vacation, where I've just decided to close trades. You can trade from anywhere, a cafe, from work, from home, any place that has the internet access. There's no travel expense. There's no vehicle needed. There's no special wardrobe. There's no unique office setup or style or work environment that you have to have. There's no boss. There's no employment hierarchy, no set work schedule. You can determine what works best for you. There's no minimum wage or salary cap. And you can't get fired, and nobody can let you go for any reason. I cannot think of another business or industry that comes anywhere near that. And so it makes me feel really, really special and excited to be able to share that type of work opportunity with other people. So here's an example of option pricing. If you purchase options on Bristol Myers Squibb BMY, the pharmacy company, and its stock is priced at $62. And you're interested in contracts for the 65 strike because you feel that price is ready to move up, and you pay $1.25 per share for the 100-share contract that expires in 2 months. That would be then $125 per contract. And let's say you buy 4 contracts for $500. The stock price goes up to $67, and your premium is now $4.75 per share when you decide to sell. The transaction happens behind the scenes at the exchange. You paid $125 and you sell for $475, which you keep the $350 difference. And you have 400 shares. And so you realize a $1,400 gain on your $500 investment. That is 280%. That is the leverage that option trading provides. So the starting point is that we want to start with equities that are going to have big moves. And to do that, we are going to have the ability to add the average true range, or ATR, onto a chart. And this is a daily chart. We want to see how much it moves per day. And we are going to be looking for equities that move 1.5% to say 2% per day. And so that we can look at, by having the ATR, the average true range indicator on here, I can look and just kind of scroll across and see that its ATR is about $6.51. So I look over here at the price, and it's about 101. So I can quick do the math in my head and figure that 2% of 101 is 202. And yet the ATR is $6.51. That is almost 3 times the 2%. So it's somewhere in the range between 5 and 6% that it moves every single day. And the reason that we're looking for those that are having big moves is if you're buying a, say, 105 strike, if it moves that 5%, say, in one day, it's going to pop up from one strike to the next strike and put you deeper in the money on your option every single day. So the important part from here then is to get the direction right. You are going to focus on stocks that have big moves and create a list, which is our next slide, suggesting that this one is Snap, that again can look right here and see that its ATR is just under $1, and its strike price is somewhere around $20, and so 40 cents is its 2% goal of 2% gain, and it goes up $1. So again, this is a great candidate that is going to be able to pop up from one strike to another strike every single day. So the next indicator that we're going to add is the Kirkland Commodity Channel Index, CCI. There is a natural swing to the market that it goes from oversold to overbought and back down again. And so we are going to be looking for stocks that have had big moves in one direction or another, and then are going to be ready to swing from, say, being oversold back up to overbought. And then if we're looking for puts, we would be going from overbought back to oversold. So we are going to add the Channel Commodity Index to our chart setup. From there, we go and we add the Kirkland Percentage Price Oscillator, the PPO. And the PPO will have crosses that are very recognizable. When the red line here crosses up over the blue line, we are heading in a bullish direction. When it crosses down like over here, then we are heading in for a bearish decline. And this is again going to help us pinpoint the trend. We are going to go from deeply overbought or oversold, and then we're going to look for that shift in direction. We're going to look for a signal that there's actually a change. We're not going to guess about it. We want to be able to see the trend change and be able to pick that out. Next, we're going to add the Kirkland oscillator, which confirms our entry. And this is got some special lines that are drawn across the middle. I call that the touch zone. And that is actually going to give us a signal that it is time to actually enter. So now we're going from deeply overbought or oversold. We're going to have a PPO cross that is telling us that the trend direction has changed. And then we're actually getting through the Kirkland oscillator the entry time that to actually get into the trade. So we'll follow this a little bit further now. This is kind of showing us a chart set up right from the beginning, and we're kind of keeping it simple, that we have an area here where we can see that we're extremely overbought. Then look how it was kind of in a range, just right there between the blue lines, kind of stuck there. And you can see with the candlesticks, it just went flat for weeks and weeks and weeks, and then it finally popped out. We can look at the PPO indicator where it crossed up, suggesting that a new trend was starting, but it still had some ups and downs and going flat and pull back here. And when we look at the Kirkland oscillator, it actually tells us where we could enter. And then later it comes down here and actually gives us an opportunity for a second entry, so that if we missed the first go around and we happen to have this come up on a scan, it would have given us a second entry. So this is Boeing, and we are going to be looking to see how this actually kind of played out. That again, we had a setup here where we're oversold. We had the PPO cross, but you can look and see there is no cross up and through the touch zone. It's stuck down here flat and hasn't made it up. Even though the week before you had the PPO cross and we had been oversold for a good while, you still do not have that entry signal. So here's the actual entry, is right in here about the 18th, where we have the oscillator cross up and over and into the touch zone. And that then it's not too long before price really starts heading up from there. So this kind of follows through the trade. I know that I saw this earlier. This little exit circle is not really in the right place. It should be up a couple bits higher, but this again shows what happened, that overbought has been reached and is now starting to head back down. We have the PPO that is at an extreme high, and we have the Kirkland oscillator that is kind of reached a peak and starting to now head down. So I've got the results, I believe, for this trade so that you can actually see how this would have worked out. Again, a 2.5% to 4% equity move often equates to a double in a weekly option premium. 8% to 10% move equates to a double in a monthly options premium. And so this is why you want those trades that have the high ATR. So we were looking at the Boeing chart, and had you purchased calls after the open on May 22nd, when the Kirkland oscillator crossed through the touch zone for $9.85 a share, or $985 per contract for the June 138 strike call, and let's say we just bought one contract for a total investment of $985, and we sell after the open on June 10th. The call contract was worth, at that point, $76.50 per share, or for the 100-share contract, it would have been $7,650. And that is a gain of $6,665, or 677% gain. The price when we entered the trade was $132, and when we sold it, it was $203. So that is a $71 change in price. That's 54% increase in the stock's price over that trading period, while the option increased 677%. That's like crazy different. So for an investment of $985, we controlled $13,200 worth of stock. And had you placed that same amount or that same investment, which is unlikely, but had you done that, you could have purchased 13 contracts and earned $86,000. That is the leverage that you find in option trading, that you can enter trades for a much lower amount than buying the same amount of stock, and yet gain based on the same dollar price move, and it has greater leverage. So let's look at another trade here. That this is Visa, and so we can see that it had been oversold for a number of days from March 11th down to like the 19th, and then it started moving up into beyond minus 100 and started heading up. We had a bullish PPO cross around the March 25th, but the Kirkland oscillator still has not gone and crossed up through those touch points. So let's see what happened. So again, CCI just stayed here in the middle. PPO continued to cross. Still no cross of the Kirkland oscillator. It just is hanging out down here. And you can see up here the candles had just kind of gone flat. No price movement, even though those other indicators were suggesting that it was ready to get going. So here finally now we have the touch on the 6th of the Kirkland oscillator up through the touch zones, and the PPO continues to be up, and it has reached kind of a shallow area of being overbought. I feel like I've skipped something. Did I go the wrong way? Let me. Okay, so here we are. I think I did go backwards, or I didn't move. So this showed our entry here on the 6th. Kirkland oscillator continued up, stayed up all the way down here to June 8th. Price continued to rise through that period, stayed up here in overbought territory, and then our exit here as the PPO crossing down and the Kirkland oscillator is heading down. And so this is our example as far as Visa's price, and had we purchased the calls after we saw the indicator move up. And it says we purchased on open on the 8th, not on the 6th, but on the 8th, after it had fully moved through the zone. And we did that for $13.95 a share, or $1,300 per contract for the June 175 strike call. And let's say we bought one contract for a total investment of $1,395, and we sell at the end of the day on June 10th. The contracts were worth $25.25, or $2,525 for the total contract, and that is a gain of $1,130, or 81%. Now, Visa's price when we entered the trade was $170, and when we sold it, it was $200 approximately. So that is a $30 change in price, which is 18% increase in the stock's price. That's nice over that trading period. And yet the option increased 81%. Now you can do that same big kind of comparison. Not likely that we would ever invest this much in one option trade. But had you invested the total amount, $17,000 worth that the stock was worth for those 100 shares, and had you placed that into options, you could have purchased 12 contracts and earned $13,000. Again, this illustrates the leverage of options. Now, I read an article the other day that I was surprised to read, and I was quite impressed. It was actually an article that was written by Goldman Sachs Study Group, and it indicated that personal investors, people like you and me, that since the big decline, the drop in stock from February, from that point, personal investors' accounts surged 61%, while mutual funds grew by only 45%. And the S&P at the time the article was written had only risen 36%. Now, that was a surprise to me. You know, I have been trading and I've been very, very active and have done well. But to sit and think that personal traders have outdone mutual funds was, I don't know, it was eye-opening. It was a bit of a shocker. And, you know, investors and those who are interested in investment have had extra time on their hands. We've had time to study, time to practice, time to invest. And I realized that it doesn't really take a doctorate degree to know that during this time that we were all shut in and couldn't go out, that airlines were going to suffer, cruise ships were not going to do so well, casinos and theme parks were just not going to have attendance and were going to suffer during the shutdown. And then other stocks like computer technologies, as an example, take Zoom. We are using a Zoom-like application today to visit with each other. I've had Zoom conferences with family members. I've attended lots of Zoom meetings, and those stocks and shopping online like Amazon and so on are going to benefit. So it doesn't take a genius to be able to figure out which stocks or sectors and so on are going to benefit and which we're going to suffer. And then you start looking at the indicators of the overbought, oversold trend changes, and you capitalize on those things. So, you know, here I was saying I was kind of surprised to hear that we personal traders had done so well by comparison, but at the same time, it's not a shock. So let's look at a put trade. And a put is you're getting into a trade when you feel or see that the equities are going to pull back. And so we are doing the reverse. We are going from, instead of oversold, we are going from overbought, that it had a nice climb up and then looks like it's getting ready to pull back. We have a Kirkland PPO cross down, and we also have the Kirkland oscillator drop down through the touch zone. So what happened? It continued to drop. We see the circled area here is where we entered, kind of went flat a little bit for a few days and then dropped down, got down here to being oversold. That's how stocks naturally swing from overbought to oversold and back again. PPO started to cross up. And once we had the area here of the Kirkland oscillator, made this little scoop and started heading up, that was our exit signal. And we closed and got out of the trade. So that was a nice drop in price. And so while the price of the stock is dropping, our options are gaining value. So let's look and see how this worked out. This was Micron that we were looking at. You purchase puts after the open on the 24th when the Kirkland oscillator crossed through the touch zone for $4.10 a share, or $410 per contract for the April 55 strike put. And let's say we bought 2 contracts for a total of $810, and we sell at the end of the day on March 18th. Those put contracts are now worth $21.45 or $2,145 per contract, and we had 2 of them. And so that is a profit of $34.50 for the 2 contracts, or a 423% gain. That is a awesome results in a stock that sat and lost value. So it's wonderful to be able to trade the market up and down. You just follow the signals of what it's saying that it's going to do. And the MetaStock program that is set up gives us that information in a very, very easy way to be able to interpret and be able to see what's happening. So we're zeroing in stocks to trade stocks that have consistent big moves. We are looking for overbought or oversold, meaning that they have a way to go to recover from these levels. They've put in a bottom and are reversing and beginning a new trend. And then we have our confirmed entry signal, which cuts out many of the false starts. We saw several of the charts earlier where if we'd been just following the PPO crosses and where it looked like it was going from overbought to oversold, having crossed up on the CCI, we maybe would have been in the trade for 2 weeks or more, where it just went flat, maybe pulled out, might have got us out on a stop, and then we'd have to have considered getting in again later at some other point. So it kind of protects you from those shakeouts and the trades actually hitting the stops. I don't know what time it is. I'm gonna grab my phone here real quick. Sorry, I didn't have it sitting right in front of me and I wasn't aware of what time or if I was actually running out of time. Jeff is going to step in here at the end and help out to explain a little more about the MetaStock program, but let me show you a couple more slides here. So MetaStock has simplified the whole chart setup, and not only is the chart very easy to read, but it also provides a scan so that you can see over here on the left-hand side, it is showing you what the ATR is, that the PPO is bullish, but the Kirkland oscillator is still bearish. So you do not have that entry signal yet. And they have made it very, very clear on the bottom of the chart here with the ribbon of bullish and bearish, the green and the red, so that if you have a list of charts that you're kind of following and you can see that they're beginning to set up, this gives you a very, very clear picture. Not ready yet, not ready yet. Ooh, this one is getting very, very close. And you wait for that cross up through that Kirkland oscillator going into the touch zone, and you know exactly where your entry is, and then later where your exits are. And again, off on the right hand side is some of the directions and the guidelines or criteria that are suggested for your trades. This is another view of the charts. And again, you can see where on February 2nd, it popped up through the Kirkland oscillator touch zone there, went on and then crossed back down and became bearish later in the month. So it makes it very, very clear to be able to see the entries, and then when things are changing and you have the peaks that are suggesting that it's time to exit. So this is a more intricate version of the chart, and you actually have the choice of what chart setup you are interested in and what appeals to you. Some folks are like to see all the indicators. They want to be able to see the PPO and the CCI and all of that. And so you can set this chart up and have the indicators giving you all of the information, or you can do the simpler version, which we just looked at, that kind of cuts out all the details. Just give me the facts. And so here I'm sorry, I just flipped that ahead of myself here. Again, can sit and see that at the first of the year, popped up here, gave a bullish signal. This would have been a buy entry. You can see the Kirkland oscillator popping up very, very clear out of the top of that touch zone. Rose for months. Then we had another one here. You can see that it had crossed down through the zone, crossed right back up again. So there's not a whole lot of, what am I trying to say? Like false crosses, that the Kirkland oscillator stayed up above the touch zone here all the way from February through August. then it crossed back up again in September and stayed up through November and then back down again. So that it's set up for it not to have lots of irrelevant swings, so that it knocks you out of trades or causes you to, okay, you know, what's happening now? What do I need to do? That you have a set trade plan, and you have the guides that you're going to be following, and you have the chart giving you pretty darn clear indicators as to when to enter and when to exit and so on. All right. This shows that you can actually do a scan, that you can set the parameters up of what you're looking for, the high ATR stocks. Perhaps you're looking for either overbought or oversold, and it gives you a list of stocks to be able to look at and to evaluate further from there. Jeff, can you kind of step in here and add a little more as far as insight as to the MetaStock program?
Oh, can I? Can you hear me okay?
That's your thing.
Right here. Do you have time for a question or two?
I do. Yes, indeed.
All right. Oh, let's not try and mess this up a little bit. I'm getting all over the place trying to move my microphone around. Sorry, just organizing myself again. Richie wants to know about stops, and particularly how you decide to get out of your trades when you're in them. Can you talk a little bit to that?
Sure. I sort of feel like stops are a personal choice, because my risk tolerance might not be what everyone's risk tolerance is. So I usually have a line in the sand stop in mind, and that might be a PPO cross. But others may say, well, I just never want to lose more than 30% or 25%, and that is where they set the stop. So I feel like it's kind of a personal choice.
Okay.
That you know, and everybody's risk tolerance is a little bit different, but you should know what yours is. You know, that you don't want to sit and have its total value. I'm sorry?
You shouldn't make it up on the fly while you go?
No.
Okay, all right. Dennis wants to know how you use ATR for put trades, or how that kind of, if there's a difference between the way you use ATR when you're doing a put trade as opposed to a call trade.
The ATR is going to tell you what the average move is per day, and that actually is up or down. So that it is, the ATR does not just focus stocks or point to stocks that are going to go up. It is their average move, whether it be up or down, so that the same candidates that are qualifying for a call trade are the same candidates that would qualify for a put trade.
Let's see. Nitin wants to know typically what expiration dates are you looking at? Are you going out a month? Are you going out a couple months? What type of expirations are you looking for typically?
Okay, there are some guidelines that are in the kind of the strategy guidelines that were over there on the right-hand side that are outlined.
I'll actually show this. It goes into good detail on them. So let me show my screen real quick.
Okay, that would be awesome. That would be awesome.
I'm just looking at Apple right here. We've got a buy that came in back last year. But if you click on that buy arrow, again, one of the things I like is it'll tell you there's currently long opportunity. And if you're interested in taking advantage of this opportunity, you should look at either buying the stock, or you consider it intermediate options about 2 to 3 months before expiration when you're looking at a daily chart, which is what we're doing here. If you're getting this on a 60-minute chart, you'd be looking at 2 months out, or 2 to 3 weeks out on a 30-minute charts, or 1 to 2 weeks out on a 15 to 10 minutes. So it's really, really specific about like what expiration you should be looking at. It's very specific about what delta. In this case, you're looking for 40 plus. And if you're conservative, you should be looking at 60 plus. So it does a really, really good job. It also, to answer the question we had about stops, it'll also suggest a stop for you. So your initial stop right here is saying that you should be looking at 206.55 or 206.65. Sorry, I read that number wrong. And here's the other things about exits that it talks about. It reaches an extreme high, flattens out, and begins to turn down. My daughter is right here. I just looked down and she's right here with a kitty. Good morning, sweetie. When the CCI turns negative, give me 10 minutes, honey, or 2 weeks before the options expiration date. So it's really, really specific in terms of how it comes out. Harry wanted to know, one last question for you, if you don't mind, about if you ever use spreads.
Personally, I do not use spreads. It just is not anything that I've really gotten into. I don't really have anything against it, or a lot of people do it and like that offsetting and so on. It's just not my thing. And I just trade straight calls, straight puts. That's what I focus on. That's my area that I do really well in, and I just stay focused.
Well, I lied. One more question for you. Do you ever consider earnings reports dates and deciding what expiration dates to use?
Earnings, I try to avoid earnings dates unless it's like in the middle of my trade. That if I'm trading daily and earnings is a month away, I'm not going to avoid that trade because of that time. But if earnings is it's Wednesday and earnings is Friday, I am not going to get into that trade until I see how the earnings play out and maybe get in then on Monday. Okay. So I avoid them if they're close, and if they're in the middle, then I just figure I'm going to make money before it happens. So
that's great. I think we hit most of the questions. I apologize if I missed your question. Wendy, great job today. I appreciate your coming in and spending about an hour with us. I'm going to go in and talk a little bit about scanning. But before I do you have any final words for us?
I don't think so. I guess I'm just really, really excited about option trading. I'm excited about the opportunities that it gives everyday people to be able to be in self-control of their financial future. It just is very, very exciting to me. And the fact that folks have maybe more time in their hands and they're at home and they have availability to their computer, to me is opening up an opportunity maybe that wasn't there before. So instead of going from surviving, I see this as thriving. And I'm just really excited about the opportunity for just the everyday person to be more in control of their future.
All right. Thank you, Wendy. Appreciate your time. And I'm going to, okay, let's see. Let me go ahead and kind of show you a little bit more here. Webb, you're asking how do you determine the price for the call you buy or the put that you buy? And it actually tells you right here. Option traders will typically look at call options that are at the money or out of the money. You're looking for a delta of 40. If you want to be really conservative, you look at a delta of about 60 or 1 to 2 strikes in the money. So there you go. Carson wants to know, how does the scanning work? How often can we get recommendations and that kind of stuff? And I do want to show that. So let me kind of go into the Power Console real quick. I've actually got this all ready to go. And typically, we'll be talking a little bit more about MetaStock, but right here we've got what we call our Explorer. It's a market scan. So if I want to be able to go in here and I want to be able to get signals for the Wendy Kirkland methodology, there's a couple of scans that are included. One of them is called the Wendy Kirkland AST pre-filter, and that'll go through and filter out all the stocks based on kind of the appropriate ATR and some of the other recommendations that Wendy has. If I want to find signals, all I have to do is I can just click on this Wendy Kirkland automatic swing trader. I can come down here, and I'm just going to do a quick scan of all the optionables. So we've got about 4,300 optionables right here in the database. I've got it selected. This is a list that's on my hard drive. I'm going to go ahead and have it start the exploration. And what it's going to do is it's going to go through all 4,300 of those stocks. It takes a second to fire up, but you'll notice that it goes really, really quickly when it actually starts going. What it's going to do is it's going to come back with a complete list of all of the stocks that either have an opportunity to buy or an opportunity to sell. And it's just that easy. One of the things I love about MetaStock and using technology to help you trade is not only do we get the signals, in this case from Wendy, a very good market expert, we get the advice on how to actually go in and implement it. We also have the ability to go in, and you're not going to go look at 4,300 stocks, right? It's just not something you're going to do. In this particular case, we're not. We're going to reject about 98% of those stocks. So we're going to go look at the ones that just have an opportunity and choose our favorite from there. So that's how it works. Technology has just made things so much easier to trade. So with Wendy Kirkland, you I do like, let me go ahead and kind of go back in here, collect my thoughts for a second. I do like the fact that the approach that she takes, number one, she starts with ATR so she can find the stocks that have the biggest potential to move. Then she looks at the stocks that are at a turning point with her PPO, and then notifies you if the trend has begun with her oscillator, and that helps protect it from whipsaws. Very, very clean system. She did a really good job with it. I appreciate the work that she did. The Kirkland automated swing trader is designed to work with MetaStock. If you don't have MetaStock, MetaStock's been rated #1 in this price category for 27 years in a row. I lost track. So, and we will include a trial of MetaStock if you want to try Kirkland's product out today. Normally it's $4.99 as a one-time cost, $399 here at the summit. It's not going to take you a lot of trades to actually pay for that. It includes the MetaStock, will include, like I said, a MetaStock subscription. You'll get the data for the region of the choice that you're interested in. You'll get the white glove installation. You're going to get some in-depth training as well. This I should have taken off of here. And you get an Unleash the Power of MetaStock. So it's only $399 to get you started. You can give us a call at, honey, you can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. It is also part of the Summit Traders Action Pack today, where you can get MetaStock real time, the Zenith data, all of the add-ons. Normally everything would be $4,989. You can get them at a discount of $2,545. That includes 3 months of MetaStock, 3 months of the real-time version, 3 months of the real-time Zenith data. You'll get MQ Trender Pro, Wendy Kirkland's automatic swing trader, the Barry Burns top-down trading kit, Vince Vora's Veracity, which Vince is next. He's going to talk to us about that. The 3 months of learnmetastock.com, which will help you learn everything, unleash the power of MetaStock, and 2 years of stocks. There's a lot included there. 2 years of Stocks and Commodities magazine. And somebody will help you install everything, make sure it's running. That's what we call our white glove service here. So normally that's $4,989. Today it's $2,545. You can give us a call at 800-882-3040. You can also chat live with us at metastock.com/saleschat. So we're doing great on time. I'm just looking at this. Hey, honey, I'm going to ask you to leave the room for a second. I'll come talk to you in a minute. All right, very good. We do have a couple questions coming in here. If I want to get Wendy's option, what would be the cost? The cost for that would be just $399, Richie. Thank you for asking, too. Thanks for your interest. So anyway, give us a call, 882-3040, or you can chat with us at metastock.com/saleschat. All right. I do want to say thank you to Stocks and Commodities Magazine real quick. They've sponsored the event. They help us advertise it. They're a great publication. The magazine about technical analysis since 1982. I love getting them. You can get a free issue if you don't have Stocks and Commodities. Go to metastock.com/traders-summit, fill out the registration form to register for today's session. And while you're at it, you can go in and opt in for a bunch of bonuses as well from some of the speakers and some of the presenters that we have today. So there you go. All right. Our next presenter, or our next speaker, is Vince Vora. Vince has been working with us for a number of years now. I love Vince's style. He has a very, very down-to-earth style of presenting. He's probably one of my favorite presenters. I just kind of love how clear he is about everything. And what he's going to be talking about today is some of the methodologies that are very, very popular among even my sales staff. And so with that being said, let's go ahead and bring you on here. Vince, how are you doing today?
Good morning, Jeff. I'm doing well. How are you?
I'm doing great. I'm doing really good. I've had if you didn't see, I have a little bit of a visitor, a helper in the office.
I did. I was hoping you would keep them around.
Yeah. No, she's
so cute.
You might have even glimpsed the new kitty that she's absolutely fallen in love with.
I'm trying to. Oh, there I am. Can you see me now?
I can see you. Yeah, I can see your screen. I can hear you well. I did a great introduction for you.
As always.
All right. I'm going to get out of the way, though.
Okay, excellent. Well, thanks again to you and everyone else at MetaStock for having me on. I really appreciate it. All right. Good morning, everybody. Thanks for being with us. Welcome. It's a great Saturday morning, and I'm here and glad to be speaking with you today, especially considering the market environment that we're in right now. It's we're at a very interesting point, I think, in the markets, one where we could see a big move one way or the other, and I'll go through more of that as we go through the presentation. But today I really want to talk to you about Veracity, which is my baby. Before we get to that, I do have to remind you that trading can be risky, so please don't trade with your money until you're completely comfortable with the system you are using. As Jeffrey said, I'm Vince Vora, I'm the head trader here at Trading Winds. I've been in this business for well over 30 years now. Throughout, I've put together several different strategies and trading systems, but Veracity is really the one I'm most proud of. Over the last more like 7 years now, I've really been focused on coaching individuals and groups, and it's been a lot of fun. I've really enjoyed it, and I plan to continue doing so. But in today's presentation, what I'd like to do is start with my money management rules. It's one quick slide. There's 5 different rules. One thing I can tell you about this is if you follow these 5 rules, you will never take another big loss again. Hopefully you haven't yet, but reality is most people do when they start trading. I was one of them very early on. I took a very, very sizable loss, and that's what I believe made me the trader that I am today. Because of that loss, I absolutely hate risk. I do everything to avoid it. And what you're going to see today was designed around minimizing risk without capping the upside. It took many years to come together, but with the help of MetaStock a few years ago, we were able to program that, and we're here to share it with you today. So I'll start with my money management rules. We'll talk about the components that make up Veracity. This was my search for the Holy Grail. We all know there is no perfect system, but this came about throughout my search. Today, I plan to show you how it works and why it works, but more importantly, how it can work for you. And of course, along the way, please ask questions. Jeffrey will be keeping an eye on the chat. I'll do the same. Whether we can get to them throughout the presentation or not, I'll make sure that at the end, we will cover as many as we can. Okay, so let's get started with the money management system. or rules, I should say. The first one, I say trade with a positive mindset, but what I really mean is a clear mind. In other words, throughout the last many years that I've been coaching students, one common aspect is that when they're not in the right frame of mind, that's when they tend to make mistakes. So if you're not feeling quite well that day, if you're a little under the weather, whatever it may be, distracted, that's when you make mistakes. So turn off the distractions. What I do is I may keep CNBC on in the background, but without volume. So just in case some major headline pops up, I'll see it, but otherwise I mute it and just keep an eye on the chart. So please, before you sit down, make sure you turn off distractions and you're alert and focused on what you're doing. Now, most people, some other very common challenges that people have is that they get scared out of trades early, or they have trouble pulling the trigger. Usually that has everything to do with the amount that they're putting in a trade. So one thing I would highly recommend is that you trade with an amount that feels insignificant to you. That dollar amount doesn't actually matter. It'll vary widely from one person to the next. For some of you, it'll be a few $100s. For others, it'll be several thousand. The point is, it has to feel completely insignificant to you. I'll give you an example. If I asked you to put $50 into a trade today, would you really lose sleep over it? Probably not. But if I asked you to put 50,000 in a trade, I'm sure you'd treat it much differently. So in other words, when you have too much at stake, your emotions come into play. That's when you make mistakes. So trade with an amount that feels insignificant to you. As you grow your account, the amount you put in a trade will get higher and higher as you go through, but it'll still feel insignificant as that account grows. Okay, so one of the things I do to reduce risk is I make sure I never place more than 5% in any one trade. 5% of my account balance in any one trade. And really, that's just the starting point, or it should be for you. What you should really do is work your way down to 1%. Okay. So you start with 5. As your account grows, you go to 4.5 to 4 to 3 to 2. If you can get to the point where you're putting 1% of your account balance in any trade and it's still a sizable amount, that's when you know you've made it as a trader. And so that's what I really want you to focus on. Now, there are things that are always going to be out of your control. There are going to be black swan events, the most memorable, no matter how horrible it was 9/11, for example. No one could predict it was going to happen. We didn't know when. There was no heads up. It just out of the blue happened. And when something like that happens, that's when most people take a sizable loss. So one of the things we do to protect ourselves is to keep half of our account balance in reserve or in cash. Okay. So really at any given point, you're only playing with half your balance and you're only putting 1 to 5% of your balance in any one trade. So that way, even if a black swan event were to happen and you take a loss, it'll be minimal. Okay. And with the strategy I'm about to share with you, it won't take very long for you to make it back. Okay. The other thing is you want to spread your trades out. Okay. How many times have we seen a strong day one way or the other? We'll see the Dow up 500 points or 700 points. And if you're looking for trades after market close and you run a scan, you're going to get hundreds of long setups on a day like that, right? But the very next day, we may see a pullback right away in the market. So if you jump in and put in 7, 8, 9 trades at a time in one direction, and then the market pulls back the next day, you find yourself in a huge hole. And that's what we're trying to avoid. So regardless of the type of day it is, or how many results you get in your scan, pick 1 or 2 of the highest probability setups you have and only go with that. Okay, regardless of the time frame, even if you're trading on a 5-minute and so on, you want to trade 1 or 2 trades at a time maximum. All right, and so spread them out. I guarantee you, if you follow these 5 simple rules, Yes, you'll take losses. Losses are part of this business, but they will be small. And if you're using and following the rules of veracity, you'll see that, or I should say, one thing you should experience is that not only you'll have more winners than losers, but your winners are generally much bigger than your losers. That's the whole point of veracity. A couple of other golden rules that we share, and this is more for those of you who are just starting out. What I encourage you to do at the beginning is to take profits when you have them. The reason being, A, that's a quick way to grow your account, taking profits when you have them, even if they're small profits. It'll help you build that account. And more importantly, it'll not only give you confidence in the system you're using, but in yourself as a trader, which is super important, especially at the beginning. Okay. So please, when you have profits, take them early. What you'll notice is that even if you take small profits with veracity, you should still do quite well because we limit our risk extensively. But if there's one thing alone that you're going to take away from this presentation today, it's this point number 2. This is not about you. The market is never about you, and you know, it's all about what it comes down to. Truly, is execution. If you can follow the rules and do so consistently, you'll do well. When you bring in your emotions and you don't follow the rules, that's when things go off the rails. So this is not about whether you're right or wrong. That's important. Okay. What matters is how much money you make when you're right versus how much money you lose when you're wrong. In other words, if you follow the rules, your losses should be small and your winners should not be capped. And so I'll show you that as we go through it. Let's talk about veracity now and the components that make up veracity. There are a number of oscillators and indicators in here that when combined and when lined up appropriately, that's when we get our trade setups. Now I'll show you that on the charts in just a second, but through years and years of back testing and forward testing, by forward testing, I do mean trading it with real money, we know how consistent this is now and how well it works. It took a number of years to come together, but now it's been several years that we've been trading with it through all different types of markets, and it's been extremely consistent. So what is it designed to do? Well, unlike some of our other systems that are mainly designed around risk, this one is designed to catch the bigger moves. Now, the beauty of it is that we still keep our losses small. That really was the portion that took so long to come together. How do we keep our risk minimal without capping our upside? We figured that out, and I'll share that with you. So while we maximize safety, we don't cap the gains, and that's the most important part. So what will it do for you? Well, not only will it help you identify some great short-term and swing trading opportunities, but if you're managing a retirement account, a longer-term account, or you're more of an investor, this will help you identify some massive trades for the long term. I'll show you on the weekly and monthly timeframes just the size of the moves that veracity will capture. You'll spend very little time getting in and out of trades, but when you're in the right trades, those really pay off. And I'll show you that in a second. The other thing it can do is predict the major market move. So if you use veracity on an index like the Dow, like the S&P 500, for example, it'll call the turning points more often than not. And so you'll know when your bull market is ending and a bear is starting, or vice versa. Okay, so let's get to the chart and let's have a look at veracity. Now, first of all, let me explain what you're seeing on here. There are these little diamonds, both green and red throughout. There are the arrows and the exit signals here. Now, the diamonds are there to identify what we call a setup bar. In other words, it's giving you a heads up. It's not telling you to jump in the trade yet. It's saying, hey, heads up, there may be a trade coming. And then if it is followed up by an arrow, that means it's time to get into the trade. Now, if it's green, obviously we're trading to the long side. If it's red, we're trading to the downside. The other thing you'll notice, which is a great feature that Jeff and his staff put together here, is that when it does call a trade, and gets us in. When it finally triggers, every bar after that is colored in the direction of the move. So in other words, if it triggers long, every bar is colored green, and that was intentional and there to help you remain disciplined. In other words, a lot of times, we get into a trade, we see a couple of nice green bars go our way, and then all of a sudden we see a red bar or two, slightly pulling back. That's when you start to second guess yourself and start to wonder, hey, am I in the right trade or not? Am I going to give back my profits? And a lot of people get scared out and sell too early. That's what we're trying to avoid here. So by painting the bars all green until we get an exit signal, that's what matters. And that's what is there to help keep you disciplined. Okay. So the other thing I want to mention is that you will see numerous signals and setups. The intent is not for you to take every single one. With the indicator, you'll get 2 training classes that come with it, where we'll teach you exactly which ones you should be focused on and which ones you should not. Now, I'll make it simple for you and break it down so that in this presentation, as we flip through charts, you'll quickly be able to identify the ones that you can. But then in the training program, we go through much more detail. Okay, but basically, you'll see a line on here. And this blue line is the 20-period simple moving average. Let me explain why we use that with Veracity. Basically, what we're trying to do with Veracity is follow the trend and make sure that momentum is on our side. Now, the indicators and oscillators behind Veracity, when they line up, we know we have a strong trend in place. The momentum, though, is something else. And you can measure it one of 2 ways. You can measure it by the bars themselves, by drawing a line across the bars, or you can follow the 20, which basically draws that line in for you. And the advantage there is that when you get a sharp pullback like we did here, right? Well, if you're following just the bars, yes, we have a sharp downturn here, but then if you follow, look at that slope on that line going upward, you may read that as upward momentum, when in fact, it's nothing more than just a temporary retracement before a continuation of that move. And that's where that 20-period moving average comes in. If you have that dramatic slope, sloping downward here, and we get that retracement, but the 20 does not move. Basically, it remains, it maintains that slope. You know that more often than not, this is just going to be a temporary retracement before a continuation of that move. Okay, so that's why it is so effective, and that's why we use it and pair it with our indicators. So that's all I want you to look at is the 20-period simple moving average and the slope of it. Now, generally, when we're taking trades, the higher the slope, the better. And so even a slight slope is fine, but the sharper the degree of slope in the direction of the trade, the better it is for you and the most likely it is going to work out for you. So what I want you to focus on as we flip through charts is look for the setups that happen where there is a slope on that moving average, okay? When you get a period of consolidation and the moving average is flat, okay, we generally do not want to trade or take trades in that area. So many of these setups that you see here, we would ignore completely. The only time we want to take these is when we're breaking out above a previous high or breaking below a previous low. In other words, if this is a channel and we're about to break out and we get that setup, that we want to take, okay? But again, we'll explain that in the training. So I want this to be as interactive as possible. Please, if there's a symbol that you like to trade or you're thinking of trading and you want to see how Veracity would do on that symbol, by all means, please type it in. I'll try to get through as many charts as we can. And I also want to say that this is based solely on technical analysis, so it will work on any market, stocks, futures, Forex, any time frame, a 1-minute chart, 5-minute, hourly, daily, weekly, monthly, it doesn't matter. Okay. Now, again, for the longer, for the investors in the audience, or you know, the individuals that are are managing retirement accounts, etc. You want to focus more on the monthly. And remember, I said you can use an index like the S&P 500 to judge those turning points. Well, you can also do it on an individual stock, meaning when you get a nice long setup with a degree of slope like we see here on that 20, these are very, very safe trades to take, and very powerful if you look at the size of the move. But the point is, if you see that trade trigger, or the fact that we're already in that trade on the higher time frame, you can then revert back to the lower time frame and focus only on that direction rather than trying to take trades against the longer term trend. It's always better to go with the trend than against it. Okay, so especially if you find trades that line up on daily, weekly, and monthly, those are my favorite. But again, I want you to focus on the setups that happen where there is a slope on the moving average. What you'll find is the vast majority are winners. Yes, there will be losers, but you're going to find way more winners than losers. And the other thing is that when it doesn't go your way, like it did here, it'll get you out very, very quickly. Okay, very quickly. Just like, for example, if we switch back to the daily time frame, here, look at this trade when it was long. Any little bit against us, and it took us out before that drop. Now, whether you catch that drop or not, that's a whole other thing. Okay, we caught it here because not only did we roll over, and at the time there was slope on the 20, but we were taking out a low. Remember what I said? If it's a breakout, you can take that. That's exactly what you want. And we caught pretty much that full move. Okay. And you see here, before it goes against us too far and gives back all our profits, it gets us out. Okay. And so that's the safety component that I'm talking about. You get both the safety where it gets you out early, but you grab most of the move as well. Let's look at some of the main tech stocks that have been driving this move higher, like Amazon, for example. So if you look at some of these moves here, this one was just above the 2,000 mark, went to about 2,400 here before calling that exit. So real nice move there. We had another one here. We had another one here. Again, if you look at the ones that are right along that upsloping 20, that's what you want. Now, I should say, personally, I don't normally take trades on gaps. So if you see a move like this, I would skip that trade personally. 9 times out of 10, it'll work out anyway. But I prefer to take the ones that happen close to the 20. I just feel a lot safer with it, and I'll avoid any sort of pullback against me. I don't like to chase. Okay. So if you have the fear of missing out, you've got to break that habit. Always wait for that move back towards that 20 before you jump in. Okay. And again, any time frame will do well, but have a look at the monthly. Again, if you're more of an investor, look at the size of these moves. Okay. So this is what you're looking for. This, was just under, well, between 350 and 400, and got us out up here above 1,200. So some pretty big moves. Let's have a look at some symbols. Some of you are typing in symbols. The Qs. Rick wants to see the Qs. Sure. Let's have a look at the Qs, which is the ETF for the NASDAQ 100. This is the monthly chart. And yes, sometimes we will miss trades. No question about it. We're not worried so much about the ones we miss. We're worried about the ones we take. The main thing is we don't want it to go against us. So if we calls a trade and gets us out right away, that's okay. Small loss, we'll move on. There are always trades that are going to work out well. Let's look at the lower time frames. Here's the weekly. So if you look at this stretch on the weekly, again, it took us in and out several times, but that's where that safety component is. That's what keeps me sleeping like a baby at night. I got no worries about this when I'm in a position. And, these days with commissions being what they are, basically insignificant, I'd rather go in, out and back in rather than get caught with a big move against me. But if you look at the start of that move, near the end of that move, we pretty much caught that all. And same with this one here, and now the recent push. If we looked at the daily time frame, okay, there we are. So sometimes it misses a piece, but generally it catches the bulk of it. And that's what we're looking for. Again, you can trade this any time frame, okay? A 5-minute chart, it depends on how active the day was. You're going to catch some nice moves. Again, you want to focus on, whatever time frame you're comfortable trading, but focus on the ones with the slope in your favor. If you look at where that 20 is and where it's sloping, you can pretty much buy anywhere along that line and do quite well, okay? Rest, it'll just help you time it a little better. NVIDIA was another one. It was Percy who was looking for NVIDIA. Let's go, this is the hourly. Let's go to the daily on NVIDIA, and there we go. Some pretty nice trades here as well. A real nice one recently here got us in, when was it? May 5th, and we're still in that trade going from, what was it here? Right around 290 or so, and we're at 370. So real nice move. Again, the longer term trades, there it is. And these are some of my favorites. I will tell you, I generally look at the monthly chart for this kind of formation. Whether it's a new issue that just, takes several months or years to really take off, or it's a stock that was beaten up and then went into consolidation mode for several years. Breaking out of that is key. And you generally get a long move. One of the things, if you're a follower of technical analysis, you probably already know this, but when you get a channel, when you get a consolidation period, what you want to do is measure that distance. So if you just draw a line from more or less the start, and we could have gone even further, but this is more or less the start here to where the breakout is. And the breakout, what I mean by that is a move above the highest point throughout that consolidation. Once you break out, if you look at the size of that line, your move that you're expecting is going to be about the same length. See how symmetrical that is? Okay, so pretty much even. That's what you can expect. And so these long-winded consolidations may really test your patience over time, because you're going to have to sit and wait and wait and wait for them to come together. But once they break out, if you can catch that move, the longer it goes on, the bigger the result. So some pretty incredible trades you catch there. Let's see. Hey, Michael from, I believe, Ottawa, who's been on my presentations for a long time. Thanks, Michael. Hope you're doing well. Michael's asking for GLD, the gold ETF. I really like GLD. And look at that, GLD is in a channel here. What you can do is draw a line across the highs, draw a line across the lows, and wait for a break one way or the other. Okay, it's that simple. Now, if it were to pop above here, above the high, and that's when you see that little diamond and arrow, you definitely want to go with it. And again, you measure the channel, and then that's the size of the move you're expecting. So, I really like gold here. If we get a sharp sell-off in the market overall, gold can sell off with it for a period of time, but generally, the day will come where it'll be seen as a safe haven and bounce. And right now, I'm waiting for a breakout out of this channel. So keep following that. That should give you a nice setup. Dennis is asking for Boeing, BA. And Jeffrey, if there's any symbols from the YouTube viewers, by all means, let me know, jump in, and we'll share some of those. Again, if you look at this area in here, when you see something like that, okay, this is what you want. You want to mark basically the lows of that range, okay, and the highs as well, We could have marked the highs for, you know, a channel. But when you get that break associated with that, that's what you want. And a lot of times it comes back to retest it, which is, again, an opportunity to add to it and catch a move like that. Boeing recently gave us a few setup warnings, but never did trigger. Okay, never did trigger. And so we're waiting now that it's closer to that 20. We have a nice slope on that 20. We're waiting for another potential setup there. And if it sets up, it looks like we set up for a move back to the lower range of this channel here, which is about 300 or 310, before it hits any significant level of resistance. So keep an eye on Boeing. By the way, if you stick with me till the end, I'll show you how we run a scanner on this and how quickly we find setups. But there's 4 in particular that I'm watching right now, and I'll share those with you by the end of the presentation, okay? Richard is asking for a look at SLV. Absolutely. SLV is the ETF for the silver market. And here we are. Look at that. We have a setup here on SLV. Now, what's the red flag here? One red flag. That's the 20. If you look at the slope on the 20, it's gone flat. Okay. So what we may have begun here is the start of a channel like we see on gold. A lot of times silver follows gold. We may be in a bit of a channel. So you may want to wait till you get a breakout above the highs or the lows there to take a trade. But again, we'll have to wait to see if that arrow appears. But if we look back again, where there's slope, right, and you get those setups, you get some real nice moves. Okay, and that's what you're looking for. Keep it nice and simple.
We got
Hey,
a couple
Jeff.
for you, Vince.
Sure.
So we one really question from Merle in YouTube a little bit earlier. He said, "Do you care about VIX when you're placing trades?"
Not generally, no. I do keep an eye on VIX just for a heads up for a spike in volatility coming up. I mainly trade options, so implied volatility is very important to me. The VIX will kind of give you a heads up. So if we look at, let's bring up the VIX here. Oops.
Dot VIX, I think.
Oh, dot VIX. Okay. Thanks.
Well, let's
There
hope I'm.
Yeah. So when you see the VIX, and again, it works the same way. Look at the consolidation period here. And then if you're breaking above the highs, you know you're in for something big, right? You can measure that and look for that big move. So if you see something like that, or even what we've seen over the past week or so, price moves from below the 20 to above, and so far has remained there. It's come back to retest it. Now, if we were to get a setup here, and we're close to getting a veracity setup long here on the VIX. If we get that, what that's telling you is that volatility is going to come into this market. What you can generally expect with that is a wider range on daily moves. So for example, if Apple moves about $5 from high to low on any given day, if we enter a period like we saw back here, where volatility increases, we'll probably see Apple's daily range from low to high double or triple. You get much bigger candles. So you get a lot more activity and larger candles than what you usually see. Of course, for option traders, that means you're going to see a spike in premiums, which can be a good thing for you if you're on the right side of that. So yeah, I don't generally look at the VIX to tell me which direction a stock or a market is going, but generally, obviously, if you see a spike in the VIX, that means equity market is selling off. If you see a downward move in the VIX, things are calm and generally stocks are moving higher. Okay.
Okay, and I'll throw 2 at you from YouTube, but before there's
Sure.
NVAX, NVAX, and MRVL after that one.
Oh, sure, no problem.
All right.
So thank you. Here's NVAX, and still in a trade here. Again, we still, it doesn't take much of a slope on that 20, but obviously the higher the degree, the better. Looking back, this was flat for a long time. So again, when you measure that channel and then expect that move, so even if you, what I'm trying to say is you don't have to catch the channel breakout, right? So looking back, let's say we saw this one here or this one here, right? Once we look back and we see the length of this channel and we can map sort of the same distance. So if we say, hey, here was the break, that's how long it is. And now we're expecting to move about, you know, that length. And you get a setup here. You know, you're only partway through that. So you know there's lots of room to move. And that helps you make that decision on whether or not to get into that trade. Of course, the slope on the 20 confirms it. And there's a few other things we'll teach you in the training classes. But obviously here we've broken out to new highs. And again, you don't want to chase. Never chase, because the farther this moves away from the 20, the likelier it is to snap back. Okay, so the further away you get in from the 20, the more risk you have that it's going to quickly snap back on you. So you do want to be patient and wait. But if there's slope on that 20 and it pulls back again, you can feel free to get in. MRVL here, there's another one. It doesn't catch every move, okay? But it will catch the bulk of them. And even when it looks like it has the highest degree of slope, this was a beautiful trade to enter, right? The second it starts to move against you, it'll get you out. Now, it could just set up long again. We get in and you'll see a burst off to new highs. Trust me, this may seem a little frustrating at times, where it gets you in, right back out a bar or two later, but it's exactly what you want as a trader. You can ask anyone with experience in this marketplace and they will tell you the same thing. If you can limit your losses, you will have a long career at this. That's what you should focus on. I learned the hard way. I'm trying to save you from doing that. I took that big loss early on that sent me on a mission to find a safe way to do this. It took me many years, finally came together. Now I'm trying to hand you something that will help you avoid that. Hopefully it has. Hopefully you haven't already taken that big loss and you can take this and run with it. But again, usually when you don't have a big slope, you know, in your favor, one way or the other, you want to avoid these, okay? So no need to take them. When you have a slope, you want to take these, and look at that. First one bar and you're back out. Next one went nicely in your favor. The next one, nicely in your favor. That's what you're looking for. Sammy's asking for Spotify. Let's look at Spotify. Wow, this is great. Normally I have to, you know, just take symbols off the top of my head. A lot of suggestions here. That's great. Here's another nice trade, and look at this one here. Look at the degree of slope. We get in, break to new high, and off we go. That's the other thing you can look at, is how close are we to either a 52-week high or an all-time high. All-time high is way better, of course, because there's no resistance overhead. We're in uncharted territory, and if you can break above that, that's fantastic. So when you see a trade with this amount of momentum, remember, read the slope on the 20 as momentum. And the higher the degree of slope, the more momentum on your side. It's like the wind pushing at your back, right? Pushing the candles forward. And so if we're very close to an all-time high and you see this kind of setup with that slope, these are fantastic. I will take these every day of the week, okay? And so great move there on Spotify. Let's look at something like Lulu. Lulu's been in the news lately, Lululemon, I mean. And again, with slope, some beautiful looking trades. It almost triggered long the other day, a few days ago. We had the setup, we had the warning, but it pulled back. It never did trigger long. And so we'll wait to see if we get another set up long here. What's been in the news lately? The airlines and cruise ship stocks, right? Let's look at some of those. Royal Caribbean. So here's that, fall from grace when the lockdown happened, the COVID-19 lockdown happened, and that was a heck of a move. But if you just look at everything here, slope was on our side, very much on our side. Taking the basics of technical analysis, we did already shift from higher highs and higher lows to lower highs and lower lows, and we had momentum on our side. And when you look at the first one, it didn't trigger, right? And you had a series of candles just consolidating sideways. And if you mark the lows, look at that, the breakout, the momentum, this was as perfect as it gets. This is what you should look for, and look at that move. Fantastic. Now we've seen a bit of a move higher. Let's see what comes next. Commodities, crude. Let's look at crude futures here and see what it's given us lately. There's that initial drop. Here's the bounce back. We got a recent signal here, one that didn't come together here earlier. Here's one that did. So far, the first 4 days have moved in our favor. Again, remember, we can't always predict what the market is going to do, but you want to trade with something that when things go wrong, it gets you out before you feel the pain, like here, got us out. Okay, so whether we ran with the next trade or not, which we could have, it was a breakout, or not, it got us out of trouble, and that's what really matters here. More importantly, to me than some of these big moves, but that's what's really important at the end of the day, minimizing your risk. What else do we have here? DXCM. Jung is asking for DXCM. Sure, let's look for DXCM. There we go. Just a real nice move. Again, if you look at this, why do we want to take that trade? First of all, look at the degree of slope on the 20, right? Secondly, we were breaking above a previous high right here. So it was a breakout with momentum. And if at the time this was the all-time high, we know we're very close to that. If we can break above that, we're going to get a big move, and that's exactly what it was. So these are perfect, and they're not hard to find. And actually, in the interest of time, let me show you how you can find them. So first of all, before I get to the scanner, I want to get to the expert commentary. So if you go to the top left of your MetaStock platform and you click the view button, come down here to expert commentary. If you click on that, it'll bring up this box. And here's where it'll tell you a bit about myself and trading wins and veracity. But more importantly, what this is going to do is help hold your hand through every trade. And let me show you how. First of all, you'll see here that on the very far right, the most recent bar, there's a little black triangle above it. It always defaults to the most recent bar, but you can move that by clicking above any bar, okay? Or by using the arrows on the top left of the little expert commentary box, okay? So if ever it's not in a trade, okay? When it's not in a trade, you're going to see a blank space here between these paragraphs, okay? And then as soon as there's a potential setup here, depending on the direction, if it's a long setup, the text will be in green. If it's a short setup, the text will be in red. So there's consistency there, so you don't get confused on the direction. But then it'll tell you that there's a long trade setup. But more importantly, it'll tell you to confirm that this is a valid buying opportunity. You must wait for a trade above the setup bar's high to confirm that bar signal. So you know the day before there, or the 1 bar before, the price level at which the arrow will show up. So if we look at this bar, the setup bar, and say, hey, the high is 285.25, we know that as soon as there's a trade, one tick or 1 penny above that, the green bar or the green arrows, excuse me, will show up. And that means that that is time to get into the trade. If the high of the setup bar never does get taken out, then you'll never see that arrow, okay? Like this one here. We got the heads up. We never did trade above the high. We pulled back. Then we set up again, and then we did break the high, and off we go, okay? But more importantly, again, as we work our way through the trade here, it now will tell us what to look for as far as an exit. So it'll tell us that should the stock fall below 250.01, it's going to put an exit flag there. That's a reason to exit. So you can use that as your stop level, okay? And so as you move forward, right, that'll change. And it's like a trailing stop. You can use this figure as a trailing stop. Now it's set at 307. So it'll follow it closely so that at any point in time, even if you're not there live, you're not watching it, you can place your stop order at that price level and walk away and feel totally comfortable. The other thing it looks for is a cross below the CCI, okay? That's another indicator. If you get a cross below the zero line there, it'll call the exit, but you can just watch it for the exit symbol. Now, no one's telling you you have to stay in all the way. If you really want to take advantage of the big moves that Veracity offers, you should follow not only the entry signals, but the exit. You should wait in there until the exit, because some, again, will start going your way, then turn around and get you out quickly, you know, at a break even or small loss when you could have taken a small profit. But in the long run, the bigger moves are going to more than make up those small losses. So if you can, stick with it and follow the rules to a T. But if you get a big move, like for example, let's say a Tesla, okay? So on the recent run up in Tesla, like this one here, all right, or even this one here, these are big moves. But you know, you don't have to stay in from the 300 level, you know, all the way above 700. As you're going through this, you can start scaling out and take profits along the way, whatever you're comfortable with. But again, if you can wait until you see that exit, and the expert commentary will walk you through it, and it'll hold your hand throughout the whole thing, which was the whole reason for it. I love this feature that Jeff and his team put in. It really helps you remain disciplined and become a consistently profitable trader, okay? Now, if you, again, you go to your top left, click the little P here, the Power Console, click on the Explore tab. Here, you'll see a number of strategies programmed in. If they're in alphabetical order, if you go to the bottom, you'll see mine. So there's a few different ones from Vora. For Veracity, you have Vora Veracity setups and Vora Veracity signals. What this is doing, the setups is looking for the diamonds, okay? The signals are the trades that have already triggered and are showing an arrow. So I like to use the setups. I like to get the heads up here. So I'll click on that, and then I'll go down here and I'll select the market that I want to scan. Of course, there's all markets all around the world. I like to focus on the US. So I'll go to the index constituents here, and I'm marking off the 30 stocks in the Dow Jones 30, the NASDAQ 100, okay, and usually the S&P 500, as well as the 36 major Forex pairs. That's what I normally look at. I'll take off, well, actually, I'll leave it on just to show you. And go here to the right, select the daily time frame or whatever time frame you want to scan for. They're all there. And then click Start Exploration. When you click Start, it's going to bring up this box, and it's going to start running through those charts. So if you look here, I've selected 559 different charts, and it's scanning them all. Now, I've got several programs open on my laptop. I've got the GoToWebinar, MetaStock, the camera going. So generally, if I were not to have those, this would go even faster. But you can see here, it's still going at a pretty good clip. And in a few seconds to a minute or so, it's going to complete that scan. And then it's going to show us all the results that matched the veracity setups and all the ones that were rejected. Okay, so we'll give it a second here, let it finish, and then I'll share with you how I go through my scan and select it. Let's answer a question here. Warren is saying, does the veracity system send buy and sell signals to your cell phone? No, it does not. I don't believe we have that feature here. I don't know, maybe Jeff, you can answer that if the new versions of MetaStock are, have that alert feature or not.
We can send an alert to your cell phone.
You can?
Well, let me be more specific there, because I just said that in a way that was kind of true, but not kind of specific. We can send an alert to your email.
Okay.
Which you can get on your phone. That's what I meant to say. So
Okay.
There's one way to do it.
Okay, perfect. So there you go. Thank you. So here, it completed its scan, and now we have the results. So 32 out of the 559 were a match. The other 527 were rejected. Okay. Now, we can sort by longs or shorts. So whenever you see a number 1 in one of these categories, that's the type of setup it is. So all these with a 1 here are longs. The ones with zeros it's telling you it's not a short. So these are longs. You can sort by price, right? Or here's the key category, by slope. Remember the 20-period moving average? It took us a while. It was a headache, but we came up with a formula to help identify the degree of slope. So what you're looking for in this slope column is the highest number, either positive or negative, because the highest positive number will be the highest degree of slope higher. The highest negative number will be the strongest degree of slope lower, okay? So if we sort by that, you can see that PWR, Quanta Services, here has a slope of 13.5. Now, I can print this list. I can copy and paste it into a watch list, save it, whatever you want. Or I can just highlight that row and click Open Chart. And on the right here, you'll see, look at that slope, and there's the setup on PWR. So this looks pretty good. Now, again, you want to look at how close it is to being an all-time high, etc. If it's breaking out above a previous high or out of a channel, that sort of thing. But generally, this degree of slope like this, that's awesome. So PWR, you might want to make a note of. What else is there? Let's look at ETN. ETN is another one I wanted to show you. There's a nice degree of slope there. BWA, open chart. There you go. Nice. And I don't know if we can move that out of the way. Yeah. Oh, the other thing you want to do when you get a setup like this is look back to see how the previous setups worked out. On some stocks, it just works better than others. So the ones that have a lot of volume and trend nicely, it will work very, very nicely on. And so if you see trades like this consistently, this is definitely the kind you want to pay attention to. Okay. Now, again, you don't want to just jump in because it's a setup. You want to wait for the actual trigger. Okay. And again, the expert commentary will give you that price level, but the arrow will automatically show up when it does. And the other one I wanted to share with you was PCAR. Okay. Here it is. Nice slope, works well. And there's another setup. So you have PWR, ETN, BWA, and PCAR that all look very nice. Now, again, you have to wait for the trigger because if Monday opens and it's a down day, those may never actually work out. But, you know, they look good right now. So I'm sure there's other questions, but I'm going to ask Jeff to come in, read off some if there's time, but more importantly, let you know how you can grab a copy of Veracity for yourself And if you ever have any questions on this, you can reach me as well by email. It's info@tradingwins.com. That's info@tradingwins.com. You can reach me there. But Jeff will let you know how you can grab a copy for yourself.
All right, very good. Let's see. There was a comment I wanted to read, and I just lost it, of course. But I thought I thought it represented pretty well. Michael said, "Vince, you're still my favorite, and your strategies are awesome. Thank you very much." So I did a bit. I agree with him. So there is that, and there you go. Let me kind of talk a little bit, Mike. I'm going to show you CRM. And while I do that, Mike was requesting CRM in the thing. So I'm just going to take control of the screen. And I'm going to answer a couple of questions on here. I've already got CRM ready to go. So let's go ahead and kind of move this over so I can see it. So here's basically CRM, or Salesforce.com. You can see how well it's kind of reacted recently. We had a bunch of setups here on the way down. Had a pretty good trade right here. Here you had a little bit of a setup and a trigger pop. Probably a scratch trade on this one, I would say, but you can see exactly how well it was working, Mike. To answer your question, Lewis, about how do you see the trigger, basically, let me just show you how that works on the chart and how you can scan for it and that kind of stuff. So if you notice this little diamond right here, that's basically what we would call a setup bar. Basically, if we were to highlight this day on the commentary, it's going to say we're signaling a long trade. This is a setup for a trade. If it goes above the bar's high today, it's going to be a buy signal. So this is where you see the setup. If you have a trigger, when that can happen within, I believe it's 2 days. It might be 3 days. Maybe Vince remembers offhand. But if you 2 days. When you get a trigger, you're actually going to get the buy signal. And one of the things I like about the way we designed this is if I'm running that scan, I can actually run that scan based on the setup or based on the trigger. So if I want to be looking, if I want to open up a big watch list of things to kind of keep an eye on Monday, for example, right? I can run a setup and I can kind of just open up some of the charts and see if they trigger during the day for the ones I like. If I'm halfway through the day on Monday and I get a chance to finally look at the stock market because it's been a busy Monday, and I just want to see if anything was triggered today, I can run a scan for that as well. So there you go. That's how you see a setup on the chart. Lewis says, I used your veracity and I was able to get a put option on RCL. It was wonderful. Thank you. So Eric says, does this work without MetaStock? I'm not currently using MetaStock. So this one, what we're showing today, does require MetaStock, and we will include a trial of MetaStock. And let me talk about that too. So let me go back into my slides. Great job today, Vince. What I want to say thanks to Vince. We've built a product here that a lot of my sales guys are using to trade. So it's pretty cool. It's been very, very popular. You're going to get the setup exploration, the template, the triggers, the expert advisors, that commentary we're talking about. Normally, this is a one-time cost. Again, it's $19.97. That's not bad, really, especially if it helps you trade. We're going to do it here at the summit today for $9.97. So almost almost exactly 1,000 off. If you want to get it, we do back it up with our 30-day money-back guarantee, so you can try it. Your risk-reward ratio is really, really good there, and you're probably not going to return it. I don't know offhand what the return rate is. People love this thing, though. As Lewis said here, he's using it. It's one of the favorites here. It's definitely a well-loved add-on. It is part of MetaStock. MetaStock, in case you're not familiar with it, has been rated #1 in its press category 27 years in a row, dude. That's crazy. It helps you do the scanning. It is the engine that we basically program these things for. We'll include with this a free trial to MetaStock. So what do you have to lose? We'll go ahead. We'll also have somebody help you get it installed. We'll have him help you get running. It's basically included. And that does include the real-time version of MetaStock. It is also included in our bonus package, which I'll talk about in just a second. So Vince, great job today. I see a lot of questions coming in through YouTube. We're going to move on. If you have questions, reach out to us, though. You can get a hold of us at metastock.com/saleschat. You can email me if you want, or you can call us at 800-882-3040. Any final thoughts, Vince?
No, it's all I encourage you to do, like you said, over the next 30 days is give it a shot. Please follow the rules. And remember, those money management rules are a key part of this, okay? If you follow them, you'll never take a big loss again. And that's what this is all about. I wish you all the success in the world. And I just want to say thanks again to Jeffrey and everyone else at MetaStock. They're a great partner of ours, and we love being part of these events. So thanks again, and enjoy the rest of your weekend, everyone.
We love having the events. Thank you very much. And as I was saying before, it is definitely part of our Summit Action Pack today. And I'll go ahead and kind of show you that slide as well. So you can get MetaStock real-time, the 3-for-1. You basically will give you 3 months of MetaStock real-time, 3 months of the Zenith data, the MQ Trender Pro, Wendy Kirkland's automated swing trader, Vince Vora's Veracity. Barry Burns going to come and talk a little bit about his 5 energies methodology, and that's included as well. And these are really a collection of some of the best add-ons. You're going to get, as part of this package, 3 months of a website called learnmetastock.com. It's normally about $99 a month for that. Basically, it provides a lot of training. You know, the bottom line is, with MetaStock, we've been working on programming it for over 30 years now. It's a hugely successful product. We've been adding features and functionalities. That premium Learn MetaStock, it's like any other toolbox. If you understand how to use the tools, if you understand how to run the scanning, it's going to really help you with that. And that's really why I wanted to kind of include learnmetastock.com as a subscription for you as part of this package. It really has helped. You get Unleash the Power of MetaStock, our white glove installation, and Stocks and Commodities magazine is going to throw in 2 years of Stocks and Commodities magazine. So normally all of that separately would be $4,989. Most of it we back on our money back guarantee, and you can get your price is $2,545. So give us a call, 800-882-3040. You can chat live with us at metastock.com/saleschat. Give it a try. It's a great little product. These are all really good products. So there you go. Carson, drop me an email for that question. He's asking me, can I get a copy of the money management rules? Drop me an email, jeffrey.gibby@metastock.com. I don't have those with me, but I'll get them for you. So, and if you guys have any other questions, go ahead and give me an email. Amy says, I joined a little bit late. Can you tell me what the green box means above the candle? I can, very quickly. Green just means you're in a trade. So if you're in a trade, it's going to color it green. If you're in a long trade, if you're in a short trade, it's going to cover it short for you. So there you go. All right. I know we're missing some questions. Apologize for that. Feel free to reach out to us if there's questions that you have, and we will answer them to the best that we can. I do want to say thank you real quick to Stocks and Commodities Magazine for sponsoring all of the events we've been doing for the last 7 years. They're a great magazine. I've been a subscriber since I started my MetaStock career back in the 90s. Yeah. You'll get a free copy if you are watching on YouTube, or if you didn't sign up for it already and you want to go back and go to metastock.com/trader summit. You can just fill out the registration form, say, I want to get the free issue. Sign up for any of the other classes or ebooks or things that were on offer if you want to. You'll want to do that today or tomorrow, because I'll pull the list on Monday and send them over to Stocks and Commodities. So there we go. All right. And of course, we're MetaStock. We're talking about MetaStock all day. If you just want to do only a free trial or an extended trial of MetaStock, we do have a buy one, get two free of MetaStock, metastock.com/traders summit, traders-summit 3-for-1. So there you go. Our next speaker, sorry about the jiggliness. Our next speaker is Barry Burns. Barry is awesome. I love his 5 energies methodology. We've also been working with Barry for a number of years, and I always enjoy having him in the room. And I wish we would invite him more often. We definitely need to. So, Barry, how are you?
Hello, Jeff. I'm doing great and feeling better by the minute. How are you, sir?
I always love how much energy you come into these things with. I have to say that. I put a smile on as soon as I hear you start talking.
Oh, well, thank you. Well, I'll tell you, every day above ground is a good day. That's what my grandmother taught me. So I've adopted that feeling, and yeah, I got to tell you, it served me very, very well through life.
Great. I just turned over I think I gave you the presenter controls. Did you get a little pop-up? I can see you. I can see him. Okay, perfect. Everything looks good. Everything sounds good. I'm going to let you go. I'm going to get out of the way.
Okay, let me try my camera. Oh, my camera's working. Oh, wow. This is awesome.
Yeah, I haven't seen you with the glasses. I like it.
Yeah.
All right, I'm out of the way.
Look good. You can see King Tut in the background. Move my trash can. That would be helpful. Nothing like winging it. Okay. Got a few messy papers in the background. That's the sign of a working man. All right. So welcome, everybody. Thank you to MetaStock. Thanks to Stocks and Commodities Magazine. I tell you, I go way back with both of these companies as well. So MetaStock was actually the very first software ever used for stock trading. And Stocks and Commodities Magazine, I can't even remember how many years ago I subscribed to them, and I'm still a subscriber. So yeah, I'm here because I really believe in both of these products, love them. And, you know, in fact, really, there's no products that I've stayed with longer in the world of trading than these two. So, yep, still on board. And so it's my pleasure to support such excellent products and to be part of this. And I appreciate the invitation from Jeff and MetaStock. And thank you guys so much for inviting me to be part of this great summit. Okay, so let's jump right into it. Today, we're talking about timing strategies for entries and exits. You know, pretty much that's what trading's about, isn't it? When do you get in and when do you get out? If you can master those two things, you're going to be golden. So let's talk about it. Let's talk about it. Let's talk about it. But okay, so it doesn't want to cooperate. Let's try it again. There we go. My key was broken. So there's my ugly mug. I don't even need to do that now because I got my webcam on. I'm not used to being on the webcam, so this is a little unusual for me, but hey, it's fun. So I'm the author of Trend Trading for Dummies. I've received numerous awards, Reader's Choice Awards from Stocks and Commodities Magazine, our sponsor here today. Trend Trading for Dummies, already mentioned that. I've also contributed to other authors' books. I've done presentations for the CME group, obviously MetaStock, the Eurex Exchange, and you know, a lot of stuff. I'm not going to give my full bio here. It'd take too long. You don't need to know that. You just need to know that I got some qualifications under my belt that make me worthy to be here today. If you want to see my full bio, feel free to go over to topdogtrading.com/about me, I believe it is, and or just click on the About tab at the top of topdogtrading.com, and there you can see my full bio if you're interested in all the details. So, who are you? So we're going to make this a little engaging today, since we're live casting. Is that what you call it? I don't know. I don't normally do this kind of stuff. So I'm old, so this technology is rather new for me, but I love when I teach. I love to interact with people. So let me ask you this question, and I see the question box here. I have access to it. What are your most common trading problems, struggles, and frustrations? Type those into the questions box. I'd be very curious to know what those are. And let's help you solve those today. That's our goal. Our goal is to help you solve whatever problems that you have. So pretty good. All right. Let's see what we got here. Okay. Now, oh, I can't see them all. That's right, because there's people typing into the YouTubers and maybe some other places. I'm not sure where this is all broadcast to. So, okay, maybe that's not going to work. But if you could type it into the GoToWebinar module, there I would be able to see it. So, and there might be a little bit of a delay. So, yep, I think I would have to be on the YouTubes to be able to actually see that. So I can't see if you're asking questions on YouTube or giving answers on YouTube. Sorry, I'm not able to see that right now. So, okay, I'll just tell you the most common ones that came in. So, because I did a survey on this, thousands of traders, literally tens of thousands of traders actually. And we sent out, check out here, yep, still can't see it. So here are the most common answers that came back from our survey of, and we got maybe about 1,000 responses. So number one was people would say, and I grouped these together. So common answers I kind of grouped together. So people would say things like, well, I enter the market. So I place an entry, and then I get stopped out like right away. And then after I get stopped out, then the market continues to go in the original direction of my trade. And I'm like, man, that's so darn frustrating. I can't believe it. And one of my mentor at the CME, actually, I studied at the CME, lived there in Chicago for a while, hired a floor trader to work with me. And he would say, Barry, retailers are often right, but at the wrong time. And that's what this represents. This is exactly what he was talking about, where you were right, you get the right direction, but the wrong time, you got in too early, and so then you got stopped out right away. The second one is people would say, well, I get out of big moves too soon, so I don't make the huge profits. And very frustrating. So these are people who are making some money, but they know they could make a lot more, but they don't let the market ride and continue, let their trades ride. And so they're not making as much money as they could. And that gets frustrating for them because they see the market continuing to move without them. And they're like, oh, dang it, I could have made a lot more money. Number three, getting stopped out too often. I think people can relate to that. That was very, very common. Here's another big one, not knowing the best place to exit the market, where to get out. And then finally, trading a trend that doesn't follow through. So they see a trend coming up, they're looking for that big move, because trends are big moves, but they don't get the big trend and it stops and they're like, looked like a good trend to me. Why didn't it follow through? So my answer to all of these is my complete trading methodology. And my trading methodology is to measure the energies in the market. So what are we talking about when we talk about the energies? That's a word you don't normally hear with regard to the markets. And to me, that's what the markets are all about, is the energy of money. So when I talk about the energies, I'm talking about the energy of money in the market. And that energy of the money, or the energies of money, there's 5 of them. There's actually more, but I focus on 5. I find this is all that I need in order to make money. And the first one is trend. So that is the direction of the market, but not only the direction, but the long-term direction. The second one is momentum. So that's the strength of that trend. So trend, direction, you could have a direction of a market going up, going down, but is it strong or weak? And that's the distinction as to whether a market's going to follow through or not. Third one is cycles. Very few people, it's amazing to me that many people don't talk about cycles anymore. Back in the days of yore, when I started trading, people talked about cycle analysis a lot, and people still do, but not as much as they used to, it seems like. I'm very big into cycles. I think cycles are very important because this is how you time your entries with precision. So, and there's different types of cycles. Today, we'll just refer to swing highs and swing lows for timing the market. Support resistance, we're all familiar with that. That's a blockage or potential blockage of energy of the market following through to the upside or the downside. And then energy numero 5 is fractals. And that's just a fancy name for multiple time frames. So if you're using a daily chart for your trade setup, maybe you'd look at a weekly chart, and that weekly chart would be called the fractal energy. And you could do this with day trading as well, various time frames, but multi-time frame trading. Okay, so that's an outline of the 5 energies of money flow. That's a good way to look at it too. When I talk about the energies of the market, and I said it's the energy of money, I'm talking about the energy of money flow. Okay, supply demand would be, if you really want to bring it down to brass tacks, it's all about the energy of supply and demand, the imbalance or the balance. If you get too much of a balance, then the markets just go sideways. So trading is never about certainties. So most of you know this. We never know what's going to happen in the future. I get this question all the time where people say, Barry, how do you know what the market's going to do? or I'll go to a seminar. I remember I was in a seminar in Vegas, and it was a live seminar back before the COVID-19 thing and social distancing. And oh gosh, there was hundreds of people there. And so after my presentation, somebody stood up and said, where do you see oil being at the end of the year? And I said, I don't know. How should I know? Nobody knows. If somebody tells you they know, they don't know. They're either lying or they're deceiving or they're deceived in themselves. Now they might have an opinion, and that's different than knowing. So we never know what the market's going to do. There is zero certainties. Part of what makes trading so challenging. So the best we could do is establish probability scenarios. Now, how do we do that? We need to have a very logical, methodical way of doing that. So what I do is I simply look at any entry point I'm considering to take, how many of those 5 energies are all aligned, bullish or bearish. So the more energies that are aligned, the better. So I give each setup a score of 1 to 5 based on how many of those 5 energies are aligned. And of course, the higher the score, the higher the probability. I take each trade to court. So we need 5 independent witnesses to establish a preponderance of the evidence. So a little court analogy here. So that's the key. That's the key. These 5 energies that I just outlined, each one is uncorrelated to the other 4. That's really important. In other words, you can't, it's not about indicators. People get confused. They think, oh, Barry just, trades 5 indicators. When the 5 indicators align, then he takes a trade. No. The key is that each one of these energies is uncorrelated to the other 4. So for example, and I've even had people send me like screen captures and say, look, I created my own 5 energy method. And I look at the indicators they put on there, and they've got 5 trend indicators. And I'm like, dude, that's not even close, because it's not just having 5 indicators on there. You got to understand what the indicators measure. The money flow they measure. You got to understand what that mathematical formula really means. So if you have 5 trend indicators on there, you got a 5 indicator method, but you've only got a 1 energy methodology. That'd be putting like, I don't know, let's see, 5 speedometers on the dashboard of your car, right? They all measure the energy of speed, but they're redundant. And none of us would do that. None of us would put 5 speedometers on the dashboard of our car, because we know that. So why would you do it in trading? Mostly it's out of, well, just innocent ignorance. They just don't know. So that's the key to why this works. Each energy must be uncorrelated to the other 4. And that way, when they align, that's when you have a probability scenario. So let me give you a little example here with, let's see here, I'm looking for my little drawing tool. There's my spotlight. Awesome. Okay. So we'll look at some charts here. So here's what I mean. So trend is moving up. We're starting a new trend, energy number 1. Okay, and by the way, my whole trading method is a 5-step checklist of these 5 energies. That's it. 5-step checklist, always in this order. So very robust, very logical, very orderly, and frankly, very objective and rule-based. Okay, so step 1, we say, well, what's the trend? Trend is up. We measure that with our 50-period simple moving average. Can we use the 50-period simple moving average alone to make money? Absolutely not. Nope. No one indicator, no one nothing will make you money directly. They're called indicators for a reason, because they indicate something beyond themselves, and that doesn't make you money. All right, so no one of these indicators are worth a hill of beans, well, there's an old phrase, by themselves. None. If they did make us money, we wouldn't call them indicators. We'd call them money makers. They're not money makers. They're indicators. They indicate. So okay, 50 MA is up, and we get our first. And we have a wave counting method. I don't have time to go to all of that today. So it's not Elliott wave, by the way. It's our own proprietary little way of measuring waves. I like to call them Barry waves. So wave 1, 2. So the first retrace in a new trend is wave 2. That's the earliest you can get into a new trend. Now, why do we want to get early into a new trend? And so trend is not enough. Okay, because as we all know the old adage, the trend is your friend until the end. So that saying means that, if you really think about that, what does that mean? It means that there is a statistical probability that the longer trend continues, the less probable it is to continue. It becomes our enemy. So we want to make sure we get in early in a new trend. That gives us an edge there. So wave 2, first retrace in the trend, first cycle low in a trend. That's a sweet spot right there. But that's only one thing. Then number 2, we need momentum angling up. This is our momentum, top dog momentum indicator. Moving on up. Remember I said there's 2 types of trends, strong trends and weak trends. This is another reason why you can't trade any one of these energies alone. Trend is up, but it could be weak. Trend just is direction, up or down. But is it moving up a strength or is it moving up on weakness? And that's usually the difference between retail money and institutional money. I'd rather trade with the institutional money. They tend to be the smart money, and I'd rather follow the smart money than the unsmart money. So this is moving up as well. Therefore, cool. We got a strong trend, and we're early in a strong trend. Number 3, cycle low. This is timing. So for those people who said, yeah, I have a hard time knowing when to get in, or I get in, then it gets stopped out, this is the solution right here. Timing indicator. All right, it's a modified stochastic. I'll show you this in a minute. I'll unveil this for you here in a second. But this little pattern right here is key. Look at that little pattern. And we trade this pattern, and again, I'll show you this in a minute. And that little pattern there tells you that you have a very high probability final cycle low. You're very unlikely to get stopped out. That is your final cycle low. Okay, we call it a mini divergence. And if you can look at it, you can see the K, the black line's angling up a little bit there, where price is still making lower lows. It's just within just a few bars there. And that's what swing highs and swing lows are, just a few bars. All right, got support in energy number 4 of the 50 MA, and then momentum. We go to our next higher time frame. What are we looking at here? We got a 10-minute chart here. My higher time frame is 30 minutes. I like a 1-to-3 ratio. And over here, momentum. Momentum's angling up. So that tells us that we have strength on 2 time frames. So bullish strength. So bullish strength on the 30-minute, bullish strength on the 10-minute. And we got a 5 out of 5. Again, you can just score these trades, give it a score. 5 out of 5 trade. I'll take that every day of the week. Well, I actually do. Okay, so that's what it looks like when we take the words in our list and we put it on a chart. Now, my favorite technique for pinpointing market highs and lows for entries and exits. Let's drill down on that cycle indicator. Right? It's a solution for a good cycle indicator. And the cool thing is, any of you can use this. So let me give you some details here. We got to use the right indicator, and we got to use the right parameters. So I'm just going to give it to you. How's that? So you can get something really practical here today, absolutely free, my gift to you. And it's one of the best things I've ever come up with. So the first thing is we're going to use the good old-fashioned stochastic indicator. Alrighty. So in MetaStock, it's called the stochastic oscillator. In some other charting platforms, it's called slow stochastic. In a few of them, it'll be called full stochastic or stochastic full. Sometimes they'll change the words around, the order of the words. So you want to use the right stochastic indicator. Sometimes you have a list of them there. So we don't want to use fast stochastic, no. Stochastic momentum index, no. Double stochastic, no. Stoch RSI, no. None of those others will work for what we're doing here. And I'll show you why in a minute. So in MetaStock, stochastic oscillator, otherwise slow stochastic or stochastic full. By the way, if you have both stochastic full and slow stochastic, you're gonna want to use the full stochastic. So here's what we do, my friends. We got to change the inputs or the parameters. So we're using a common indicator, right? You don't have to buy any special indicator here, proprietary indicator, but we're just adjusting the parameters. So here they are. Let me bring up my little laser beam pointer again. There we go. So %K, that's your actual stochastic indicator. So for time period, we're going to change that to 5. And in a lot of trading platforms, it's defaulted to 14. So if you see 14 on yours, change that to 5. Slowing, we're going to change that to 2. That's actually a moving average of K. That's what slowing means in this context. So change it to 2, whatever you got. Now, the other line on stochastic, there's 2 lines, is %D or period D. We're going to change that to 3. And then we're going to use the method of simple. That's the type. This, again, is a moving average. It's actually a moving average of the slowed K. And it'll show up as a separate line. So we're going to make it 3 periods for the moving average. And we don't want to use an exponential moving average or anything else. We want to use a simple moving average. Okay, so feel free to take a screen capture of that or write that down, whatever you want. That's how we do it. And on MetaStock, real easy, this is how you do it as well. Okay, so give you one more second to get all that detail down. And 3, 2, 1, bada bing, bada boom. Now, we also draw some horizontal lines. The stochastic indicator has horizontal lines. I draw 3. So the 3 that I draw are, and you'll notice on MetaStock, you're switching from this tab up here now to this tab over here. Color and style, make it whatever you want. That's just personal preference. But these horizontal lines are very, very important for my methodology. So we're going to make them at 20, 50, and 80. 20, 50, and 80. All right. And if you need to add some, which you probably will, you just click the add button and you type in the numbers. Okay. Again, color, style, weight, your preference. All right. Now let's go to the next. Oh, already got it there. All right. Full redundant. Okay. So now, solution for a good cycle indicator. Again, cycles meaning timing, finding the final swing high, the final swing low in the market oscillation. So we use the right indicator, the right inputs. Again, by itself, I want to be very, 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 very clear about this because I keep getting people, even though I emphasize this so much, I still get people who think, oh, great, that's a cool indicator. All I need to do is trade that and I'm golden. No, you will not be golden because by itself, just like any other indicator, it isn't worth anything. It's only valuable when you trade it as one piece of evidence as you look at the landscape of the entire chart. Now, as one piece of evidence, that's very valuable, but it has to be used with the other energies. So we're only going to trade cycle highs or lows in the direction of the trend early in that trend. We're only going to trade cycle highs and lows that have that longer term momentum. We need strength. We're only going to trade a cycle high or low when the fractal energy is aligned with that cycle high or low. When you get all this together, it's amazing. It's fantastic. It's super, super accurate. And we also only trade second chance indicator patterns. And that's what I showed you before, like that little mini divergence where price was making a little lower low, price or K making a little higher low. That's what I call my second chance indicator patterns. Those patterns on K, don't need them on D, we need them on K. That creates a little momentum shift within 5 bars at a swing high or low that gives you a super high probability that you found the final swing high or the final swing low. So these second chance patterns indicate a momentum shift at the top or the bottom of a cycle. Mini divergence is the one we're going to talk about today. I've got 5 others. There's a total of 6 of them. And again, they provide extreme high probability you found that final cycle high or low. So let's look at the problem. So the problem, my friends, is that, and we already mentioned it, that so we'll get a price coming down, a price going up. By the way, the red line is my 50-period simple moving average. My black line here is the 15 exponential moving average. Okay, and now here's our cycle oscillator. So it comes up here. Remember, we got our horizontal lines of 20, 50, and 20, 50, and 80. But we don't get a mini divergence pattern here. We just K goes up, comes down, crosses D. K is the black line. K is the blue line. D is the black line. But this doesn't go down and break this low. So not so good, no so bueno. And then it comes up here and takes out this high. And this is where people say, oh, I got the right direction, short, but at the wrong time. I took it at this time. It would have been better to take it at this time because that's when the market followed through to the downside. Okay, so how do we avoid this kind of stuff? Well, we avoid it by, I just noticed I've got to turn off the spotlight, what they call the spotlight, every time before I change a slide. Okay, so we bring in our little momentum shift, our little mini divergence pattern here, and that's what gives us the high probability of finding a final cycle high or low. So here again, 50 MA is angling up, long-term direction of the market, average of 50 bars, long-term. All right, we get a little bit of a lower low here. It's about equal to a little bit of a lower low, measuring pixels here. But on K, the blue line, we get a very clear higher low. That's your little momentum shift within about 5 bars. By the way, that's the reason that we changed K to 5 instead of leaving it at 14. So go 1, 2, 3, 4, 5 bars. Boom, momentum shift. Remember, stochastic is a momentum indicator. We now change the length of it to measure it within just 5 bars. And we want to find a low here where the momentum is shifted from down to up. And it's revealed. This is like an X-ray inside of the price pattern here. Just this little bitty price pattern, because that's all we're using this indicator for, is just to measure these little swing highs or swing lows and swing highs. That's its only purpose in our methodology. It has one purpose. We use other things, the other 4 energies, for other things. Okay, and that nails the low. That's where we're going to buy. My risk on this trade is like the range of that little bar there, that little narrow range bar. That's the other beautiful thing, by the way, of using this, is that our risk on these trades is minuscule. I enter 1 penny per tick above the high of that bar. My stop goes 1 penny per tick below the low of that bar. That's it. That's it. This is so accurate that I can keep my risk that small. And boy, is that a huge thing in trading, right? Make your winners, keep your winners long, keep them going, right? Don't cut them off too soon, but keep your losses small. This is how I keep my losses small. Works for trend reversal trades as well. So the last one we showed was early in a new trend, which we talked about. But just because the trend is your friend to the end, and yes, we use that to say, let's only trade early in new trends, but that means only trade in the direction of the trend early in a new trend. So think about that. If the trend is your friend until the end, at the end, it's what? Your enemy. So how do we turn our enemy into a friend? Well, we trade against the trend. Because if the trend is no longer the probability trade, then the counter trend is our probability trade. So after we get a lot of waves coming in here and we get to an extended trend, now we start looking for trend reversal trades. So same thing. Again, this is what I use for to pinpoint my entries. This is like my surgical tool, my scalpel for trading. So I'm looking at the big picture, and then I come and say, when I've got a good structure, I've got a good price pattern to trade, okay, where exactly do I get in? Where exactly do I place my stops? That's where this little puppy comes in. So again, lower low on price, higher low on K, the blue line. Shows a little momentum shift just within that little pattern right there. And because now the trend is no longer a friend, I'm going to trade against it. And off to the races we go, and we start a new trend up. A trend reversal trade, by the way, is the best risk reward ratio trade in the world. There is no better price structure for a risk reward trade because you're getting in before the new trend starts. And again, just risking a little bit, reward, boom, fantastic. All right. What else we got here? Oh yeah, you can even use this in contraction periods. So in the contraction period here, there is another cycle in the market that is outside of the indicator here, which this indicator obviously measures oscillations, right? Cycle highs and lows. There's another type of cycle that's called the volatility cycle. Markets tend to contract and then expand, contract and then expand. And so the contraction can be things like, oh, Bollinger Band squeezes, triangles, wedges. And so we can use this for trading out of volatility contractions and into volatility expansions, which are great because volatility expansions, by definition, are big moves. So here we've been contracting for a while. You see the 50 MA is pretty flat. There's really no trend. And now higher high on price, lower high on K. Look at that. Just little signals, right? These are not big divergences like that are normally taught in the books. So normally people teach divergences between swing highs or between swing lows, and that's all well and good, but that's not what we're doing here. We're looking at for this just within a single swing high or low. And again, man, catch the big move early and don't get stopped out. And that's our risk right there. Our risk is 1 penny pit. Well, this is a stock, so 1 penny above the high of that bar, 1 penny below. What I do on these, by the way, is I put in a sell stop. So I'll put a sell stop 1 penny below that bar there. And as soon as I get filled, then I'll put a protective stop 1 penny per predict above the high of that bar. And that's it. That's my risk. Is that basically that circle? And so it's so cool because you just know it's like, I'm not risking that much. It actually helps your psychology on trading because you're not worried about losing a lot of money. You're not worried about losing a lot of money. So summary, we wait for the alignment of the 5 energies and to put the odds on your side. Think of it as, again, I'll go back to my court case analogy. So if someone's on trial and they are accused of, I don't know, stealing a widget, to use something just neutral here. And you got 5 people who go up and testify, and all 5 say, nope, he did not steal that widget. Didn't steal that widget. No way. But those 5 witnesses are, number 1, his best friend. Number 2, his brother. Number 3, his sister. Number 4, his girlfriend. And number 5, his mommy. All right. How reliable is that going to be? How much is the jury going to trust those witnesses? Kind of nebulous, right? Not quite sure. But what if those 5 witnesses are people who never knew the accused before and they don't know each other? They've never met each other. And they all say, oh yeah, I was there, I saw it, he did it, he took that widget and slipped it in his back pocket. Okay, now the jury or the judge is probably going to say, yeah, preponderance of the evidence indicates that he probably did it. So it's the same in trading. And this is why it's important not to be lazy about understanding every piece of the puzzle. So people use indicators and they just throw them on a chart and they just kind of say, well, is the line moving up or is it moving down? Is the market moving that way too? Okay, that's not nearly enough. These lines we call indicators are not lines. They are really math functions. And so you got to dig into the math function. What is this thing measuring? And it's an empty function. It's got to have data put into it. And that data comes from the data of that market, whatever market you're trading, and relative to that time frame. And then that indicator is never wrong. Never wrong. Why? Because math is never wrong. So it does what it's supposed to do. Now that I'm not saying that means you're always going to make money, because remember, indicator does not have a direct correlation to making money. But the indicator does always tell you accurately what it was designed for. It will give you that measurement. But so many people trade these things and they don't know what they're designed for. And that's the problem. The dollars are in the details, my friend. I guarantee you, every professional trader out there knows exactly everything that they're doing, every tool that they're using. They know it inside and out. They know the logic behind it. And that's why they can trade it accurately. And so I see so many amateur traders just, the way that they try to learn trading is just throwing one indicator on a chart after another, after another, after another, maybe throw 3 on a chart at the same time and say, which one works? That's not how you're going to learn how to trade. It doesn't work that way. Okay, so we wait for the alignment of the 5 energies to put the odds on your side. Again, these are the 5. In fact, write this down. This is my trading methodology in one sentence. We trade a trend. That's energy number 1. That early in a new trend, I might add, that is strong. That's energy number 2, momentum. At the right time, that's where a cycle indicator comes in, with support at your back. That's support resistance. Confirmed by the bigger scale. That's your next higher time frame. Put all those 5 uncorrelated energies together, and that's it. That's all I do. And by the way, at first it might seem like, wow, that's a lot. Well, you need to have enough uncorrelated pieces of evidence to really create a good probability scenario. But you could have too much. You don't want too much, because if you get too many pieces of evidence that the market has to give you to align, then you're going to get, first of all, diminishing returns. The law of diminishing returns, not going to make that much difference. And then it's also going to get too complicated. You're going to get mental overwhelm. You got to look at too much stuff, especially if you're a day trader. You got to move fast. And then the other thing is that the market's going to give you fewer trades, because the market's just not cooperative enough to give you everything that you want all the time. So, there's a balance between simplicity and complexity. And I found the number 5 to be the perfect balance between those two. It's very robust and adaptable, by the way. So this methodology works for stocks, commodities, options, currencies, futures. I trade all 5 of these markets, so I know. And frankly, you can work on this with various time frames. So I get this question a lot: what time frame does it work best on? It doesn't work best on any one single time frame. It'll work on any time frame, whether it's investing, monthly charts, daily charts, weekly charts, 1-minute charts, 2-minute charts, tick charts. It just depends on us. As long as the market has enough volume for really short-term time frames, it'll work for them as well. Because remember, all we're measuring is the money flow. And all markets, they move up and down based on supply-demand imbalances, or money flow, money flowing in, money flowing out, buying, selling pressure. And it's the same whether it's a stock, commodity, currencies, Forex, whatever, futures. So they all work the same way. And because we're dealing with the way they work, we're measuring that money flow. This is a universal trading method. You can use it for anything. Now in MetaStock, we got some extra cool stuff. So in MetaStock, this is just so ridiculously awesome. I love this. And you can't do this with any other charting platform than MetaStock. So with MetaStock, we've got an add-on or a plugin that will do all this kind of really cool stuff for you. So you get the top dog trading indicators, of course, and those are built right in. And then what's also built in is my wave counting system. Okay, so I said it's not Elliott wave. These are, well, for lack of a better term, berry waves. And so those are automatically plotted with the plugin that we have. The top dog cycle indicator, volume down here. Now look what they did here. Also, they give you this bar that tells you whether the trend is up or down. Now we're looking for sustained uptrend. And again, correlating that with the numbers. So we want to get early into these new moves. But this will give you the broad stroke. Now look at over here. This is what's really awesome. And again, no charting platform has this. We have not allowed any other charting platform to do this other than MetaStock. It's exclusive to MetaStock. So what you do is you just point at a place and it'll bring up this little commentary here. So wave 9 reversal, remember, extended trend, 9 wave is extended trend. So we look at that and we say, okay, bring up our commentary, and there it is, all the information you need. We have a wave 9 high with the 50 MA angling up. Percent D has been up to 45 or above, and K is now hooking down. So that's the basic setup. That's the technical analysis part of it. And then you can read the details. So you get I won't read through all of it, but the setup is this: confirmation to make the setup tradable. And then look at that. Here's your entry. There's your initial stop, and there's your targets. I mean, what else do you want? Entry, initial stop, and targets. and it'll even give you the prices. Maybe Jeff can show you that. So, I mean, you get everything. You get the basic setup and then the details. So we start with just giving you, here's what it's all about, and then the details of it so you can learn the method as well. And then just brass tacks. Okay, just tell me where to get it. Oh, you get in here. Where do I place my stop? You place it there. Where are my profit targets? Right there. Okay, I mean, really? Okay, doesn't get much easier than that. Very concrete, very clear, very objective. Yeah. So I'll bring Jeff back on here in a minute, and he can tell you a little bit more about the Top Dog Trading plugin. But for everybody here, I also have a freebie for you. So first of all, there's my email address. So you're welcome to send me an email if you have any questions beyond what we talked about today. Barry@topdogtrading.com. I'll give you my direct email address for you guys. Also, I'm going to give away one of my favorite trade strategies. So this is a trade strategy where you get all the rules, all the filters, all the everythings. And it's one of my favorites because it's, well, it's such a high win-loss ratio. And that's why I give it away for free, because I know people need that. I need that psychologically. It's a little scalping trade. And I still, to this day, take it every time it sets up. Man, the other day we had a whole bunch of these just earlier this week. And every single one of them was a winner. I'm not saying every trade is always a winner, but this week I had all winners with it. So I'll give you that. You can start making some money with that, complete rules, where to enter, where to exit. It's part of a free little mini course I have that I'll give you for free called How Pros Trade Different Than Amateurs. And then also I have a follow-up webinar where I'll go deeper into this cycle indicator if you want to get even more details. And you can get it all for free by just going to topdogtrading.com/free. topdogtrading.com/free. Just go there, fill out the little form, and that'll get you all this stuff in one fell swoop. So Jeff, why don't you come on back, my friend, and show a little more details about the Top Dog Trading add-on. And I'm really excited about this. You know, I created the system, but I'm not a programmer. And so the experts over at MetaStock, they are expert programmers, and they were able to code this. And it's not easy to code. I got to tell you, this was not an easy thing to do.
William took some time on this one, if I remember right. We pushed the envelope as well.
We pushed the envelope.
Do you have a question? Do you have time for a question or two?
Absolutely, yes. I do have to be gone at the top of the hour, like 2 minutes before the top of the hour, because I have an appointment at the top of the hour. But yeah, absolutely.
That's okay. We won't take that much time. Let's see. SL Currency or SL asked a question in YouTube that we promised we'd ask, and he wants to know about currency trading and help on that. And here's specifically what he says: you always reference from stock trading, etc. side and leave currency out. How do I push harder to make more profit? So
how do you? Okay.
And I think kind of what he said, because I've been trying to kind of figure out what he was kind of meaning by that. I think what he's saying is like, if I'm making money doing stocks, should I go to currency because I can make more money? And that seems a little backwards to me, personally. Like, I think if you're making money on stocks, a good maybe transition would be to go to options, because then you can kind of leverage in a little bit. But let's kind of break down the question a little bit. Do you have how well do these methods work on currencies?
Yeah, well, they work great on currencies. I've been trading Forex before it was super popular. Ironically, my e-mini mentor got me into currencies. So it works very well on currencies. But yeah, I think that's a good answer, Jeff. I think I would rather go from, if you're already doing well with stocks, why learn something new and different? Stick with what you know. You know, if it's not broken, don't fix it. But yeah, you're looking, I think the only reason you think maybe, and I'm just guessing here, obviously. So Forex has more leverage to it. So that's why you can make more money. But of course, it's a double-edged sword. So be careful. You can also lose money faster. So I would either go to something like futures indexes, or options would be great. You've got more, tradable instruments with options, and you get the leverage as well. But just make sure that whatever you do, remember you're entering a new area, a new type of market, and make sure that you study it very, very well. Again, the dollars are in the details, and that extra leverage comes with extra responsibility, potential for bigger losses. So you better be a master of risk management and money management if you're going to go and start trading more leveraged instruments.
One last question, and then we'll let you get on to your appointment. How do you count the waves? Now, I remember this. We're looking at the angle of a moving average. I don't remember which one, but as long as it's going up, we count the waves as long as that is trended up. Can you shed a little bit more light into that?
I can shed a little bit, but it's a longer question or a longer answer than I have time for right now. But essentially, yeah, just to give you the basic idea. So it's the 50-period simple moving average that we use for trend. Very, very simple, literally. And so when we get our first cycle high after the 50 MA starts angling up, then that is considered wave one. And the next wave high, and now it has to be a higher high than wave one. So the next higher high after wave one is wave three. And the lowest low between 1 and 3 is wave 2. So you can probably already see how it's like, okay, how do I wrap my head around that? How do we calculate that exactly? And that's where it gets tricky.
And don't worry, we count it for you.
And that's what I'm saying.
That we worked in with the add-on. So
exactly.
I want to say thank you for coming in today. Great job. Appreciate it. And enjoy your day. Thanks for coming.
All right. Thank you so much, Jeff. And thanks, everybody. It's been a great summit here, and I appreciate you inviting me to be part of it.
Of course. All right. Thank you very much, Barry.
Okay.
Okay. And as he promised, I'm going to go ahead and talk a little bit more about the add-on. Let me go ahead and kind of get taken over here. Okay, show my screen. Okay. All right, let's go ahead and go back just a little bit here. I think I'm a little bit ahead of myself here in the slides. Okay. All right, there we go. Very good. So as Barry had talked about a little bit before, he's got the trend, the momentum, the cycles, the support and resistance in the scale. The thing I love about the add-on that we kind of created with Barry Burns is it actually does all of this for you. Not only does it look at all the 5 energies, it also allows you to scan for them. It makes sure that kind of everything is alignment when you get the scan. And the patterns, we actually look for specific patterns that he talked about the rubber bands, but he has a number of patterns that he looks for depending on where you're at in the cycles. If you're in a new trend, he has specific patterns for that. If you're in a momentum-based trends, he's got cycles for that. If you're longer in the trend and kind of looking for counter trend type of moves, we've got scans for that. The reversion to the mean, he talked a little bit about in the triangle pattern trades. And all of these are actually kind of just built into the software, and they work right out of the box for you. And they do a great job. This is an add-on that we've had out for quite some time. It's the Top Dog Trading Toolkit. It's normally $499. It's $399 if you do it here as part of the summit. You can give us a call to order that. We'll include, if you need a copy of MetaStock, we'll include a copy of MetaStock as a trial real time, or I should say delayed, because there are some exchange fees that we can talk to you about if you want real time. But you can give us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. So I'm going to kind of move my picture of myself over here a little bit so I can see the YouTube comments as we come in. Ram says, hello, Barry. he's got, but I'll make sure you said hi, Ram. He knows. Anyway, it is part of our Summit special offer today, or our Summit Traders Action Back, if you would. We're going to give you MetaStock real time 3 months. We're going to give you, and I won't talk too much about this today, but we do basically have Refinitive's data service that we offer as part of our offers. It's we call it the Zenith Data. It's a software product that used to be owned by Thomson Reuters. It's more of a data feed than a software product, I'd say. They've spent $1 billion on it. The numbers behind it are fairly huge. They've got 300 or some maybe 200 news bureaus, a couple thousand real-time reporters. They developed this data service for their hedge funds and for the banks and for the institutions. We have a good relationship with Reuters, and we are the place you can get it as a retail trader, and we'll give you 3 months of that $1 billion investment product with all of the news and information. Some of the best news, in my totally unbiased opinion, that you can get as part of that. You get MQ Trender Pro, Wendy Kirkland's Automated Swing Trader, Barry Burns' Top Trading Toolkit, Vince Vora's Veracity. Learn MetaStock. You're going to get 3 months access to hundreds of videos. I can talk a little bit more about that. 3 live sessions a week, and one of probably the best ways to learn about MetaStock. We're also going to throw in an online training course called Unleash the Power of MetaStock. We're going to give you, actually, Stocks and Commodities magazine is going to give you 2 years of their magazine for free. And we're actually going to have somebody help you install everything. So it's a great way to get started. These are definitely some really, really cool products. Normally, all of this would cost you about $4,989. Here at the event, it's going to be $2,545. So in any case, there you go. Okay. I do want to say thank you to Stocks and Commodities Magazine for supporting us, for helping us with the events. They've been great. Our longest, they've been sponsoring the event since we started them 7 years ago. So all of the presenters that we have today are actually giving pretty good offers. Barry just talked about his Top Dog Trading Toolkit, or the rubber band method, and a trading course. If you just go up to metastock.com/traders-summit and you want to do this today, but if you register, if you're watching on YouTube, you were just register there, you can elect to get the free magazine and any of the other bonus offers that you want. So I'd encourage you to do that. You do need to do it today, because the site actually we'll be getting the site ready for the next Trader Summit tomorrow. So it's not going to be a live site today. So do it today. And if you have questions about, like, okay, here's some common questions that we get at the summits. How do I get access to the recording? If you're watching us on YouTube, you'll get the recording right away. Like, you can just back up the video. It's all live. It's all there. If you're joining us through GoToWebinar, great. We'll actually automatically email you a copy of the recordings at the end of the event today. So within an hour of the event. Okay. So there you go. There you go. And then, of course, MetaStock. I'm going to talk for a minute now. It's my turn. I want to see how we're doing. How are you enjoying today's class? Let me know in the comments, or I'm watching them. I've got both chats open. I can kind of take a look at them. But how are you enjoying today? Let me know. I do want to hear this. So I'm going to reread our legal disclaimer because I'm going to talk for like an hour.
Jeff,
today's demonstration is designed. Yes.
Oh, so before you start, I want you to just look humble for a second while I say some nice things about you. Does that work out for you?
Sure.
I got to take my headset off so I can't hear myself talk. So give me a second. So if you've been around MetaStock at all, you surely know the venerable, the one and only Jeff Gibby. He has been working for MetaStock for in excess of 20 years. I have known him in excess of 14 years and enjoyed all those years that I have known him. Jeff had a very successful career in sales at MetaStock, probably one of the most. I'm not sure if we have an exact tally of who stands on top of that sales tier, but Jeff's definitely among the top. He was then promoted to our sales director, and now, I should say manager, and has since become the sales director, which includes sales and worldwide business development. Jeff is a family man. You can see he's coming to you today from his basement. You probably saw his daughter come in a few times earlier. I can guarantee he's one of our most popular presenters. If you've been around MetaStock at all, you've seen a webinar or a presentation. I've had the chance to travel with Jeff all over the place, and every time I go, he's very well received. So if Jeff can manage not to bonk against the desk and make sounds in the mic and also have his desk wobble around and make you seasick, stay around for his discussion because I know you're going to love it.
Let's try this. Did you want to read the legal disclaimer?
Yeah, I'll do that. Yeah, let me do that. I never get to do that. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by presenters who are aware of the risk in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Jeff, I want to tell you a joke. You ready?
Okay, go ahead. Yeah, I'm ready.
Because you always have a handful of kid jokes, and I thought you could add these to your list. What's orange and sounds like a parrot?
Oh, I have an answer, but I don't think I want to give it.
It's a carrot. I'm gonna give you one more. Which computer has the best voice?
Which computer has the best voice?
Yeah, which computer has the best voice?
Siri.
Adele.
What's that?
Adele? Yeah. I'm sure your daughters will appreciate that.
Okay.
All right, Jeff, I'm going to hand this over to you. Good luck to you, buddy.
Thanks. All right. Thank you. And let me know if you like the jokes. We'll keep them on as a permanent fixture. So thank you, Greg. I do appreciate that. There's a picture of me from, I think about 10 years ago. I've looked a little bit different. I've lost a little bit more hair. And I've gotten a little bit grayer since then. As Greg was saying a little bit earlier, just to kind of talk about me, I started in MetaStock back in 1994. I had initially learned how to count pills for the U.S. Army, and I was stuck succinctly between Bush War #1 and Bush War #2, and I am not an active duty military veteran, although it was a fairly close 8 years of relative calm between those two. I decided that, though, I didn't really want to count pills for a living. That was about the time I began my career at MetaStock. And there's a few things that I do want to say about MetaStock. I love working for MetaStock. I'm going to try not to bump the desk. I can see the thing going a little bit. MetaStock's a great place to work. I started in inside sales, and that was a lot of fun. If you had questions about how the software could help you, I'd answer them. And that was really primarily my job for almost a decade. I think it was 9 years. And for another decade, I've been here like 23, 24 years now. I did business development, which means I've worked with Barry and Vince and Wendy and most of the people we have today to help them get their stuff into MetaStock. And that was a lot of fun too. And now I'm in charge of the sales team. And I'm still in charge of all of our US-based partners. I'm very grateful for MetaStock. It's a great company to work for. I'm proud to represent a software program that's been rated #1 27 years in a row. And I love the guys there. So it's been a great 20-something years in a nutshell. I hope you've had a chance to read this, these bullets. I usually don't. I will say, though, what we were talking about a little bit earlier, when I started working for MetaStock, we were part of Reuters. They became Thomson Reuters. Then they became Refinitiv. We purchased ourselves back from MetaStock about 7 years ago. And it's been a good move, I think, for everybody. For us, it allowed us to kind of really start to make some changes in the software that we'd wanted to for a while, but didn't have kind of the ability to, based on the fact that we were kind of helping work on what's the Zenith product at the time. And it's also allowed us to kind of refocus on what we want to do. And that's why, if you've been using MetaStock for a number of years, that's why the last 6 or 7 years, you see just like these dramatic changes where we're putting in a lot of new plumbing and the forecaster and the quote screen and the option scope. We've just been able to really kind of refocus on what we're good at. And so we really enjoy that. But I would say at the same time, being owned by Thomson Reuters for me wasn't a problem either. I'd say that, though, it's a very good relationship now that we're divested, because we still have the advantage of being able to pump data in from just about any corner of the world that you're interested in. It really is kind of amazing, the fact that we cover like 200 different exchanges, a ridiculous amount of different market data, and you can do stocks and you can do futures and Forex. And so I'd say that we have a really good partnership with Refinitiv that we appreciate. And I'm glad that we were able to maintain such a good relationship and yet kind of take control of our boat a little bit, if that makes sense. So in any case, today, what I'm going to be talking about is, this is a class I do every once in a while where I kind of go in and kind of talk about some of the hidden features in MetaStock, or some of the things that I use regularly that you may or may not know about. So when we go in and we start talking about things, I've literally been in Saudi Arabia training Saudi sheiks on how to use MetaStock for 2 weeks. And there's all kinds of different things that I can go in and pick. Sometimes I'd like to talk a little bit about the power tools that are in MetaStock and some of the things that are in the software program. And I'll kind of highlight what we do. Today, I'm going to kind of talk about some of the things that I've really kind of appreciated the most in MetaStock over the last 25 years. I would say, Michael says, no more old dad jokes. So there is the feedback for you, Greg. I would say, I lost my train of thought. Let's keep moving. Okay. So the first, I'm going to try and cover 3 tools. So the first one we're going to talk about is one of the first systems that we started including in MetaStock, or one of the first systems I personally started trading with, which is called the Rahul Mohindar oscillator. And it's a built-in version of MetaStock. There's a little bit of a story behind it. We have a very good partner in India. His name is Rahul Mohindar, and he runs a software company in India called Vora Software. And I noticed in YouTube we had a lot of people that were from India today. So he's a dealer of ours in India. He does a really good job, and he teaches people how to trade and sells MetaStock. It's kind of primarily what he did. And he's been one of our longest running, well, I believe he's actually our longest running dealer now. He's been a dealer of MetaStock for longer than I've been an employee of MetaStock, so more than 24 years. But he's also one of our most successful dealers as well. The story is we brought him into the office around a decade ago, and we're like, you do such a good job of selling MetaStock. Your sales are going through the roof. What are you doing? What are you teaching people how to do? And he ended up showing us this Rahul Mohindar oscillator, and or the RMO for short. He showed it to me, and I think it was Scott Brown at the time. We took a look at it. We really liked it, and we decided what we would do is we purchased rights from him to use it in the software and to include it in every version of MetaStock. So there's a couple of reasons I'd like to show it to people. They're pretty much here on the screen. And I typically don't like to show a lot of pre-built stocks when we go into MetaStock or pre-built screens. Give me some symbols that you guys want to look at, and we'll look at RMO with the symbols that you're interested in. But the reason that I like kind of RMO is it's easy, it's objective, so we're not making decisions based on kind of like what we think is going to happen, or what the effect of the corona is going to be, or what the effect of the incredible, that's a lot of symbols, cool, keep them coming, the incredible unemployment we've had. It's 100% objective. It uses, if I do a good job, if I show them, it uses solid money management. And it works on all kind of time frames. I've shown this all over the world. It works on a lot of different instruments. And notice that I didn't say all instruments. If you want to email me, Carson, you ask for my email address, jeffrey.gibby@metastock.com. And it's a fairly simple 3-step process. So it is a trend following system. The first screen that I kind of talked over a little bit talks about identifying the trend. And so that's what we're going to do. Let's go ahead and open up some charts. Step 1. There's going to be a couple of trends that we talk about. One is primary. That also means long-term. Intermediate, which would be in the middle, and short-term trends. So the first thing that we want to do, if we want an objective way to look at the trend, is we want to be able to identify what the trend is doing. And we want to be able to do that in an objective way. So let's look at a couple of securities based on kind of the symbols that are coming in. Scott wants to look at Facebook. I haven't looked at Facebook for a minute. I'm going to go ahead and just kind of, we'll open up some charts here. Do kind of want to talk a little bit about kind of everything that's included with MetaStock. And we have been talking a lot about MetaStock today, but right here, this is our power console. So if we want to go open up a chart, we can do that. We're going to play mostly with charts. Here we've got a little bit of a quote window, so you can open up a bunch of stocks and kind of follow them in real time and see what the price movement is doing. This is scanning. We'll be talking about scanning a little bit today. Scanning is one of my favorite features in MetaStock because there's just so many opportunities out there. You know, we have 4,225 optionable stocks. To be able to scan and focus in and zero in on the opportunities, I love it. We probably won't talk a lot about system testing today, but we do system testing. We have one of the the, and again, I'm not biased at all, right? But I think we have one of the best system testers out there. We also have our patented forecaster model system, and you can get to that. We won't talk about that today. And the option scope program, I'm not going to even kind of try and get it. And, you know, again, I have to be kind of pick and choose with what I'm doing. Victor says, hi, Jeff. Hello. I missed the first session between the time zone. I get confused. I live in Seattle. Please send me the recording. We will. It'll come to you automatically about an hour after the event ends. But welcome. I'm glad you did make it. And the first session was great. So let's go ahead and open up some charts. Scott wants Facebook. We're going to do Facebook. Vince wants BABA. Okay. XOG. Hopefully that's the right symbol for that. Oh, actually, let's just look it up. Okay. So I'm not. Okay. XOG. Yeah. Extraction oil and gas. And we will do 10 cent as well. I'm not sure what the symbol is for 10 cent. And I think we'll just do 4 just because we're going to run out of time. Since I'm not sure what the symbol is, you'll notice I just click on this instrument search and it allows me to look it up. I'm going to go ahead and search by name and see if we can find 10 cent. I don't think it's, I don't think you're looking for Hong Kong, Michael. So Hong Kong, Vietnam, I'm looking for something that more trades in the US. Again, there are several things here. Is it a pink sheet that you're looking for? Oh, it does trade in Hong Kong. Okay, well, there we go. Let's grab it. Okay. See, you don't make assumptions here. Okay, and we do have a couple hundred different things. Good one. Are you saying that the audio quality is not too clear? Is that what you're saying? This should be my blue YouTube or my blue thing. So
hey Jeff,
okay.
Your audio is coming in good from the test computer, so it might be on his end.
Okay, very good. Thank you for letting me know. Okay. Okay, so we got Facebook. What I'm going to do is I'm going to apply what we call a template here. I'm going to do the RMO trade model. Okay, and so that's just a template in MetaStock. Just applies all the indicators. It applies the expert advisor. And it should get everything on the chart for us. I'm going to go ahead and open up the chart and take a look at the time. We're going to go through kind of the rules for our RMO trade model. So you'll notice right here, we've got a little bit of a pop-up alert. I'm going to go ahead and skip any remaining alerts. And right here, we've got 10 cent. Let's just take a kind of a look at these charts and see which one I kind of want to start with. And Facebook looks pretty good. BABA looks a little bit choppy lately. We'll look at it. I just want to kind of figure out which one we're going to go with. I think I'm going to go with 10 cent to start. Okay. Particularly because it will allow me, and I'll be completely straight. It looks like it's the best chart in terms of the way that it's working with RMO at a quick glance, but also allows me to show how we're getting signals, how we're going to move up those stops, et cetera, et cetera, et cetera. Hi, it's Aldley, 2:20 in the morning. Do me a favor, please. Can I get to view the delayed? Yeah, by the time, Richie, by the time you get up in the morning, you'll get the recording. So I'm glad you came. I can understand you want to go to bed being it's 2:20. You must be probably in Australia, I'd guess. Maybe you're in Asia. So yes, we are recording. You can see, but not the charts. Okay. Are the charts coming through, Greg? Please let me know. And if they're not coming through, there's 2 things that I'm going to actually recommend. Jeff, one, just hit refresh.
So far as I can tell, on both GoToWebinar and YouTube, your audio and video are fine. So I'm not sure what people are referring to. I can see right now your Rahul Mohinder oscillator chart for 10 cent.
Okay, perfect. That's what I'm showing. So go ahead and refresh, Mike. If that doesn't work, just join us on YouTube. It's the easiest way to make sure you're getting a chart. So there's the YouTube link as well. Okay. All right, very cool. Let's talk a little bit about Rahul Mohinder's oscillator model. This is about, so it's a trend following methodology. And obviously we want to be able to identify the trend so we can trade with the trend. So let's talk a little bit about how that works. It's basically a 3-step process. And the first step that we're going to do is we're going to look at what is called the Rahul Mohinder oscillator. It's this green indicator. What you're going to notice is this is a green because I just pointed out, it's also above or below 0 at any given time. Okay, so if I draw a 0 line here, it's either above that 0 line or it's below that 0 line. And Rahul wants to be really specific when he teaches how to use this. He wants to, he basically says, the size doesn't matter, shape doesn't matter. It's either above 0 or it's below 0. If it's above 0, then long term, because remember, we're looking at the long-term trend, you're bullish. If it's below 0, then long term, you're going to be in a bearish zone. Okay, and that's all. That's the whole way you look at the indicator. So if I'm trading over here, because I have to trade over here, if I was looking at it right now, 10 cent, I'd say that right now, long term, 10 cent is bullish, and it's been bullish since right about right here. Okay, about March 27th is when it went from bearish to bullish. So what does that mean for us? Well, that's very simple as well. We're going to trade in the direction of the trend. So as long as we're long-term bullish, we're not allowed to take any short positions. We only have permission to take long positions, and that's all it means. Okay. If I come back out to the chart, you'll notice that we kind of make it even a little bit easier than that. You can look at this ribbon here at the bottom, and it's either in a bullish zone or it's in a bearish zone, and it just tells you right there on the chart. Okay. Okay. So that's step number 1. Step number 2, okay, is we want, and to reiterate, identify the primary or the long-term trend. If it's in a bullish zone, you're allowed to buy. You're not allowed to short, and it's not a trigger to enter. Okay. Second thing, what we want to do with 10 cent is we want to look at the short-term trend. Okay. So we've identified right now we're bullish long-term. What are we doing short-term? And to do that, we're going to go ahead and kind of skip into this indicator right here. And you'll notice that there's a pink indicator and a blue indicator on this chart. I'm going to go ahead and I'm just going to real quickly, anytime you want to change anything on MetaStock, double click on it, and it'll you can change the parameters or things like that. So I just changed it from the blue line from a histogram to a line because I prefer a line. Okay, but what we're going to talk about first is the pink line or the purple or whatever color this is. I actually don't know the technical definition for what color this is, but we're going to talk about this line first. Okay, this is basically our short-term trend. You'll notice that it's also above or below 0. You'll notice it's far more erratic. Like it's much more responsive to price movement than the longer term trend. And that is by design. We're looking at a shorter term trend. We read this the same way though. So if I was to put on a line right here on the 0 line, if it's up above 0, then you're going to say that short term, we're bullish. Okay. If it's down below 0, we're going to say short term, we're bearish. Okay. And so if I was going to look at the very end of this bar, obviously for the short term, we've been bullish and we're bullish today. Okay. We've been bullish short term on this since about, well, exactly 327. Okay. That's when we went from bullish to bearish, or I'm sorry, from bearish to bullish. Okay. What does that mean? Oh, that means we're allowed to go long still. So number 1, we want a long term. If we're looking for a long trade, we want to trade. Excuse me, this is going to take a second. All right, had a little bubbling up in my throat right there. If we're looking to trade in the direction of the trend, long term we want to be bullish, and short term we want to be bullish as well. We want them to match. Okay, so short term right here, you can see that we are in fact bullish. We are indeed bullish. Here we were bearish. Okay, but we do note that on the chart as well. If I go back to the chart view, okay, whenever this pokes up above 0, what's going to happen is you're going to start to get these blue bars painted. That just means your short-term trend is bullish. If it's painting in red, like it's doing right here, it just means that short-term trend is below 0 or it's bearish. Okay, so let me just reiterate those rules again. It's simple, but step 1, we identify the primary trend. Step 2, we identify the short-term trend. Okay, if the primary trend is bullish and the short-term trend is bullish, we're allowed to buy. We're not allowed to short, so we don't trade against the trend. That's part of the rules. Magenta, Carson says. Magenta is the correct color. It's not a trigger to enter. I heard Anyway. Godwin, yes. Steve Primo and Oscar Carboni are coming up. They're next and after that. Okay. Not unable to see the charts, not going onto YouTube, please. Too much moving around. Please explain chart verbally. You really need to see the chart. Mark, there's a picture is worth like 1,000 words. I'd encourage you, if you can't get it here, to go to YouTube. I think if you click on view, you can look at some different view options. But I can only do so much to explain the charts verbally. Okay. All right, cool. All right. But I'll do my best. I mean, I'm here to please. Okay. So if the primary trend and the trend is bullish and the short-term trend is bullish, you're allowed to buy. You're not allowed to short, and it's not a trigger. And you reverse the rules. If you have a bearish zone, like we have on this chart, and everything's bearish with a short-term bearish, you're allowed to short, but you wouldn't be allowed to go long. So you just reverse the rules. The next thing what we talk about is the trigger, okay? And the other thing is if they don't match, if you're looking at bullish long-term and bearish short-term, you're not going to trade that. You can wait. You can use the Explorer to scan for the opportunities, but we don't want to trade against the trend. Okay. All right. Very cool. The third step, and this is the only time we're going to start to talk about actually getting into the trade, and that's identifying the actual trigger for the trade. Okay. So, and let me kind of talk a little bit about how that works in the chart. Let me go ahead and go back into these this two indicators right here. And we had talked about the long-term being bullish and the short-term being bullish, and that's been bullish as well. This blue line here, you've probably guessed, is the intermediate term trend, okay, or the medium-term size trend, okay. With this blue line, we don't really necessarily, we're not as concerned about whether it's above zero or below zero. That's not the way we're using it. What we're looking at is kind of inflections and momentum in the market. That was a lot of syllables right there. What we're looking for is we're kind of looking at the direction of the market to see where the momentum is going. Okay. So for example, the way we look at this is we compare the long-term trade to the we compared the short-term trend to the medium-term trend to look at momentum. So if I'm looking at this chart right here, and let me just kind of grab my horizontal or my vertical line tool. If we're looking at right here, you'll notice that short-term momentum is going down really quickly. If we looked at the price had probably gone down as well. Once that starts to top and turn around, what's going to happen is it's going to start to go up again. Okay. When it crosses above the medium-term trend, or when the short-term trend crosses above the medium-term trend, or when the magenta line goes above the blue line, what Rahul calls that is he calls that a change of momentum or a change of direction or a change of force. So that's basically the signal that we're looking to get into the market to get long. So this is a bullish shift of momentum because the short-term trend is moving faster than the medium-term trend. Okay. If we were to look right here, this is a bearish shift because it's going from going up to going down very, very rapidly. So that would be a bearish shift of momentum. Okay. If we were going to look a little bit further back in the past, which is where we're probably going to start to look, right here we had that bullish shift of momentum where we had a very, very rapid upward movement. Okay. So what that is basically what we're looking at for an entry signal. In fact, if I go back to the chart and I take a look at the chart where I've drawn these lines, you're going to see an arrow on the chart where the shift of momentums happen. Okay, so every time you see a red arrow, there's a shift of momentum to the downside. Every time you see an up arrow or a buy arrow or a blue arrow, it's a shift of a momentum to the upside. Okay. Now the trick here is to remember the other two rules. Okay. Because obviously if we went short here, that wasn't a good idea, right? We would be losing money if we went short there, but we wouldn't want to do that because number one, our most bullish, okay, indicated right here, or indicated using the indicator right here, the primary trend is bullish, And not only that, the short-term trend is bullish, indicated by the magenta line being above 0 or by the blue bars here. So we want to trade in the direction of those trends, and that's why it's step number 1 and step number 2. If everything lines up and we get a buy arrow and we're bullish, short-term and long-term, we can go ahead and take a trade. Okay, but that's why we want everything to be kind of lined up. Okay, so let's talk a little bit more about how this works. This is just such a simple system to use. And that's one of the things I like about it. You know, with MetaStock, I've already talked about all the things I can do with it, right? The testing, the scanning, the ability to look at it. The reason I like to sometimes go in and highlight this system is because it works really well. And I believe it's something that you can use right out of the box that's going to help you make better decisions, if only because you're trading in the conjunction with the trend and following with stops and that kind of stuff, right? And so it's something you can use while you're maybe utilizing the whole power of MetaStock and figuring out how everything works. But it's definitely a really, really cool system. Okay. So let's talk a little bit about how this would work if we were kind of taking a look at this. Okay, and I think I'll start right here. We had this bit of a pullback, which everything had in March, and then kind of things started to kind of normalize and go up. Okay, and that probably just about every stock we look at is going to have a big pullback into March. It's just the way it's going to work. So if we started watching this about mid-March, let's say we got excited to look at some stocks because things were on sale or whatever the mentality is in our head, and we decide we want to go ahead and kind of take a look at this. Let's say we came in here on March 19th, everything's bearish, so we're not going to buy. We may consider shorting based on everything, but we'll kind of get into how the signals work. As we kind of get a little bit of an upward move on this day right here, was the first time we had that shift of momentum. So we had that massive pullback that affected most stocks. Have a little bit of it took us a little bit to get our momentum back. And so right here, we had the shift of momentum, which is indicated by the buy signal, okay? Now, if I'm looking at this signal, I'm gonna zoom in a little bit here, just so we can kind of get really, really specific about what we're talking about. If I'm looking at this, this buy signal, okay, I'm not going to take it yet. Okay, I do have a bullish primary trend. So long term, I'm bullish again. Okay, but I'm still bearish short term. Okay, and so until all of that matches up, I'm not going to go ahead and place an order. Okay, it wasn't until the very next bar. I'm going to move this over one day, and now we're going to look at this bar. This is the bar where we have everything kind of line up in our favor. So our most bullish here, we're bullish long term, we're bullish short term, and we do have that change of momentum or that change of force or that change of direction. When that happens, Rahul says that we want to do a couple of things. Okay, so the first thing we want to do is we want to identify where our entry point is. Okay, now Rahul wants a little bit of an extra confirmation before we get into a trade that the trend is going to go ahead and maintain itself. Okay, and so the way that he does that is the way he teaches to do that is when you're getting into a trade. This is the day we're going to go ahead and kind of base everything upon, because this is the day everything goes positive, everything lines up today. Okay, when that happens, I'm just going to grab this horizontal line tool. I'm going to look at the high of that day. Okay, I'm going to look at the high of the day before. Okay, and I'm going to say, okay, well, this is the higher of those two highs. So I'm going to go ahead and put a little bit of a vertical line right above that high. Okay, if this high is penetrated by just a little bit, I like a little bit of space. He says a penny. But if this high is penetrated by just a little bit, we're going to go ahead and buy into this stock. Okay, that's all. It's that simple. And by implementing this as a rule, you're not going to get as many whipsaw trades. Okay, because this did start to pull back. Investors, traders, or whoever's buying this thing weren't quite ready yet. Okay. The other thing that we're going to do before we get into this trade is we want to figure out where our stop loss is going to be. Okay, and this is probably a very important rule. Now, Rahul has two different ways he talks about doing a stop loss. The first is the same thing we did with the highs we'll do with the lows. So if I look at the bar I'm buying, which is this bar, Okay, this is the bar I'm basing the setup off of. This low is lower than this low, so I'm going to go ahead and put a stop loss right there. So if I buy in here at 391, my stop loss is going to be 374.48. Okay, so that's the first method that he uses. I don't typically use that as the stop loss. I might in this particular case, just based on kind of where we were at in it, trading and everything. The other method that Rahul teaches is to look for a recent pivot low or a recent support area. And the way I personally find a support area is by looking for a pivot low. So if I look, and basically, if you don't know what a pivot low is, it's really easy to identify on a chart. I'm just looking for a low that's surrounded by two higher lows. Okay, so if I look at this low here, this is a lower low. It's not surrounded by two higher lows. Okay, if I'm looking at this one, this is a lower low. So my most recent pivot low is going to be right here at the very, very bottom. That's where my support level is going to show. Okay, and if I'm going to place my trailing stop there, it's going to be 339. Now, when I take this trade, in all seriousness, I'd probably, in this case, just because of the market activity, unusual circumstances leading into this, that's a fairly big stop loss. I might go ahead and say, okay, well, I'm going to take the tighter of the two stop losses. For most cases, almost all of the time when I'm putting in a stop loss, I'm going to go with the lower stop. And this might be one of those scenarios in which I did it. Okay. But regardless of what you do, you're going to know in advance, okay, if the price goes here, this is why I'm going to buy. This is the price that I'm going to buy at. Okay. If this trade goes against me, this is the price I'm going to get out of. Okay. I'm basing this on where support and resistance are. Okay. And not based on how much I feel like I can afford to lose. I'm basing it on kind of where the market is supporting these prices. Okay. And I think that's important. But more important for me is I believe it's important that before you go into a trade knowing where you're going to get out of that trade. So many people get into a trade because of reasons, maybe like Greg told them they should buy the stock. Greg's our marketing guy. He's going to be my straw man argument right now. They have no idea why they're actually buying that. They have no idea why they're going to get out of the trade, et cetera, et cetera, et cetera. For me, trading's a lot about discipline. And if you're trying to make a decision on whether or not you should be holding a stock because you bought it on an impulse and it's going up, or it's going down, it's really a lot harder than if you kind of set up these ground rules in advance, in my opinion. Okay, all right. So let's go forward. I'll get off of that little soapbox. I have a little bit of, I have two other things to show too. So, and it's okay if we don't, okay, so here we go. We're waiting for this line to be penetrated, okay? And it takes a while. We get in this big sideways glut. And that happens with stocks, right? That's why I think Rahul decides to wait for it to kind of break out of the channel that it's in by looking at that high. And so for a couple of weeks, we just didn't trade this thing. It wasn't until it got up here above the 391.10, and I'm going to actually put that on a chart real quick. 391.10 is our, okay, oh, 391.10, okay. And then our stop loss or our risk, 374, about 25 points of risk on 300. That's going to be, I'm not ready to do the math here. Okay, so we do penetrate this with this high. We go ahead and buy as close to 391.10 as we can, and we go ahead and put in a stop loss immediately. Okay, isn't a stop loss. Rahul doesn't teach to wait to close under the stop loss. It's a stop loss that you'll exercise on. Okay. Okay, so then what happens? And I'm going to kind of zoom out a little bit more because I think we got as close as we needed to here. We do get into a nice little breakout above that. It kind of goes sideways for a little bit, pulls back. We get that shift of momentum or that change of direction or that change of force to the bearish side that gives us just enough of a thing to give us the crossover and give us a signal to go short. Okay, and when you're in a trade and that happens, you're going to do, and this is important, nothing. So you're just going to wait. If it continues to pull back, you can go ahead and it's going to hit your stop at some point. But if it's pulling back, generally that's natural. That's what the market does, and we don't necessarily kind of want to make a decision based on that. If it commences its trend, what's going to happen is, and this didn't take very long in the case of Tencent here, but and if it continues to starts to move in the trend again, then we've already established a new support area here, right? And we anticipate that it's going to continue to go up. When you get another signal, you're in a stock already, like we are in this hypothetical example. When you get a signal in the same direction, you have two choices you can make. Rahul says you can buy more here if you want to. I typically don't like to. My personal preference. He says it's an option, you can do it. I typically like to buy my position right here as much as I'm going to buy. But he does say you can buy more. You can stage into this if you want to. What isn't optional, though, is, again, what we've done is we've set up a new support area. What we want to do is we want to be able to move up our stops so that we can lock in some profit, okay? And I use the same rule that I used to get into the trade. So in my case, what I'd be looking at is a pivot low. Here's the most recent low surrounded by two higher lows, okay, since that pullback. So I'd be moving up my stop loss and locking in profit to right here, just below that area, okay? Again, I'm not basically saying, okay, well, I don't want to lose all of my profit, right? I'm not saying, okay, well, I can only afford to lose so much of my profit. I'm basing it on where support is, okay? So if this support fails, that's where I'm going to get out. I'm not trying to make a guessing game out of it. I'm not going to get out of this trade too fast. I'm going to let the market do what the market is going to do, okay? Have a little bit of a pull up here. We have a bit of a pull back. We get another sell signal followed by another buy signal. Notice we didn't hit that support level, okay? If we were chasing this low, we might have gotten out early, okay? If we kept moving up that support area, but since we're looking at where support is and giving it room to kind of wiggle, it allowed us to kind of stay into this trade when otherwise we might have gotten out of it. Here we get that pullback. Again, when you get this pullback, as long as you're bullish long-term and bullish short-term, you're not going to do anything. Here, you get your new buy signal. This is where we're going to move our stop to the next pivot low, which in this case is much higher up. We're going to go probably right about there. This low is, I think, higher than this low, or surrounded by two higher lows, okay? And you just keep repeating the process, okay? So here we got in, here we had another pullback. Again, the market goes up in, Daryl said this in the market goes up in stair steps and comes down in an elevator. But in this particular case, we go up a little bit, the profit taking comes in, we get a bit of a shift of momentum. The next day we get our buy, we're gonna have a stop loss. So if we're just looking at Tencent on the last trade right here, here's where I'd say the stop loss would be. This is your pivot low, okay? So we got in about, what was it, 330? It's this line here, 391, okay? Right now it's at 460. Our stop loss is gonna be 430, okay? So far so good, okay? Very, very easy to use too. Again, the thing I like about this is we're not trying to make this more complicated than it needs to be. We're not looking at what the opening rate looks like and, that kind of stuff, or the unemployment rate looks like, or the fact the Fed is, trillions of dollars in the hole by now, or, those kind of stuff I think are important and it's interesting, and you kind of look at this. But let's just look at what the market is doing and where it's telling us support is and where resistance is and what the market is telling us the trend is doing. And we'll make decisions around that instead of kind of making it about everything else. Now, I've been doing this presentation for a long time now. Hopefully I'm getting better at it. We'll see. But one of the things I typically get a lot is like you only got in at 391, okay? So you could have gotten in way down here at 350. And that's significant, the difference between 350 and 391. And the thing that I always think of when somebody says that to me is we used to travel the country with a guy by the name of Robert Deal. Very nice guy, son of a preacher and a technical analyst. He's very retired nowadays, but you'd love to say bears make money, bulls make money, pigs get slaughtered. And he'd say it a lot better than I could, but it's definitely, I think, one of the truths. I'm not interested in kind of getting in at the exact low. I'm not interested in getting exact out. What I want to do is have really good, clean, established trends where I can take good chunks out of the trend. Okay. Carson says, can you cover how to use this in option trading? Typically, when I'm doing this with options, Carson, I'll buy something that's at least, now this is not something Rahul teaches. This is what works for me. Okay, so we can go back to that legal disclaimer a little bit, but typically what I'll do is I look for something. I don't do weeklies. I don't really have time for weeklies, based on the fact that, you know, you've seen at least one of the kids running around here, right? And but I'll look at weeklies. I typically look at least, if it's within 2 weeks of expiration, I'll look the next one, the next monthly out. Okay, if I'm in a trade and I'm not stopped out, I'll typically just roll the position. Okay, sometimes I keep the strike price, and sometimes I roll up to a higher strike price and cut out some profit. But typically, play with that, see how you like it. I'm not going to kind of package myself as an expert option trader. I love trading options, but I don't feel comfortable about telling you exactly how to roll options and stuff like that. So there you go. Let's recap just a little bit. I have 2 more things to show you. Let's see, I'm trying to get back to the bottom of the comments. I scrolled them all up on accident. Let's just kind of recap on some of the other charts, because we don't need to go into that amount of detail on them. But let's kind of look at XOG first, okay? XOG, I'm going to say, has been bearish long-term, with the exception of just like right here, since as far as the chart goes back, it had a bit of a bullish run here, okay? But from about August of, what year is this? August 6th of 2018, we've been short XOG, or not short, we've been bearish long-term, and which means we wouldn't have been taking any long positions, okay? During that price, there was a couple where we might have had a little bit of whipsaw in here, you know, but during that, I'd say for the most part, you're going to agree with me, this was all bearish territory for RMO. We've went on XOG from $15 to 30 cents, it looks like. And I would make an argument that if we were only looking to take short positions and kind of manage short positions on the way down, we'd be way better off than if we were trying to like trade this little bit of move up right here, right? So it looks like it worked really well on XOG. Let's look at the other 2 real quick. And then I want to talk about the other 2 that I like. Facebook. I hadn't looked at this stock. Thank you for bringing it up, Scott. Facebook, again, we had a little bit of a run down. You probably would have been able to capture a little bit of this move. But right here, we've been bullish on Facebook since April 8th. Is where everything kind of lined up and we could start taking a long position on it. It's went from 171 to about 238. So I'd say that looks pretty good. This we had a pretty good call on. This we had a pretty good call on. I'd say it looks pretty good on Facebook. Just, you know, we're not going to look at every trade just because, well, I started talking. Baba. Baba, I didn't like Baba. Looking at it kind of just closely, we did have some really good moves here, Baba. It's been a little bit sideways here, and I don't necessarily think that this would be the best method for Baba at first glance, and that's fine. Again, the nice thing about this being completely objective is you can look at the chart. You know, there's no secrets here. This looks a little choppy to me. It doesn't look like it's working very well with this indicator as well. Okay, so that's what I've got to say about RMO. If you guys have any questions, I'm going to talk about 2 other things real quick, and just from a really high level, because I got like 10 minutes, 20 minutes left. Okay, all right, let's talk about my other 2 hidden gems in MetaStock. So one of the things, this is cool. I'm going to go ahead, and the second gem that I'm going to talk about is called the dynamic trading tools in MetaStock. I'm going to apply a template to talk about it. This is a template that I actually built I think it was in MetaStock 15, and I started talking about like these cool indicators that are in MetaStock, and then I'd have people email me so I could send them the template. I think it was 16. I just said, hey, programmers, can you just include this in MetaStock so people don't have to come to me and get it? And so it's just under dynamic trading tools. It's a template. I'm going to go ahead and apply it, and we can do it to Alibaba. That's fine. And we'll just talk a little bit about what it does. This is DT stands for Dynamic Trading Tools. And what it's going to do is automatically look for support and resistance long-term and short-term in any trend lines, and it'll put them on a chart for you. Okay, so if I'm going to kind of just point out what we're doing here, right here, it's showing this dark line indicates that this is a major support level. Okay, this also shows that this is a major support level. Here we have a major resistance level. Okay, you'll see that we actually penetrated this and it bounced off it twice. So it did its job here. It also tested it right here and bounced off of it and kept going up. Okay, right here you've got a trend line that's automatically generated. These are this is a long-term trend line that it's kind of following. Okay, you'll notice they're not very visible on this chart, but right here, if I make it a little bit bigger, it will be. You're going to get shorter term support and resistance as well. Okay, and that's pretty cool. I like the fact that it actually kind of displays that on there, and I think these lines actually make a little bit of sense. We just penetrated just a few days ago through kind of this, or actually let's call it a bounce off of this shorter term resistance level. What I really like is a lot of people look for breakouts of support and resistance to trade, and since these are kind of automatically generated, we can also scan for it. So let me show you how that works. Okay, I'm going to go ahead and go into our Power Console. I'm going to go into the scanner here. And what I'm going to do is I'm going to come down to DT. So I'm going to go ahead and list all of the explorations. There's a ton of different things you can look for here in MetaStock. And I'm just going to come down to DT. So support and resistance. Okay, and so there's basically 4 explorations in here. There's DT support and resistance short-term, DT support and resistance long-term, and you can also look for breakouts on trend lines, either long or short-term, okay, or both. Okay, so if I wanted to find stocks that were kind of breaking up through a long-term support level or a long-term resistance level, in this case resistance, in this case support, right? If I want to find stocks that are kind of breaking through these levels, this is the scan I would run, the DT support and resistance longer term. Okay, I'm going to go ahead and run this real quick. So I'm just should I do S&P 500 or optionables? Let's do S&P, and the reason is just because it'll run a little bit faster. And so we'll do our local data, S&P 500. Oh, oops, I am running, you know, how fast is that? I'm actually running the Wendy Kirkland scan too. And it's actually going to complete it faster than if I canceled it. That's how fast it's going. So I'm going to go ahead and let it complete that one, and we can then start on the support and resistance longer term one. Okay, you'll see it's going through those. It takes a little bit longer to run this one, but you'll notice it's just cruising through them. Okay, on this one, what we're looking for is, again, stocks that have broken through support or resistance. Okay, now the way that you read this, very, very simple. Here you've got the instrument names. We're looking at the results tab. We rejected about 314 stocks out of that list. Okay, here's what the close price is. This right here represents how long ago it's been since it broke up above a support level, or how long it's been since it's broken down against a support level. So I see a 1 right here. Add the ordinary just broke up through 1 bar ago a support level. I can sort this based on the break up, but now I can actually go and open up that chart, see if I like it as kind of like a setup. So since it's only 1 day ago, I'm just going to go ahead and click on open chart here. Okay, I'm looking at it with RMO. There's where it broke up, but if I wanted to see the actual line, I'll just go back and apply that template, DT. Oh, actually, DT is what my name of it was. We renamed it Dynamic Trading Tools. So if I wanted to see that on the chart, see where it's actually breaking, right here you just had that breakup one day, one bar ago, it broke through that resistance level. So a lot of people like to trade on based on support and resistance breaches. There's an easy way for you to do it. And I'd say this level as a resistance area for something that's been automatically generated looks really, really good. And we were able to find this in the S&P 500 just by doing a scan on it. So I love the ability to scan. I might actually look at this one. Not recommending you buy it or anything, but this actually is breaking through a fairly good established resistance area. Resistance becomes support. So there you go. Here we've got the resistance area, and I would say, yeah, that's a pretty good zone to have a support area. Not a resistance, a support. I always say the wrong one. So that's the second tool that I'm going to show you. The third one I'm going to show you just real quick, and we don't have time to kind of drill too far into it, but I do have some training videos that I've done on YouTube that are great. Well, I think they're good anyway, but we do have one on this method particularly, and it's called the Haguro method. Haguro, let's just go ahead and apply it to a Bavi. It's a, and I'll just kind of give you a little bit of a kind of the broad strokes. You should, if you use MetaStock, take a look at this thing. People really like it, and I do. I mean, by that I mean I like it. So Haguro, basically, I met a guy by the name of Gary Burton in Australia probably 9 years ago, right? And he runs an association down there called the Association of Technical Analysis, where he's part of it. That's actually a huge thing in Australia, ATAA. I kind of was talking to him a little bit about what he does and what he teaches people to do in the training that he does. And we kind of talked about a little bit about what we're doing. And one of the strategies I've used over the years to kind of grow the business is we go in, we meet people that know what they're doing, like Hima Ready. It just popped into the room, so I figured I'd mention her, or Barry Burns, or, you know, and we basically code what they do into MetaStock to help people understand it. This is, he ended up sending me a PowerPoint that was, I think, like 400 pages long. Like, it was like this massive PowerPoint. And one of the things in there was a methodology that was called Haguro. Okay, Haguro was a methodology that was created by Siki Shimizu. And I'm sure Greg is like, just hates the way I just pronounced that, and I'm sure I slaughtered it. But this is a methodology that looks at range, and it looks at what we call a midpoint right here, and it's designed to give us a good forecast on what we should be looking at for the next week. Okay, so you'll notice that there's numbers above or below all of this. Right now we just had a 2. Last week we had a doji for the week. It was a 15. Here we had a 2, and each of those have a special meaning. Okay, and of course, if you go to the expert advisor, it does, where is it? Oh, actually, it's already attached to the chart. If I just go to the commentary, it's going to break that down, and it's going to say, okay, well, this is what the candle 2 means. This is what it's designed to do. Take a look at it. This is a really cool methodology. When we created it, I coded it myself, so that means I really did like it. But also, I was so kind of pleased with it. I actually called up Dennis Peterson, who he's deceased, but he's a good friend of mine. And he worked at Stocks and Commodities at the time. And I say, hey, Haguro, hey Dennis, we've got this stuff that we put together for Haguro. Here's kind of the background for it. Take a look and see if you like it. It's just an add-on that I allow anybody to download for free if they want it. And so he took a look at it. He loved it. He ended up writing 2 different articles, one that kind of went through the Haguro and how it works and kind of where it comes from, Siki Shimizu, and a second that actually kind of talked a little bit about just this integration. And it's always been a freebie for MetaStock. We used to require that you go up to our website and download it. We've because it became so popular, we've included it in every version of MetaStock for a while now. So take a look at it. Again, if you go to youtube.com/MetaStock, you can just type in Haguro, search our channel for Haguro. You'll find some more in detail videos, but I'm very proud of this one. I really, really like it, and I think you should look at it. So, Yeah, while you're on our channel, by the way, Greg would like you to go ahead and like, comment, and subscribe. They do help quite a bit, and we do appreciate that. So, and we do all kinds of cool stuff on our channel. Every week we sit down, we do like a weekly market recap where we talk about the market and what it's doing. It's really cool. You should join our YouTube channel. Come to our recaps. We have a lot of fun with them. Yeah. So in any case, let's go kind of get back into here. Again, what I am going to say, 27 years in a row, we have been rated #1 in our price category and that's by the readers of Stocks and Commodities magazine. So those of you that have been using MetaStock for a number of years, we appreciate that. Thank you. And thanks for voting us. 27 years. That's incredible to me. Okay. We do have 2 versions of MetaStock. If you're new to MetaStock, we have our MetaStock real-time. Okay. That includes the Zenith real-time market data news. That's the product that Refinitiv put together that they spent $1 billion on and support it with one of the largest news organizations on the planet. The cost on that's $250 a month for MetaStock and the Zenith and the news, and worth every penny. We also have a end-of-day version that's $69 per month, and it includes MetaStock and end-of-day market data to actually power it. What we're going to do as part of the summit offer today is we're going to do a buy 1 month, get 2 free. So if you buy MetaStock, you can do either real-time or DC. If you pay for 1 month of MetaStock, we're going to give you 3 months. So if you signed up today, you'd be running MetaStock. You pay to use it till 7/20. We'd give it to you to 8/20 and 9/20. So you'd be running it way into September. As part of that, we're going to have somebody actually help you install the software. We're going to give you some online training courses to help you get going. The one thing I would say is there is a reason that we've been rated #1 in our price category 27 years in a row. And I'd encourage you to trade it, or try it. See if you like it. I wouldn't trade without it. There's so much we can talk about in terms of how this is going to help you. It's such a great product. Very proud to represent it. So give us a call, 800-882-3040, or visit us online at metastock.com/saleschat. I do want to talk a little bit about learnmetastock.com. Again, we do have learnmetastock.com is a company that was actually started by the person that hired me at MetaStock. So he's got a lot of experience with MetaStock. He does a really good job. He'll do 3 classes a week in terms of showing MetaStock. And those are 3 live classes. Part of the site access, it gives you hundreds of recorded videos. He'll do all kinds of really cool stuff. He'll go in and say, okay, well, here's an article about a particular trading methodology. Let's test it and let's see how well it works, and kind of give his take on it. He has videos on how to write formulas, how to do download. He has downloads of formulas you can get, and even does a weekly market outlook. And his website is $99 per month. I've made a deal with him that if you want to do it as part of the summit, well, it should give you 3 months for $99. So it breaks down your cost to about $33 a month. I'd encourage you to do it again, because MetaStock is a tool. You may only need a little bit of help to get kind of up and running, but the more you understand how to use your tools, the better it's going to work. So you can do that through our sales guys as well. It's 800-882-3040 or metastock.com/saleschat. Okay. We'll also had to clear my throat a little bit. We did okay on time. I'm usually trying to run through these things, probably because I skipped a little bit on Hagara all week, kind of are coming out on time. Okay. Let's see. Before I take a couple questions, because I'm going to have time for a couple questions, the Summit Traders Action Pack that we're going to do is going to include 3 months of MetaStock real time, 3 months of the Zenith platform and the Zenith data, every single add-on we've talked about today, including MQ Trender Pro, Wendy Kirkland's Automatic Swing Trader, Barry Burns Top Dog, and Vora's Veracity. It includes that 3-for-1 Learn MetaStock subscription. It includes Unleash the Power of MetaStock, and Stocks and Commodities will give you 2 years of their magazine as part of it. We do offer the support. One of the things I like to brag about is we keep more people in our support team than in sales and marketing put together. And it's not uncommon. We've been a little busy, like a lot of people are getting into MetaStock, and we're grateful for that. But it's not uncommon for us to kind of run a survey every month where we have 100% satisfaction ratings out of our support team. It's amazing to get that. They do such a good job. All of the support team is usually, well, they're all working out of their homes right now, but they're all Salt Lake based. They usually are in the office, and maybe when we get back to normal a little bit, well, I'll be able to go back into the office as well. But they do a great job. Anyway, I'd encourage you to try this. Most of it has a money-back guarantee for all the one single version purchases. You can give us a call at 800-882-3040. You can chat live with us at metastock.com/saleschat. So let's see. Carson said, what is this called again? I think MetaStock is the word. Oh, Hagura. Thank you. Ali says, when I'm using the power times at times, I'm finding that the start exploration button is grayed out. Why is that? Ali, I've noticed that too. And what I've noticed, usually when that happens, is I've got it open somewhere else, like the report is on a different screen. So check for that. And if it still keeps coming up, chat online with one of our support guys, and they can kind of really help you get to the bottom of it. So Michael asked a question. I'm glad I kind of looked at questions real quick. I'm going to put my headphones back on. But Michael said, so the greater the number of breakup indicates a pretty strong established move upwards. Actually, no, that's not the way that it works for that scan. That number that was in that report, let me just go into the report real quick. I think I can just pull it this way. This break up, that's how many bars ago it broke up. So that just means when we pulled up AbbVie, that just means that happened yesterday, okay, 1 bar ago. If you have 158, like you do here for AMD, that means it happened 158 days ago. So that's not how strong it is. Don't look at that number. It just says how long. It's actually almost the opposite. It's how long ago that happened. So in any case, let's go ahead and get over to back over to the slides. My time is over. So thank you for that. I hope you enjoyed it. Again, well, great, Mark. Thank you for doing the trial offer. I think that's what you're saying. Again, if you have any questions for me, feel free to reach out to me. I do appreciate kind of all of the feedback, and I want to be able to hear Hima, so I'm going to go ahead and turn back on my speakers so I can. All right, let's go ahead and do this. All right, let's thank our sponsor, Stocks and Commodities Magazine. They do such a great job. I really appreciate the support that they've done, and I love having it. You can get a free issue. You can also get a lot of free bonuses. If you're watching on YouTube, metastock.com/traders-summit. That'll take you up to a point where you can kind of sign up for, you'll have to register for today's session, which is kind of weird, right? But you can sign up for any of the bonus offers that you want, whether it's the free magazine or Hima did like a guide, I think, on RSI. Anything you want. There's all of the presenters today actually came up with a really cool bonus offer that you can sign up for. So you can do that at metastock.com/traders-summit. Okay. And again, the link for that 3-for-1 is metastock.com/traders-summit 3-for-1. Just give us a call, 800-882-3040 or metastock.com/saleschat. Okay. Hima, I want to welcome Hima for the second time to our Online Trader Summit. We really love having her. She did such a good time. I think we only had her back in February. And she did a good job. We're going to have her back. Hima, how are you doing today?
I'm doing well, Jeff. How are you? Can you hear me all right?
I can hear you.
Okay, great.
And I've got an audio issue with my headphones. So
Okay.
I'm going to turn the time straight over to you and let you take over.
Sure. Okay, so I don't need to change any settings, just share my screen and start?
Yeah, you should have just gotten the share your settings
Yes.
button, or share your screen button. I'll let you know when we can see it. We can see it.
Okay, looks good. Let me just make sure I'm showing you what I am meaning to here. Okay, terrific. So thanks for having me back, Jeff. Yeah, this is my second time here at the MetaStock Summit. Hope everyone's doing well. This is quite a marathon event you have going. You got to have some protein bars there with you, Jeff. Well, I checked in now and I want to see how you all are doing and where you're dialing in from. So where are you dialing in from around the country, around the world? Go ahead and let me know in the chat. That also lets me know that the audience here can hear me and see my screen. So I'm super excited to be here to dive into how you see here, trading momentum with RSI, how to trade momentum in any market on any time frame. And before we dive in, I just want to make sure everyone can hear me and see my screen. So, okay, great. We've got Rob from Cambridge across the pond. Awesome. We've got Greg from Utah. Been to Salt Lake City once, Greg. Beautiful city. Not sure if that's where you're near. Okay, Sammy from Detroit. All right, everybody else who's, just getting warmed up here, at least type a Y for me that you can hear me and see my screen. That way I know we're all ready to get going. All right, we got Carson from Texas. We've got Ricky from Canada. Victor from Seattle. Awesome. And that's the cool thing about trading, right? You can do it from anywhere. And there's so many different markets and time frames to be able to take advantage of the markets, especially in this day and age. All right, super. So yeah, I do Q&A. I save it for the end. So if you have any questions along the way, they might get answered the next slide. Otherwise, definitely save them for the end, and then we'll dive into Q&A then. All right, awesome. All right, so let's dive in to, again, trading momentum with RSI, how to trade momentum in any market on any time frame. I'm going to give you a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough of trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? All right, how many of you want to get as much as possible out of our time here together? I want that for you too. Okay, for most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you want to hang out with me for a lifetime. In a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, great. I promise that by the end of our time today, you'll know everything you need to know and how to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? All right, great, because here's the problem. Okay, many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault, right? They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you all know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results are up to you, all right? I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you, right? I don't know your trading plan, account size, or markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? If you haven't been following me for a while, here's a mercifully short introduction. So I'm Hima Ready, and I'm originally from New York, the hotbed of the markets. And I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT, working as an analyst at Piper Jaffray, before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders. And I've been blessed to appear on the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methodologies of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great, all right? I was in the center of action as an analyst with Piper Jaffray and making them a ton of money, starting work at 5 a.m., working late, and burning out quickly. Is anyone else here a corporate cog making someone else rich? I know, right? And I thought there must be more to life. Okay, the money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. And I'll never forget the moment the bottom dropped out of my world when my beloved dad and mentor died suddenly. At first, it felt like my whole world was crashing in because I had to leave my job to tend to financial and legal family matters. But then I realized this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. Because you see, while I was apprenticing with my dad to learn the markets, I had started a futures report that grew from there that I started called the Skinny on the Mini. It started out as another exercise to review and prep for the markets. But soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But all of that stopped when I joined the corporate world. You know, conflicts of interest, am I right? And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers and they said, yes, they would love to get back my report and analysis that ROI'd on average 7 times out of 10. Okay, they couldn't wait to leave the hard work to me again. The result, I had time to trade my dad's and my accounts again. I started maximizing the trading methods of WD GAN and became the leading expert on GAN. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what? Right, freedom. Hey, there's only so much time in each day. And when I found this system, I got my time back and my family back, and that's freedom. And clearly, that's what we all want, right? Freedom. I mean, wouldn't that be amazing? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? They made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading stocks, futures, options, any market, in any time frame. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market in any time frame, right? But more on that in a bit. First, we're going to dive right in. Trading momentum can be easy, but first you need to understand how it works. A Formula One race car track will have you understanding momentum in no time. So let's all put ourselves in the driver's seat here. You guys see that hot little red car at the starting line? Okay, so you're at the starting line of the track as the driver, you rev up your engine and you go. You pick up speed really quickly or accelerate on the straight runs of the track. You see a turn coming up and you prepare accordingly. You ease off the gas to slow down or decelerate, even if it's just a little bit, so you can have more control as the car whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more and you're on your way. Now, are you guys getting the idea of how you'd accelerate and decelerate on this track? Type a Y for me in the chat if you get that. All right, awesome. Then that means you're getting to know exactly how price momentum works. So now let's jump in to the helicopter that was looking down on the racetrack and get a bird's eye view of it. All right. So the racetrack represents price as you see it on your stock charts. Just bringing in an indicator like our momentum indicator here, plotted on the bottom as a subchart. Making sense, guys? All right, awesome. Whoops, there you go. I see your questions popping up here. Cool, so now, how does momentum actually work? Well, When price is trending higher, you've got upward momentum that's improving. And then that upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Okay, it's giving you a heads up on what price is going to do before it does it. Now, during falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. All right, making sense, guys? Okay, type a Y for me if you got it, because this is the base element. If you get this, you're going to get everything super easily. Okay, great. Now we're going to dive into the indicator. But first, let me share with you results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. All right, now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. But first, you guys want to know the Jedi secret? All right, I'm going to let you peek behind the curtain of my trading and my analysis and show you how momentum moves through the markets that you know using my special Jedi indicator. That indicator is called the RSI power zones, and you can use it on any market in any time frame. Now, there are a variety of asset classes to trade, many of which MetaStock brings you into, and futures happens to be where I started. All right, so today I'm mixing it up and bringing you into futures markets that tie directly to stocks and options you may trade, or you might be trading those futures outright. So I want you guys to type in for me if there's any futures market that you see here that you trade, either an index, the ES, the NQ. It could be related to bonds. It could be commodities. And maybe the time frame as well. Okay, you can use this on a monthly chart, a weekly chart, all the way down to daily, 60, 15-minute, 5-minute, and even shorter. As long as there is a time frame on your chart, you can use this. All right, awesome. Checking to see if you guys are typing that for me. All right, cool. So let's look at the big picture. Let's start with a monthly chart and drill down, looking at a market that all of you are aware of, okay? Because whether you actually trade it or you just go to the gas pump, you know about it. Good old oil, all right, symbol CL. And let's look at how the RSI power zones work in this market that, as I mentioned, everyone is familiar with. So here we've got light sweet crude oil future, ticker CL, on a monthly chart. Now, every candlestick here is representing 1 month of price action, and the RSI power zones are on the bottom. So they've got 4 distinct zones. The bear support power zone is the lower 2 red lines. The bull support power zone is the 2 lower green lines. Bear resistance power zone for the upper 2 red lines, and bull resistance power zone for the upper 2 green lines. When you look at momentum this way, you're basically using the entire field, the whole landscape of the RSI, okay? Not just a simple overbought and oversold based on one number. So let's look at this history over the past 10 years or so of what happened in oil, how it could have helped us be even more ready for the price action by using RSI power zones. So you guys see there's this big sharp fall, right? This big sharp decline. And what happened when that occurred is that the RSI power zones went from the bull resistance power zone, those 2 upper green lines, all the way down to the bear support power zone. This was the first major clue that this wasn't just like a one-time wipeout and price was going to come back up to $200, that we might be hanging out here for a while. And we did. That was like half my Wall Street career there, hanging out, okay, in oil, just sideways, sideways, sideways. And I was watching this, and every time we made a monthly high, notice the bear resistance power zone capped the RSI power zones, meaning that sure, we got overbought, but we weren't able to get up to really strong levels on RSI. This was all a clue that the downfall in oil was perhaps not over. And that's exactly what unfolded. And over a couple of years, we saw multiple leg declines, and each of these lower lows in price had RSI fall deep into the bear support power zone. We had a recovery again, but it was capped by the bear resistance power zone. And as you know, we're in the midst of recovery where the fall in price was tied into getting back to the bear support power zone. So the bear resistance and bear support power zone have been dominating the crude oil futures market for 10 years now. So very important to watch. And then you can come in and look at that on smaller time frames. And we're going to do that in a moment with a different market. All right, cool. So let's look at another asset class, another type of futures market where we're going to look at a weekly chart of bond futures. Okay, those of you who maybe trade the 10-year, maybe you trade the 30-year, or maybe you're just watching this market to really have your hands on what's going on in the debt and interest rate world. So here we have the weekly chart every week, every candlestick representing 1 week of price action, and again, the zones laid out. So in the fall of 2019, there was this bottom, and even though the bear zones had been dominating for a while, there was a shift happening. And that shift could have gotten you ready for this huge move up. And that strong advance was accompanied by the RSI power zone sailing all the way up to the bull resistance power zone, well beyond traditional overbought levels. There was a dip back lower, and that dip, all it did was come back to the bull support power zone. So do you see now how the momentum action shifted from between the red zones to now going between the green zones? All right, and then from here, there was some consolidation that unfolded, but held the bull zones. So type a Y for me in the chat if you're getting the feel for this indicator, guys. Okay, this is just for you to kind of like get warmed up and see how the RSI power zones work. And we're going to move into our next lesson. All right, super. Greg's got it. Robert's got it. Love it. All right, now we're going to dive into the trade setups associated with the RSI power zones. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. All right, by now you're getting it, all right? So we're going to dive into my proprietary 3-step approach to using RSI power zones to find great trade setups. I'm going to show you actual setups that I use and share with my trading family. So here are the 3 steps all lined out that we're going to do over and over on several more examples. So first, we're going to review the chart and assess the price trend. Now you might be thinking, hold up, Hima, this whole time you've been talking about momentum, 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 and now you're talking about price. Well, that's because price is king, guys. Price rules your chart. Momentum is calculated from price. So my advice is to, at the minimum, be aware of the current price trends, and at best, trade with them, okay? So when you assess the chart for the price trend, you're going to have multiple options: uptrend, downtrend, or sideways. You can use the RSI power zones in any of these conditions. It's just a matter of knowing how to then go look at the indicator. So once you've determined the price trend, and I'll show you how I do that, you want to evaluate the RSI power zones reading. This means looking at the RSI value and where it is relative to those zones that I laid out. Okay, is it in a particular zone? Is it in the space between the zones, etc.? Now from there, you want to determine the presence of an entry signal between price and momentum. Because it's not just about the momentum moving between the green or red zones. The optimal setup is when you have the movement between the zones matching up with the natural pattern between price and momentum. So this is what allows you to put the RSI power zones into best use to identify trade setups. So we're going to take these 3 steps and look at them at some recent market action. So again, for variety, because it's the spice of life, and it allows you to see this at work in a variety of situations. Now we're going to go and look at my baby. My baby is the ES futures market. So any of you trading anything related to the S&P definitely can benefit from studying the ES futures. And we're going to look at it in a 60-minute time frame. Okay, so now we're going to an intraday level. So type a Y if you're with me, guys. You're ready to look at the individual setups using the RSI power zones. All right. So here is a recent edition of the skinny on the mini. So that's my report on the ES futures. And in this report, I talked about how futures were likely to trade lower to a certain level, 2771, and how this might end up as a particular momentum setup. I laid it all out. So let's go look at the charts and apply the 3-step method to see how I came to that conclusion and then look at what happened after I published. All right, so here's what the market looked like when I was preparing that morning report. Okay, I write my futures reports before the market opened. Step 1, review the chart and assess the price trend. So even if you're brand new to the markets or been around for years, the most effective, simplest way to determine price trend is to look at the highs and lows in the price action and uncover the pattern. So let's look at this last little candlestick to the right is what the market was looking like at the time that I published. So what was the trend at that time? Well, if I go back a couple days here in the 60-minute chart, there was this high, right? That was the most extreme move in the recent price action. This low, a little bit of sideways, created this lower high. It's lower than the first high. Then we had a lower low. And this continued. We had a lower high versus the second high, and then another lower low versus the second low. So as that pattern persists, that puts us in what's called a downtrend. All right. So I walked you guys through this one, and the other ones I'm going to pop quiz you. Okay. Downtrend is lower highs and lower lows. Uptrend is higher highs and higher lows. And sideways is when there's not a clear pattern of either one. So when you have a downtrend, great. Now the next thing we do is step 2. You look at the RSI power zones reading. Where is it? Where is the RSI hanging out on the 60-minute chart? Where has it been? Where is it coming from? So I want you to notice that since the extreme high formed, that first pink dot, the RSI power zones on the 60-minute chart were moving between the bear resistance zone, the upper 2 red lines, and the bear support zone, back and forth, back and forth. Okay, so I've highlighted those 2 zones in yellow to make it easy for you to see. Do you guys see that? Type a Y for me in the chat if you see how the bear resistance power zones have been respected while the downtrend has been in place. All right. Now, knowing all of this, it's when it's time to number 3, determine the presence of an entry signal. So there's a variety of signals that can be discovered between price and momentum that I have uncovered in my 21 years of market study. There's a particular disconnect here between price and momentum, and I saw the potential for it to become an even more powerful signal. That's why in the outlook for the report that morning, I also wrote word for word, quote, so if you take any further short positions, watch close to protect profits. Notice, guys, it wasn't just a jump in and buy or jump in and sell. It was a defensive move. And in markets like these, being defensive can be highly valuable. Okay, protecting your profits after they've accumulated before worrying about taking the next setup. So what happened next? Let me show you the money. Here's what unfolded. Okay, futures traded lower to complete the price and momentum pattern that I suspected. So what you see right here, this gray vertical line, is where we left off on the last chart. You can see that price pushed down even lower. It respected the pattern that I had been watching for to unfold. And then from there, you can see how it shot up higher. That was the value of protecting any short positions. Now, in that observation of that setup, there became a new rally that was tradable. How tradable? What kind of move? Well, in futures land, the ES is $50 a point. Okay, so every time it moves from, like you see here, 27.71 to 27.72, that's $50. So here specifically, after I published the report before market open at 9:30 and warned of the formation of a low likely coming soon, there was a low at 2760.25 later that morning until 11 a.m. Eastern. And the rally went up into the session close. It actually went up beyond that, but I'm just talking about the normal US trading session going into 4:15 Eastern. When you do the math, guys, okay, just being aware of RSI power zones and price and knowing what setups to watch for, this created an opportunity, $4,675 in size. Meaning, if you just traded one futures contract, you could have captured part of that. Not too bad for a day's work, right? And while this happened on a particular day in the ES futures recently, In these volatile and uncertain markets, there are setups like this all the time in a variety of markets and timeframes. So I have a whole training that dives into RSI power zones for true mastery. And I'll show you the setup in module number 2, because I can't teach you everything you need to know in under an hour. Right? It would do you a disservice. It would shoot you in the retirement. Yes, I said shoot you in the retirement. You know, your money isn't just money, right? It's the blood, sweat, and tears that it took you to make it, and you can't afford to lose any of it. I'm here to help you maximize it. And of course, I can't teach you everything that I've learned in 21 years in an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can look at how I can teach you more in depth. Making sense, guys? Are you getting this? Type a Y if you understand, because we're going to dive deep into another one of your favorite markets. First, I have to know you're still with me. All right, awesome. So let's look at another very popularly traded futures market. Again, if you trade technology, technology stocks, technology ETFs, you definitely want to have an idea of what's going on in the NASDAQ. And the mini NASDAQ futures is one way to do that. You can also just trade it outright, which a lot of my traders do. This time we're on a 120-minute time frame. Okay, so every candlestick is representing 120 minutes of price action. Now, here's what the market looked like when I was preparing a recent pre-market open report. Step 1, review the chart and assess the price trend. So let's look at this together. This is what the market looked like when I was working on the report, getting ready to send it out to my traders and prep for the trading day. So there was this low back here. It broke up into many little pieces going higher up to the second blue dot before a little bit more substantial correction lower. Then you had a higher high, higher low, higher high, higher low, higher high, higher low. I sound like a broken record, but that's okay. That's how trends go. And after all that higher high, higher low, there was this low. So what is the trend here, guys? It's pop quiz time for you. Is this an uptrend, downtrend, or sideways? Let me know your answer in the chat. So we had a series of higher highs and higher lows, and then a lower low came in and kind of started wiping it out, right? So this is a situation where we have an uptrend in price, but it's possibly changing to down. Why do I say possibly? Is because we don't have a lower high and a lower low yet. It's just to be determined. All right. After that, step 2, evaluate the RSI power zones reading. I want you to notice that the RSI power zones on the 120-minute chart returned to the bear support power zone after not registering those levels for 10 days. So here's another way to look at the RSI power zones, not only for a specific pattern, but to look at how the RSI power zones are for your market that you trade relative to itself. This is like going back in a price chart and studying the old highs and old lows in that market, which is a very traditional Gann approach to initial chart analysis. All right, so we know we had an uptrend that's possibly changing to down, and we have the revisit to previous oversold levels. All right. Determine the presence of an entry signal between price and momentum. Well, here there was a continuation signal emerging, suggesting more downside after that initial shift in trend. So after this first strong move down from that high, there's a continuation, a trend continuation signal between price and momentum. And that's why in my outlook for that morning, I wrote, again, word for word, verbatim, the outlook is for futures to resume lower while beneath 91930, one of my resistance levels marked in blue that you see here. So what unfolded from there? It's time to show you the money. So remember, this chart now is picking up where the last one left off. So here, this red bar now becomes where this gray line is on this chart. So what happened? Futures rallied back into 9193. You can see it. It became now a dashed line in the chart after it was tested. This, along with the downside continuation pattern between price and momentum, led to a high forming at 9202.75 at 10:45 a.m. Eastern, trading down to a low at 88.75, 88.7825 into 3:30 p.m. Eastern that day. This created, when you do the NQ math, a move that was $6,490 in size in one trading day on one contract. And again, while this happened on the NQ futures recently, in these volatile and uncertain markets, there are setups like this all over the place in a variety of markets and timeframes. Okay, I have a whole training that dives into all 4 of the RSI power zones and their setups, and I'll give you that setup in the system. I'm just showing you here what you didn't know, that trading can be simple when you follow the expert. Making sense, guys? You getting this? All right, give me a Y in the chat so I can show you the next chart. Okay, let's dive into my next example for you here. And now we're going to come back to commodities land, because there's another futures market that a lot of my traders trade. And that's gold. And we're going to look at a daily chart. I'm sure many of you use daily charts for your trading or analysis. So here, we're going to mix it up a little. We're not an intraday anymore. We're in a daily chart. And we're going to look back at a report I published in Q1 2020 on gold futures. So this was a long-term report where I used the same style of analysis and the same set of tools that I do for all the short-term stuff. And every single time, guys, RSI Power Zones is integral to my analysis. Okay. So here, I wrote about GC futures, as you can see by that line, February 7th. And step 1, at the time, review the chart and assess the price trend. Let me lay out the highs and lows for you. What do you see here? Is the trend up, down, sideways? Give me your guess. Well, first it seems up and a low, just up, right? We have a low, then a high, then a higher low. But then we have this weird thing going on where we have a lower high on the 4th blue dot and a higher low on the 5th blue dot. It's a bit confusing. So what this is an uptrend that's just gone sideways. It's an uptrend that's pausing. It's taking a breather. So from this step, we move on to step number 2. Right, you guys got it. I see your guesses. Sideways says Harry and Percy and Bertrand. Very good. So now we evaluate the RSI Power Zones reading. Looking at where is the RSI. Okay, that's what we're really trying to nail down here. Where is it? Like in what zone? And where has it been recently? So what it's doing here is you can see here how it's lifted up out of the bull support power zone. So this is a sideways congestion after an up move in gold futures with the bull support power zone still holding in this sideways price consolidation. Okay. Then what? Then we look to see if there's a presence of an entry signal between price and momentum. So here there was yet another type of continuation signal forming between price and momentum. And in my outlook, I therefore suggested that there would be a breakout higher in gold futures soon. How did the market trade from there? Let's look at the money. So here's what unfolded. Lots of volatile price action when you look at it over the past several months. But what happened right after I published and got my traders in tune to the potential move higher? Here's what happened. Futures traded higher off the 1560.2 low, which formed just days before I wrote and published the report, and they rallied all the way up to 1708 before making any further correction. That was a $14,060 move with the way that gold futures are priced, guys. And remember, I called this out to my tribe as it was happening. So I'm very excited to be sharing this with you today because I'm really passionate about the work that I do to provide traders the best analysis and education to trade the markets so you can take control, take back your financial freedom, and live the life you and your family deserve. So by now, you know that RSI power zones can really boost your trading because whether you're new to studying momentum or you've been doing it for years, This approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's all about, right? Is this right for you guys? You getting this, making sense? I mean, am I speaking your language when I talk about consistent profits? Tap a yes for me, a whole yes, if you're looking for consistent profits. All right, I love it. Eugene and Robert, and I'm sure many of you who are just getting back into that keyboard. There you go, Greg, fantastic. So that's the results that our trading family loves to see too, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? All right, awesome. Then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones. Here's what more of my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's RSI Power Zones indicator has become the standard in all my charts, said Rob. Norman shared, a day after learning one of Hima's RSI Power Zones trend continuation entry signals, I tested it out in a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning on the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense, guys? You're getting this? How simple it can be to trade when you have help? Great. So imagine and picture this, right? You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted, giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. This system that can give you all that is the 4 Zones RSI coverage system. Before I give you this opportunity, let me show you the features and benefits using the system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You can pinpoint your trades faster so it takes less time. You can get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy anyone can do it. Perfect for experts to diversify their accounts because the 4 Zones RSI coverage system gives you all this. But first, who's this not for? And this is not for those who are trying to get rich quick. Like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this isn't for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. Since you're still sitting here with me, you're taking the time to learn to boost your trading, you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 Zones RSI coverage system, I give you my 20 years experience on a silver platter and is 100% focused on step-by-step systems, instantly accessible, starting with video tutorials where I take you by the hand and you move through the 8 phases of a trade. So I lay them all out and explain each so that you can have a complete system to your approach so that you minimize mistakes. In these tutorials, I also give you my top RSI Power Zones trading setups from years of study and observation with various real-world examples across multiple markets and timeframes. I also walk you through the best entries, exits, and protective stop strategies so that you can extract the most profit from the market using the RSI Power Zones, right? And much, much more. To make it even easier, you're also going to get cheat sheets that you can download and print out and keep right by your trading desk, right? This is like back when I was in high school, middle school. I remember some of those tougher science and math classes. The teachers who really wanted us to learn and go on that scale faster, when we had a pop quiz, they let us bring in a little paper, you know, a little 8.5 by 7 or whatever, little cheat sheet with the formulas or the definitions we needed to expedite our learning, to ace the test and learn faster. So that's what I'm doing for you. So here's one as an example, All right, this is a grid that's going to have exact strategy application for you in it. So you would get a grid like this all filled out, and it's in a packet with many other cheat sheets to help you implement all this step by step, moving you faster on your path to boosting your trading account. Now, you're going to love this, all right? This is the very thing everyone is always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock. Very excited to have that for you here today. So once you log into the portal, you will get to download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like, forever. Are you guys getting this? This is no limit on any of that. So let's say you're just getting started with MetaStock and transitioning off a different platform. You can download it to both until you're up to speed in MetaStock and more. So I have many traders who write in, email me just for the indicator and offer hundreds of dollars for this alone. And I'm giving this to you here as part of the complete system. So I've included everything here for you, right? Video tutorials, cheat sheets to aid your learning, the indicator itself to set you up for success. Only thing you could possibly still need is for me to take you by the hand personally and help you. So would you guys like that? Would you like if I kind of hopped on the computer with you and showed you live how it's done and answered your questions right there on the spot? Really? Are you sure? All right, cool. Because then I'm going to give you everything, including me. Monthly group coaching for life. Once a month, you'll get together online with me personally, and we'll spend an hour together. And I will personally walk you through the markets, doing analysis with open Q&A to help you become the trader that you want to be. This is where you get to bring your tickers and your markets after you've studied them with the RSI power zones and the 4-zone system and ask me, hey, Hima, what are you seeing on this market? Do you see this same setup I do? Let's run the 3 steps on this market, and we do it all together. You get to not only ask about your tickers, but also learn from your peers, which is of high value. Every one of these sessions is recorded and added to your portal for review at your convenience. And we have a calendar in there that tells you when these are, usually in the middle of the month. All right, awesome. So the 4-zones RSI coverage system with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI power zones is valued at $1,997. The cheat sheets so that you can use this daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live, right? This is priceless, but if I had to put a price on it, this is easily $797 for just the first couple of months, because I easily charge $500 an hour for my one-on-one coaching. But here you get me for life. And the RSI Power Zones indicator, available for the most popular trading platforms, including MetaStock, with free updates for life, is valued at $497. The total value is $3,488, and it's worth every penny. And let me ask you, if all the system did for you is help you to trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of this system is $3,488. Because I want to make an investment in your future, because I want you to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. And I'll make it even easier for you. When you visit himaready.com/RSI and invest in this system today, I'm going to give you all this because I want to see you finally succeed in your trading. So I'm giving you our personal 100% satisfaction buy it back guarantee. Right? Take action now, use the complete package for 90 days and wear the tires off the system. If you aren't 100% satisfied with your investment, then I'll give you my money back. I'll give you your money back as my gift to you, because I want you to be 150% satisfied with 4-zones RSI coverage system. After all, my clients tend to stick around a long time and become my friends too. All right, so go out, follow the whole system. I want you to get out there and treat it like a rental car, right? Put it through its places, drive it all over the place, wear the tires off the thing. And if you don't feel you've gotten far more than your investment, Then I will hop on the phone with you, work with you personally. And what I really want is for you to be totally satisfied. And that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488. And for limited time, I'm giving it to you for the simple, easy investment of $297. So go ahead and take action now. You can go ahead to himaready.com/RSI, visit the link to sign up. And let me show you exactly what happens when you join us. So you'll immediately get a login access email with details to enter the RSI Power Zone system at my educational portal. So it'll be the one that says RSI in big blue letters. Now, once you log in, all the training you need is right here under the 4 Zones RSI coverage system, where you can get to it easily. There's even a button that says start here and gets you on a path to learning, and you can move through everything in order, or if you need to hop around, that's fine too. But here are my 8 phases of a trade and how all the education, tutorials, cheat sheets, and more fit into it. Now you might be wondering, what's all this other cool content on here? That's all undisclosed bonuses, and you're gonna love it, okay? We love to over deliver. So you need to take action now because this offer is only available until 10 p.m. Eastern tonight. So go ahead and visit himaready.com/RSI to take advantage of this limited time offer and get my entire system for just $297. Now I have a few minutes here to dive into Q&A. So go ahead, and the questions you guys have been asking or waiting to ask, go ahead and ask me here. I'll give you a few minutes to sign up, and we'll address Q&A as well. So how much coaching is included in the $297? It is lifetime. Yeah, so once a month we get together live and go through your Q&A, we go through your markets, anything you guys have to ask. Like, this is custom analysis, folks, okay? It's like getting a bespoke suit made for the cost of an off-the-rack one. I mean, it's the same great quality of my teaching, just at a really awesome low price. And the recordings of those monthly group coaching calls are added to the 4 Zones portal after each session completes. And we keep an archive of a few months worth at every time so that you can come back and catch up or review on weekends, evenings, whenever works for you. So no, this is not a subscription. This is a one-time investment. And yes, the indicator comes with it. It's not separate. So $297 includes the indicator. So you'll be able to download it and install it from MetaStock or any other system through my portal. And then you won't be charged for any of this again. You have it for life. You'll just get invited to monthly group coaching and be part of the Hima Ready tribe. So I see a question here about my ES analysis. So that is a great way, my Skinny the Mini is a great way to kind of boost what you're learning in the 4 Zones RSI coverage system, because I provide multiple reports a week. So in those reports, similar to the examples you saw here today, yes, I provide specific support and resistance, and I also comment in detail on what the RSI power zones are doing. Yes, you can absolutely trade Globex, Sammy. In fact, that's what I do, okay? So I trade on a 24-hour time frame chart. Now I am in the central time zone, so I don't trade late at night, but when I'm traveling around the world and if I want to trade, the activity's there. And I have traders in Australia, in London, all over that do trade the Globex session of a variety of markets and absolutely can use this indicator. The key is that the market's active. What does active mean? It means it's liquid. It's easy for you to get in and out of your position. Now, in this day and age, there's not too many markets that don't fit that definition. But hey, I don't know, like the next new crypto or something that might come along that 5 people are trading. So I want to warn you and have you be prepared that this is designed to work in active markets. So that pretty much covers most of what we all trade. Yes, this has other platforms. And so since I'm here, very kindly hosted by MetaStock, keeping the attention on MetaStock, but you can go to himaready.com/RSI to see. And yes, we have the other popular platforms that you might have been trying out or transitioning from, such as TradeStation, Thinkorswim, NinjaTrader, and more.
Hima, we do have a question coming out of YouTube that I thought I'd share with you. JP wants to know, wondering if you provide daily signals for futures or daily setups.
I actually do. So this is education here that can work from any trader here in the audience or watching the recording, those of you on YouTube, that wants to trade any market. I happened to start my career, as I said, in futures, started learning the ES like the year that market opened. And I now write the skinny and the mini as a separate service. I do offer a discount to that service for individuals who sign up for the 4 zones RSI coverage system and then want to give that a try right away. So you'll see that information. It's up to you. You know, there's just an offer for this full skinny service that I provide. But yes, they'll see that information once they sign up. If they have other questions, they can write into my team at support@himaready.com.
Perfect. That's all. We had somebody said a little bit earlier, I just had a light bulb moment, but we don't have a lot of questions coming in through YouTube.
Oh, that's awesome. Light bulb moments are fantastic. Yes, that's when you know your growth is happening, your view of how you address your trading business is opening up. I do see a couple more questions here. Did you have more from YouTube, Jeff, or should I get back to what's in the room here?
Yeah, no, go for it. Go for it.
Okay, great. So how do you provide updates? I'm not sure if, Eugene, your questions regarding 4 zones, so I'll start there. So 4 zones RSI coverage system, I come in and do monthly coaching every month. That's fresh, hot new content. And then I will get ideas about a new, better way to maybe explain a concept or a new concept angle that might help. And I'll just go in and put new tutorials or update the cheat sheets, and you guys will just get an email notification. So you don't have to come in and get 4 zones RSI coverage version 2, 3, or 4 in the future for different prices or anything additional. This is it, $297, and you're done. Now, if you're talking about my futures and my research services, then I send emails when the updates are ready. For the ES, because it's my baby and because I want you guys to have that as soon as possible, that's the only one that actually comes right to your inbox in email. You don't even have to log in. If you're a member, it just goes to you. For the NQ reports, for my stock picks and much more, they're all in a portal that you can log into. So Nitin, that's a good question. This is an indicator that plots the RSI power zones so that you don't have to fumble around figuring it out yourself. I teach you to use your eyeballs to find the setups. And with practice, because again, any new method, guys, you should practice on paper, practice in sim before you go live, right? Protect your capital. That's the first name of the game. And so once you practice looking at those setups, you'll start to identify them yourself. Now, I do talk about setups I'm seeing in monthly group coaching. So there you can watch me look at the RSI versus price and draw and point out, and that'll accelerate your learning even more. Yes, in regards to the research service I provide, the reports I do on the ES or the NQ, of course, you can use them for the micro ES or the micro NQ. I have a lot of traders who trade the SPY, but they like seeing my daily ES research because it keeps them attuned to the broad market. Especially in this day and age, not keeping the pulse of the broad market is a very dangerous game. So that's the way that I provide that service to my traders.
It's nice that there are so many different ways you can trade these broad markets these days. You can do ETFs, you can do the ETF options, you can do the futures, you can do the micros, you can do the minis, like pick away. Like
yeah, there's many different ways for every different beginner, intermediate, advanced level, and for everybody in between. And actually for I'm focused here on the RSI offering because I know it kind of helps the most traders at the front end, but those of you who already have an inclination to trade futures or related markets like Jeff just mentioned, I actually just did something in my skinny service called Skinny School. And it's like the deepest I've ever gone. Like I literally, and it's all recorded, it's all in there. I teach you how to use the report, like step by step. I teach you how I'm pulling some of the information from the market. And I've had some calls, like calling highs to the tick. Now that comes with experience, but that also comes with having a system and a method that you use over and over and over. And I'm sure Jeff too can speak to the consistency of whatever you apply as being, probably your best tool in your tool belt.
Yeah, I'd agree with that. Hank Hansen said, I just purchased in YouTube.
Oh, wait, awesome. Maybe I guess that came in off YouTube. I'm not seeing it here, but welcome.
Yeah. Jim's Auto says.
Yeah, I would love to welcome while I'm here on the mic any of our newer members. So yes, I see it there. Welcome, Hansen. Good to have you. And I see some questions to still answer here. If you trade Forex, Ali, this works as well. Again, active markets, or if you're trading some pair that's like some, thing that nobody knows about, I'd be careful. If you're trading any of the major or minor pairs or related futures, you should be good to go. Okay. I see a couple more questions that are more about the futures, which is fine. So I don't really use fib numbers. I use GAN numbers, but I explain that in my skinny school, those of you who decide to go that route. And I publish those reports 3 times a week, minimum 3 times a week for the ES, usually every day, unless I'm traveling, and twice a week for the NQ. And that's because I've figured out the pulses of those markets and what is the optimal time frame to base your study, whether you're a swing trader or a day trader. And again, with the 4 zones RSI coverage system, you can come and apply it to any of those active markets I talked about. I just happened to highlight futures here today to kind of show a different angle than the last time I was here, because some of you might be back from February and a lot has happened in the markets, but still these tools work, and you just have to make sure you study them, follow your risk management, and you'll be good to go. Well, I don't want to hold up our next guest, so I'll stop here. Thank you, Jeff, so much for having me. I look forward to seeing more traders in monthly group coaching live soon, and have a great day, everyone.
Thank you, Hima. Really appreciate it. Great job, too. Jim Ziata says, thank you for your presentation. A. Hansen says, great job. So that's coming in off of YouTube. Thank you, Hima. We'll see you at the really great job. We appreciate it. Okay. All right. And while we're talking, I want to say thank you for Stocks and Commodities Magazine for sponsoring today's event. Give me just a second. I'm just letting Hima go. All right, very cool. Do want to say thank you for Stocks and Commodities. They do a great job of helping us sponsor the event, and we absolutely really appreciate what they do. So I'm wondering if like you're just seeing a huge screen of me, because that's all I'm seeing instead of my slides. Let me see if I can kind of fix that real quick.
Jeff, I can see. Well, now I can see you and your slide.
Yeah. Okay. Good. Okay. Thanks, Stocks and Commodities, for sponsoring the event. We appreciate it. If you haven't got your free issue, get it. metastock.com/traders-summit. So I do want to thank everybody that's taken advantage of the bonuses that we've had today. I do appreciate that. We are kind of a little bit slower than we were. So if you're having trouble getting in earlier, you can give us a call. We're offering the Summit Action Pack. You've got MetaStock Real Time. You've got the Zenith data. You've got the MQ Trender Pro, Wendy Kirkland's Automatic Swing Trader, Barry Burns' Top Dog Trading Toolkit, Vince Vora's Veracity, the 3 months of metastock.com, learn metastock.com, Unleash the Power of MetaStock, 2 years of Stocks and Commodities Magazine, white glove installation, unlimited lifetime tech support. This bulleted list could go on forever. Normally everything on here though would cost about $5,000. Here at the Summit, as a special, we're going to offer it for $2,545. And everything that's not a subscription, it actually comes with a money back guarantee, so it allows you to try it and see how you like it. And you like it. That's why we can do it. 800-882-3040. Chat live with us at metastock.com/saleschat. And let's go ahead and not Hima Ready next. And we did think, let's talk about Steve Primo. Steve has been working with us for a number of years now. He works with a company called Specialist Trading. He does a great job. I like Steve for a lot of the reasons. I like Vince. If you like Vince's presentation, like Steve is very methodical. He takes his time. When he tells you how to do something, you understand it. He's a very, very good lecturer, and we love having him on here. And it's been a while. So Steve, I want to welcome you in today. Let's go ahead and make you the presenter. And I'll go ahead and also unmute your audio. How are you doing today, Steve?
Great, Jeff. Thank you for that intro. And I guess I'm more old school, so maybe that's why we're our methodologies and everything are rooted in simplicity and kind of pattern recognition in that sense.
Well, yeah, we're in for a treat. Everybody that's here, you're in for a treat. And I'm going to get out of your way.
Okay. Thank you so much again. And thanks for everyone joining us today. And welcome to the Online Traders Summit for June here. My name is Stephen Primo. And today I want to talk to you about a simple to follow process for consistency. Because if you really think about it, I mean, that's really what it's all about, right? Becoming a consistent trader. I know so many traders that have made relatively small fortunes and then given it all back. So really what you want to do in order to sustain you is have a consistent method. The only problem is that most of us have been taught, myself included, when I first started trading some 4 decades ago, we were all taught things that were rooted in inconsistency. For example, let me share with you this first slide right here. Here's an example in MKC. Now, the way I used to look at this, and the way I'm sure many of you traders would as well, would say, well, we're kind of in a range market. And we've always been taught you kind of want to stay away from range markets because that's where you get in trouble. After all, you know, a range market is where if it goes down, that's when you sell, and then all of a sudden it goes right back up, right? And then when you want to buy, then it starts to go back down. So a range market is more of a whipsaw market. So that's what we've always been taught. Traditional wisdom tells us to stay away from those type of scenarios. Well, with the process I'm going to be sharing with you today that is extremely, extremely simple and actually makes up one of our most consistent strategies, it actually would have generated a buy signal right here in the middle of that range market that potentially could have captured for yourself 22 points in just a couple of weeks. So all of our methods and strategies are rooted in simplicity, and I'm going to share with you the process for being able to get involved and being able to potentially capture gains such as this in any market and in any time frame. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. About 12 years ago, I teamed up with Proprietary Strategies where we just had one goal in mind, and that was simply to educate traders. So we are first and foremost an educational company. The reason why we focus on education is because it's our philosophy that most traders fail because you take yourself out of the game. What does that mean? Well, it means that you're relying on someone or something else to make your trading decisions for you. Either you go to or subscribe to a signal service, or you watch the so-called trading gurus on TV and find out what they like or don't like, or you even go to webinars to find out what this particular presenter likes or doesn't like in the market, what he thinks his predictions are. You see, that's the way we've all been trained, once again, myself included, but it really doesn't say much, because when you're actually taking your cues from someone or something else, you're basically telling the markets, I don't know what to do. I'm not, educated enough. I don't have enough experience. And why don't you do it for me? And in my opinion, that's a recipe for disaster. That's why we feel that it's the main reason upwards of 85% of all traders fail. So the way to get rid of that is to supply traders with sound fundamental education that has stood the test of time so that you can make your own trading decisions. So our goal is to have traders for the very first time in their life be in charge of their trading destiny, so you can make your own trading decisions. This, in my opinion, is the only, and I repeat, the only way that I've experienced that someone can become a consistent trader, not by blindly following someone else. So that's what we do. That's the gap we fill, and that's what we try to teach all of our students around the world in over 115 countries and in virtually every state in the United States. So I'm going to share with you a real simple process, and you'll see our attention to detail when we're really trying to educate you today. But before we begin, we are first required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results in using this simple process, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different educational information, anywhere from some signals that our strategies have generated to little bits of financial wisdom. So there's lots of great free education. So please feel free to follow us on Twitter. Now, as I stated in the opening statements, we're a little bit different from other companies in that we don't simply spit out buy and sell signals. We don't have chat rooms because we want you to make your own decisions. We don't want to give you any crutches to rely on, because our goal as an educator is simply to teach you how to trade, not to force feed you signals, not to tell you what we think of the market, not to tell you what our opinion is or what the best time frame is to trade. Those are things you have to decide on your own. When I was struggling 43 years ago and my mentors took me aside and shared with me all these things, I said the same thing, probably most of you are saying, like, well, why can't we just piggyback off what you or this winning system is doing? Well, why do we have to know how to do it? Because, I thought the same thing. Why do I have to know? Well, because these things are not going to be around all the time. And plus, everyone comes to the table with different parts of their persona. In other words, someone may be an aggressive trader where they only like to trade, a certain market, and they like to trade 20 times a day. Someone else may be a more conservative trader where they want a really tight stop and they only want to trade maybe once a month. So you have to decide and do a little soul searching to see what category you fall under, and we work with you. And once you decide, then you simply learn the techniques and methods, and we help you put together a great trading plan. So once again, my goal is to teach our traders around the world how to trade with the specialist edge. It's the same edge that was taught to me some 4 decades ago and what has sustained me, and hopefully it will be able to do the same for you. Now, let me share with you what my mentors first taught me when I was struggling on the floor of the Pacific Stock Exchange. I started my career on the floor of the Pacific Stock Exchange, and I was a specialist. A specialist is someone who's not any more special than anyone else. It means that you specialized in making markets in about 50 or 60 stocks. So if you wanted to buy or sell a particular stocks, one of the stocks I made markets in was IBM. Others were Waste Management, US Air. If you wanted to buy or sell those shares, your floor trader had to go up to the trader who specialized in making a market. So I did that for roughly 16 years. 9 of those years I was a specialist, and I traded through the crash of '87 and the bull market that followed. But in the beginning of my trading tenure, I struggled tremendously. In fact, I didn't know if I was going to be on the floor that much longer because nothing seemed to be working. I was doing the exact same things that most of you have been taught, support, resistance, Fibonacci, all the things we've all heard about, volume, moving average, crossovers. But I wasn't getting the type of results that I had been promised. Once my mentor saw how much I was struggling, here's one of the very first things they taught me and said to me, and I'll share this with you. What they said to me was, it's the easiest thing in the world to overcomplicate your trading. Virtually anyone can do that. It really doesn't take a lot of character to overcomplicate your trading, but it's the most difficult thing in the world to simplify your trading. So think of it. Whether you've been trading 20 years or 20 minutes, anyone can pile on more techniques, more indicators, more signal services, more gurus to follow, more blogs to read. It doesn't take a lot of character to do that, but it takes a lot to strip away what my mentors called useless noise. And once you start doing that, though, it's very difficult in the beginning because out of fear, people don't want to change. But once you start letting go of them, then you start to see that actually you start to become more and more consistent. So this is what all of our methods is rooted in, simplicity. Okay, so you're going to be surprised at how simple these 2 rules I share with you today are in effect. But as you do the research and as I show you a ton of examples today, you'll see that they really have a lot of power behind them and they can really help you. So let's begin. Let's start out with step number 1. Okay, and one thing I didn't mention, I know if you have any questions, please kindly wait till the end of the presentation. I'll take all of your questions probably in the next half hour. So we'll reserve the last portion for any questions. Okay, that way we don't have to stop and start every 5 seconds, and I don't want to take the next presenter's time. Okay, all right, step number 1, apply the buy-sell line. I know a lot of you are saying, wait a minute, what's the buy-sell line? Oh, I get it. You're going to sell me some $10,000 indicator that there's a catch to this, right? Not really. In fact, you all have access to the buy-sell line, whether you know it or not, because the buy-sell line is simply the 50-period simple moving average. That's all it is. Now, you have to apply that on any chart you're trading. I don't care if it's a 5-minute chart of the E-mini. I don't care if it's a monthly chart of Apple. I don't care if it's a 4-hour chart of the Australian dollar. It makes no difference. It could be Bitcoin, all right? It makes no difference what market, makes no difference what time frame, but you have to have a 50-period simple moving average applied and plotted on your chart. Now, in order to use this correctly, you have to ask yourself a question before you pull the trigger. You can't be in the trade and then ask this. You have to ask this prior to pulling the trigger, whatever strategy, whatever method you're trading. And that is, where is price in relation to the buy-sell line or the 50-period moving average? I'll say that again. In fact, you may want to copy that down and put it on a Post-it and stick it onto your monitor. Remember, ask yourself before you pull the trigger, where is price in relation to the buy-sell line? And once you ask yourself that, you'll only come up with two possible scenarios, because if price is above, then you should only have a buyer's bias. That means if you have a strategy signal, whatever you're trading, maybe some trading guru said this, he likes this stock. Maybe somebody told you down the street, your brother-in-law says you have to sell this. Whatever it is, if it's above the buy-sell line, the 50-period moving average, you should only have a buyer's bias, okay? Simple enough. And conversely, if it's below, you will only have a seller's bias. I know a lot of you are saying this is too simple. I thought you were going to share with me some secret stuff you have from the floor. Well, this was one of the first things I was taught from the floor, and I use this every day in my personal trading. In fact, I've often told my students around the world, if I were stranded on a desert island and there were only one tool I could use with my trading, it would be this, because this is how powerful this is. Let me show you an example here. All right, let's look at ZM, okay, Zoom. Now, someone looking at this, the way we're traditionally taught with traditional wisdom, and say, okay, well, Steve, this is making lower highs and lower lows, so obviously we're in a downtrend, right? I don't need to be a rocket scientist to tell that. I mean, it's simple to say, right? Well, not really, because what's the first thing you have to do? Plot the 50-period moving average, all right? Now that you've plotted, you ask yourself that question. If you were thinking about buying or selling, you have to first ask yourself, where is price in relation to the 50-period moving average or the buy-sell line? Now, obviously, price is above, right? So are we in a downtrend? No, the overall trend is up. So let's say you had sold right here when it seemed to have this gap down. You sold and you thought, boy, I'm going to be making a lot of money. And you have a couple of nice downward days. Well, how well did that work out for you? Okay. Do you see how this one simple tool will add to your consistency tremendously? And it works on the downside as well. For example, let's look at CHK, all right? Most traders would say, well, Steve, we're in an uptrend. I mean, that chat room I went to loves this stock. The institutions are buying it, so I've got to be a buyer too, right? You don't want to go sell into an uptrend, right? Well, what's the first thing we do before we pull the trigger? I don't care what strategy you're using. It could be one of yours, could be based off the tides of the ocean or the full moon. I really don't care. But the first thing you want to do is plot the 50-period moving average. That's our buy-sell line. Now you ask yourself, where is price in relation to that buy-sell line? Obviously, price is below. So what is the market? Not some guy in a chat room, not some guy in a webinar, not some guy on TV. What is the market, the source of what you're trading? What is it telling you? It's telling you that the overall trend is down. So should you be buying into this? Absolutely not. So you see how you've just increased your odds for consistency by using this simple rule here, okay? Now, does this work 100% of the time? No, it's not. It's not a system. It's not a trading strategy. It's just a really simple but powerful tool designed to get you on the right side of the market. It's a numbers game. We want you to have that in your back pocket. The first thing you do, you have to be on the right side of the market. And it works a good majority of the time. Remember, I use this every day in my own trading. So it tells you the overall trend, all right? All right, so now that we know the overall trend, now that we know whether we should be buying or selling, we can still apply any strategy we have. Let's say we have a strategy based off of fundamental news, okay? Let's say you like to look at earnings or economic reports, whatever it is, it doesn't matter, all right? Now, when your strategy, your system generates a signal, you have to apply step number 2, and that is buy and sell signal bars must close in either the top or bottom 25% of their range. All right, what does that mean? Well, let's say your strategy is based off of an economic report, okay? Now, it's above the 50-period moving average, and you say, okay, so the overall trend is up, and the economic report came out, and it's positive. Now, what you used to do was usually buy at the market, but you know that doesn't work all the time, right? Sometimes you buy and it goes straight down, right? Well, here's what you want. You want to see it close whenever that day is where you get the information where all the requirements line up that generated a buy signal. It needs to close in that top 25%. And why are we waiting for entry for that top 25% bar? Because once again, we're not listening to the economic report. We're not listening to some guy on TV. We're listening to the market, and the market is telling us it wants to go higher on the short term. So now we've increased our odds for consistency because we now have the short term in sync with the overall trend. Okay, there's no reason and no need to overcomplicate your trading by looking at 2 different time frames. I mean, you can if you want, but I stopped looking at that some 4 decades ago. I only look at one chart and look at the overall trend and then the short-term trend. For example, All right. This example in Netflix, we're obviously above the 50-period moving average. And let's look at all the bars that close in the top 25% of their range. So anytime we close in the top 25, this was a high probability, the short term, for it to go higher. Now, there are some obvious examples here where it didn't work, but this works about 75% of the time. We're able to go higher on the short term. Same thing applies to the downside. Let's say your system generated a sell signal. Let's say it's below the 50. So you say, okay, Steve, I'm below the 50 and I can go short, right? I don't want to short above the 50. You want to see it close in the bottom 25%. Why? Well, not because I'm telling you, because this is the way I like to trade and because this is based on some convoluted indicator. No, it's because the market is telling you it wants to go lower on the short term. So now, because you're below the 50-period moving average, the overall trend is down. And now because the bar closed in the bottom 25%, the short-term trend is down. So now you have the short-term and the overall in sync. As we look at this example here in U-Haul, okay, airlines. Obviously, we are below the 50. And look at all the bars that close in the bottom 25%. Do you think the market was trying to tell you something? Remember, the goal of everything we teach and the topic for today is simplicity. Remember, simplicity is what will make you a consistent trader, not complicating your trading. And look at how simple these things are. Okay, you can start applying them to your trading method right now, and I honestly believe they will increase your odds for consistency tremendously. In fact, if you don't believe it, go back and do the research. Go back and look at your last, let's say, 5 or 10 trades. I can almost guarantee you that the reason why you had some losses is because you were buying above the 50, or you were selling, you were buying below the 50 and you were selling above the 50. So you're out of sync with the market. And then when your system or strategy generated a signal, you were out of sync with the top bottom 25%. Now, guess what? These are two of the rules that make up one of our most consistent strategies. In fact, this was the first strategy that my mentors taught me. This is strategy number 4. This is our most, I would say, our most popular strategy method we have at Specialist Trading, and as well our most powerful. There are only 3 rules in it. And guess what? You just learned the first 2. Okay? So we're really giving you a lot of information here. Let me share with you some of the highlights of this method. It's originally designed for traders looking to catch momentum. Now, when I first started trading this on the floor some 4 decades ago, we were in and out using this method for maybe 2 to 3 minutes because we were day trading on the floor of the exchange. But we've designed it and developed it so that you can stay in this trade days, weeks, even months if you'd like, okay? You can apply it to any market, any time frame, and any direction. So the examples I'm going to be sharing with you today are really mainly focused on stocks, but I like to use this trading E-mini futures intraday. We also have Bitcoin traders using this. We have commodity traders using this. We also have Forex traders. So it makes no difference what market, okay? I don't want you to think because you'll see a majority of the examples on stocks today that it only works on stocks. Now, it's a pattern recognition strategy. So we're basically looking for specific patterns to be met. And you've already learned 2 of them. There's just one more that I can't divulge. It wouldn't be fair to the students around the world who've already purchased and are trading with this method if I just all of a sudden gave everything away for free. And they say, hey, wait a minute, how come you're doing that? Why didn't you just tell me? I would have waited. So I can't give you the 3rd and final rule, okay? But I can tell you it only uses one indicator, and you already know what that is. It's the 50-period simple moving average. All right, now, let's go back and look at this again. Remember we were looking at Netflix? Here are the 2 steps I originally shared with you, the first initial rules of strategy number 4. Now, we are above the 50. Here are all the bars that closed in the top 25% of the range. So those are the first 2 rules of the method. Now, when you apply the 3rd rule, which is a pattern recognition, and we teach you what to identify, look at how it filters out the best setups. So these are the actual strategy number 4 buy signals right here. You have 2 of them. And look at how they were right at the bottom. Even though this is not guaranteed to happen all the time, look at this nice buy signal you had here, and then another one here. Now, in the course, we teach you different ways to exit. We teach you different ways to enter. We teach you different ways to place your stop. But the setups are all based on the same rules, okay? So remember, our goal is to teach you so that you can decide how you want to enter. You can decide how you want to exit. You can decide how you want to place your stop. Our credo is that no 2 traders should ever trade alike. So that's why these are not systems where everyone's told to enter at the same point, exit at the same point, protect yourself with a stop at the same point. No, I mean, to me, that's a recipe for disaster. You have to trade according to your own means. So this is the job we fulfill. We supply you with upwards of 6 or 7 entry points, 6 or 7 different stop placements and exit points so that you can decide. It's almost like a buffet. Think of when you go to a buffet, when things finally open up again. I know we haven't been able to go to buffets in a while, but when we finally get the ability to go to a buffet again, not everyone picks the same entree. Not everyone picks the same appetizer. Not everyone picks the same drink or dessert. And you shouldn't. I mean, what if you were told you had to all eat the same thing when you went into a buffet line? Everyone likes to pick whatever makes them feel the most comfortable, what they like getting out of a meal. Some people like to get a big salad. Other people don't even pick a salad. Some people don't choose dessert. Other people like me, make the dessert a large portion of the meal. Does that mean that one meal is better than the other? Absolutely not. It means that you're eating according to what satisfies you, and that's what makes you feel comfortable. Trading is no different. You have to find your own way, and this is the job we fulfill. This is the void that we fill as well. Now let's look at this downward example in you all. Remember, we are below the 50, and then we have all these bars closing in the bottom 25%. Now remember, this is not a strategy. These are just indicators. These are just the first 2 rules. How does strategy number 4 pinpoint and filter out the best signals? Well, with that one last pattern requirement, and guess what? That was the strategy number 4 signal right there, right at the very top. You could have shorted, you all in February. Okay. Remember, this is not based off any news. This was done well before the pandemic came into play. This is not based on any earnings. It's not based on any support and resistance. It's not based on what the institutions are doing or any range markets. Remember, these are all the conventional wisdom things I was taught some 4 decades ago. And if they didn't work for me 4 decades ago, what makes you think that they're going to all of a sudden miraculously start working now? The thing that turned my trading around was to keep things as simple as possible and learn how to do one thing. Listen to the market instead of an outside source like some so-called trading guru or even some guy on a webinar. Learn how to listen to the market and then welcome that consistency that you've been looking for. All right, so let's show you some recent strategy number 4 examples. Remember, we're going to have a propensity here to show you a lot of stock examples, but don't think that most of the, this method only works for stocks. It can be applied to any market, any time frame, and any direction. Okay, here's an example now in SMPS, all right? This was in May coming into June. Kind of looks like a sideways market. We have a total of 4 signals generated. We're above the 50 period moving average. These were all buy signals. Now, nothing much has happened, sure, but every once in a while, it takes a little time for it to kick in. And ultimately, depending on how you wanted to trade this, had you taken the very first signal, that's potentially 33 points you could have captured. Remember, we furnish you with different exit levels for you to decide. Some of our traders like to take the most conservative and get out with a couple of points. Others like to stay in for as long as possible. So it's entirely up to you. As you can see here, while it was going up, if you missed these signals, guess what? There was another one that was generated along the way. Now, here's an example in Facebook. Okay, this was also in May coming into June. Looks like the price of the stock is basically going nowhere, going sideways, right? Well, strategy number 4 buy signal was generated on the 14th of May. It's about a month ago. Potentially could have captured 24 points in the next week or so. All right. Here's a great example of the way most traders trade, myself included. All right. Anyone like to trade candlestick patterns? Okay. I trade candlestick patterns. In fact, we have a course developed and designed for trading candlestick patterns, but it's our opinion that most traders trade them incorrectly. For example, this is the way I was taught. We would look at this and say, hey, well, candlestick patterns are reversal patterns. So I'm looking for a reversal pattern. As we can see here, we've been going lower. And what do we have? That's a bullish engulfing pattern. That's one of the most bullish things you have right at the very bottom of a downtrend, right? So let's say you step in and buy. Well, how'd that work out? Okay. This is why traders are inconsistent, because we're relying on things that really show no high levels of consistency. Now, what's the first thing we do? And this could have helped you to not lose money on this trade. The first thing you do is apply the buy sell line. Now, when you had that bullish engulfing pattern buy signal, where was it? Was it above the buy sell line? Because if it was above, then I would say go ahead and take that trade. No, it was below. So this was telling you right off the bat, using this simple tool that you all have access to right now, don't take this trade. Now, if you traded strategy number 4, You also know the first two rules. You would have seen that. Well, okay, I'm looking for bars that are below the 50. We already found that out. I'm looking for bars that close in the bottom 25%. And then the last rule would have filtered out and seen that there's a sell signal right there. You could have potentially captured 20 points. This is why the majority of traders fail. You're out of sync with the market. It's like you're swimming upstream. Once you learn how to listen to the market and swim with the current at your back, it's so much simpler to trade. All right. Here's another example of how most traders trade. Okay, JBHT. Doesn't look like anything's happening. In fact, it looks like it's going sideways to lower. But where is price? Price has always been above the 50 period. That little sell-off was actually a buying opportunity. A strategy number 4, buy signal was generated. Potentially, you could have captured 21 points. Okay. Now, we don't know it's going to go up 21 points. It's not like we have some prediction on where to exit. We just give you different options and different variables. It's up to you to decide. Once again, you could have exited on the first profit you had on this first close. You could have ridden it all the way up or still been in the trade. It's up to you. Remember, you make the decisions, not us. A good mentor teaches you how to trade, but does not trade for you. All right, now unfortunately, here's the persona that most traders fall into. It's been my experience in trading for 43 years. Most traders like to trade and play the victim game. They're always saying, gosh, I was a day late and $1 short. How come I didn't find out about this? This is terrible, because as we look at mRNA, the stock has been going up since February and March. But at this point right up here, there was favorable vaccine use about the coronavirus, that they were coming out with a vaccine, and it caused the stock to gap up tremendously. And most likely this is the reason why it had been going up. But traders always like to say, gosh, I heard about that news. I punched up the stock and I said, oh, I can't buy it now. How come I never find out what these stocks are? I would have loved to have bought this. Well, this is why we're educators, so we can give you the information so that you can make your own decisions. Because right off the bat, if you applied the buy-sell line, it was telling you months in advance that this should only be looked upon as a buying opportunity. Why? Because price is above the 50-period moving average. So there was no secret. You knew that you should not be shorting this. Now, if you applied strategy number 4, guess what? In the middle of March, when the price was roughly about 25 or so, a buy signal was generated right here. So you could have taken advantage of this. Now, potentially you could have captured 60 points. We're not saying you would have. Maybe you would have gotten out with a couple of point gain. Either way, it doesn't matter. But the point is, the market was telling you it wanted to go higher. You don't have to wait for news. In fact, I stopped looking at news some 4 decades ago. I haven't looked at the news since then, and it hasn't in any way, been detrimental to my trading. In fact, it's elevated my trading, because once again, those things got in the way and overcomplicated my trading. How many times have you heard a great news event and you think, wow, this is really bullish, and the market goes straight down, or the stock or future goes straight down? Or the opposite, you think it's terrible news and it goes straight up, right? So it's too subjective. It's too difficult to find out. Remember, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that, but it's the most difficult thing in the world to simplify it. How about this? It's a little bit more advanced example here in EHTH, because for all intents and purposes, we were originally below, but then we had 1, 2, 3 closes above. So we should be in a buyer's bias. But then look what happened. We had a bar and we had 1 bar close below. So this is a little bit more aggressive. You'd like to see more bars than just 1 close below, but it met all the rules, and the stock went down 17 points in the next 2 weeks. As we look at ADSK, excuse me, once again, we have a couple of signals right together, a cluster, and this was coming into June. 55 points that potentially you could have captured coming into the first week of June. If you missed those first 2 in that cluster, you could have taken advantage of 1 right in the end of the last week of May. Okay, here's another example in eBay. Once again, most traders say, gosh, how did I know, why didn't I take advantage of this? How could I have known to get involved in eBay? Well, remember, the market tells you what it wants to do. It's just up to you to learn how to listen to it. So most of the time we're looking at, well, gosh, this is terrible news. This is terrible news about the economy. It's terrible news about what's going on in the world, but the stock keeps going up, right? So rather than follow that, follow the buy-sell line. And we knew as early as April, right here, when we had consecutive closes above that, well, we want to be a buyer of this. Then we just apply the last 2 rules of strategy number 4, and we see that there were a cluster of buy signals all along the way. Had we taken these first 2, we could have potentially made 11 points coming into the first week in June. All right, here's another way I personally used to trade. I used to always go off support and resistance. I used to trade with the institutions when I was on the floor. In fact, they used to give me orders to enter in the book. And I was always taught when I first started trading that the institutions, since they have so much money and capital behind them, they're never wrong, right? So you should just piggyback along with the institutions. So I would look at a chart like this and say, well, wow, this is major support. This is where all the big banks and the money managers and the institutions are buying here. So I want to be a buyer too, right? And then all of a sudden, excuse me, my mentor said, Steve, why are you listening to these things that show no levels of consistency? Have you ever looked at the record, the track record the institutions have? And then I started to, and I said, these guys are no better than anyone else. I mean, most of the times they would enter orders and then they would lose money in my book. And so I said, yeah, you're right. They don't really have that good of a track record. So why would I even consider following it? And I then learned how to apply this easiest and simplest tool. Before that, how well did that support hold up? If I had applied the buy-sell line, I would have known in advance not to even think of looking at that as support, but looking at that as just a sideways market before we headed lower. Now, once I applied the rules to strategy number 4, look at those. Instead of support, they were great selling opportunities that I potentially could have captured 40 points in ALK. All right, here's another example. All right, as we look at Nike here in May coming into June, once again, myself included, would say this is a range market. Every time you buy, it goes down. Every time you sell, it goes up. You don't want to get involved in this market. Wait for a breakout. Well, you don't really have to, because sure, it may be going sideways in an overall uptrend, because where is price? Price is above. So the overall trend is up. So every time it's sold off, you want to be looking at that as a buying opportunity. You add the rules to strategy number 4. You see a cluster of buy signals there. 18 points potentially you could have captured. These are all relatively new setups that happened within the last month, some within the last couple of weeks or so. Here's another example as we look at ASML, all right? Once again, price is above the 50. Look at the 3 signals there, right at the bottom in each and every one of those little small sell-offs. Okay, another example in a little bit more of aggressive trade, because price was below the 50, but then all of a sudden we have one close above, right back down below, but now we have 1, 2, 3, 4, 5 closes above. So that's enough to tell us that the overall trend is up now. And it doesn't look like anything's been happening, but we have a strategy number 4 buy signal, 25 points coming into the first week of June. Potentially you could have captured. Here's another example. Now, even though it looks like this stock has been going higher, ICUI, it's been below the 50. So we don't want to participate in this rally. We want to look at it as a selling opportunity. And once we get to that high range, we have 3 sell-offs. I mean, it should be 3 sell signals occur, and then we had a sell-off of 20 points. So as I said, just because price is below the 50 does not mean it won't bounce. But we want to view these with a different mindset from a seller's point of view as opposed to a buyer's point of view. All right, now this is the oil fund, USO. Now I want to go back a little further, back to January and February. A lot of people were stunned. Oil has recently started to bounce a little bit or show some firmness, but in the beginning, everyone was so stunned. And every day you would see in the papers, oh my goodness, it's amazing how low oil has gone and all the oil services and all the funds. I mean, how would we have known this? This is unbelievable. Remember, once again, I stopped looking at economic reports and news 4 decades ago. How did I know that oil was going lower and that our students knew as well? Because you apply the 50-period moving average. And in January, we were below right here. We had consecutive closes below coming into February. So until we had consecutive closes above, there's no reason to even consider buying anything related to oil. And on top of that, look at the sell signals that strategy number 4 generated. You could have taken a potential of a 80-point sell-off in a USO. So see, trading is simple. It's the trader who makes it more complicated than it has to be. But once you get out of your own way, that's where that consistency starts to come into play. All right, here's another a little extreme here. ADP is below, all the bars are below, and then we have 1 closing above. So for the most conservative traders, we wouldn't say this is something you want to get involved with, but more aggressive traders say, listen, it meets all the requirements, that's enough for me, and it rose 22 points in the next 2 weeks. Here's an example in NTES. Looks like the stock is headed sideways to lower, but as you can see here at the very bottom, we're above the 50. Here's the strategy 4 buy signal. 45 points in 1 week. This was just like a week or two ago. This just happened very recently. As we look at Disney, DIS, we see here that we're kind of going sideways, but the last consecutive bars have all been above the 50. We have a cluster of 2 buy signals, and coming into June, 22 points. And if you miss those, there was another one right here at the bottom of this 2 or 3 day sell-off. Now, this is something I would not recommend. We see Hertz here, HGZ. We all know that it has recently applied for bankruptcy, and a lot of traders use this simple. This is something basically just to show you how you could apply the buy-sell line. A lot of traders like to use this to get out of let's say you have a position in something that you don't want to be in. Now, looking back in hindsight, let's say you had Hertz in your long-term portfolio. How would you have known to get out even before the news came out that they were filing for bankruptcy? Well, you apply the 50-period moving average, and you know well back here, excuse me, well in advance the stock was going lower. You could have exited. And if you wanted to fine-tune your exit points, you could have applied strategy number 4, and instead of going short, we're not going to short a $3 stock, you could have used any one of these as an exit to your long-term position. Here we have an example in YY. Once again, this is just very recently coming into June, and this a week or so ago, another buy signal was generated. Potentially could have captured 30 points in this. And then we're looking at NKLA. All right, been a lot of talk about this stock, how it just shot up like crazy. Once again, traders love to play the victim game. They love to say, gosh, how come I couldn't find this stock? Well, how could I know about these things? Well, all you would have to do is just scan for stocks above the 50-period simple moving average, and then scan for the stocks closing in the top 25%, and then apply strategy number 4. And there was a buy signal. This was in May, on May 19th, when the stock was selling roughly about $23. Went up 65 points in the next month, okay? Up until last week, roughly. Now, this can also be applied to very inexpensive stocks, okay? Here is roughly a $3.50 stock. It went up 100% in 3 weeks. So I don't want you to think that this can only be applied to the expensive Netflix and Facebook stocks, but if you're interested in the expensive ones, ARGX, $150, $160 stock, generated a cluster of buy signals here coming in before June, and then potentially could have captured 90 points. Still, if you want to go even higher price stocks, well, you want to maybe purchase some calls. It's up to you. Maybe you want to buy an odd lot. Amazon generated 3 signals. Had you taken this very first one in the end of May, potentially could have captured 300 points. So I've just showed you a ton of examples, and these are all recent. You know, I go to webinars myself, and I like to see what other presenters are presenting. And usually they'll present examples like this, and I go, wow, this looks pretty good. And then I'll see that it was like maybe 6 months to a year ago that all these buy and sell signals took place. I always like to teach my students things that have happened relatively within the last month, more likely within the last week or two. And you can all see these are all recent strategy number 4 signals that you could have taken advantage of if you were a member of this course. Well, let's recap, okay? Regardless if you want to become a member of this course or not, you should apply the buy-sell line. This is part of the process that will really help you to become consistent. Remember, the buy-sell line is the 50-period moving average. And always ask yourself, where is price in relation to that? If price is above, you will have increased odds for consistency if you only apply buy signals. If price is below, you will increase your odds for consistency tremendously if you only have sell signals. Makes no difference what method or strategy you're using. Try it. Go back and research, okay? Now, whatever strategy or signal you're using, don't enter until it's confirmed with the top bottom 25%, okay? So let's say your system is based off the news. Makes no difference, all right? But the day that all the requirements come into play, that bar closes in the bottom 25% of its range, even though it could be above the 50. I wouldn't take that, all right? We would suggest not taking that, because how many times have you bought something and it keeps going lower and lower, right? Most of the time it's because you didn't use the top bottom 25% rule. Wait for the first bar that closes in the top or bottom 25%. That's the one you should use as your entry bar, okay? And then lastly, you saw that these are extremely simple but very powerful tools that we use, and they apply as the first two rules, I should say, to strategy number 4. We have one more rule that I'm sorry I couldn't share with you, but that really filters out all of the excess signals and really fine tunes and pinpoints these really nice signals that I just spent a good portion of sharing with you. So before you ask me questions, I want to ask you one, and be honest. Ask yourself, do you think this simple process can help your trading for the remainder of 2020? I mean, think of it. We're already halfway through 2020, all right? Do you think this, what I taught you today, can increase your odds for consistency? Think how simple this is, how you could add this to your trading. Well, I think your honest answer is yes. So we have a great offer, a great attendee discount for all the people in attendance today. This is our Online Trader Summit discount for strategy number 4. All right, we're going to offer you strategy number 4, instant course access with detailed instruction. You're going to learn all the entries, all the exits, all the stop variables, and you'll get the complete course rules for conservative as well as aggressive version of trading. Okay, now don't be fooled by the graphic here, because when we first started teaching this, remember, my background is in stocks. I used to just use this with stocks, but our students have told us over the years that you can apply this to anything. It can be immediate futures, can be commodities, currency pairs, and it doesn't matter what time frame. You can be a tick chart trader. You can be a monthly trader. It makes absolutely no difference. So we're going to offer you strategy number 4, but we're also going to throw in some extra bonuses. Here are the 4 extra Online Trader Summit bonuses that we're going to throw in this great discount. The first one is we're also going to give the strategy number 4 add-ons for MetaStock. So in other words, you'll learn in our online course all the rules, everything on how to trade, but we're also going to throw in the add-ons, which will automatically generate the up and down arrow. So you can use that as an educational tool to check your work to see if you properly identified a strategy number 4 signal. But we're not going to stop there. We're also, bonus number 2, going to throw in our full Secrets of a Stock Specialist course. This is a 3-hour video seminar. Some years ago, I was asked to be the head speaker at a convention in Denver, Colorado, where I spoke for 3 hours and gave out many more different edges and ways in which to trade, along with another strategy as well. Well, they recorded the video and we have access to it. This is a near $1,000 value. We're also throwing this in. This is also yours as well. But we're not stopping there. Bonus number 3, you're going to get a PDF version of my book. I wrote a book entitled Secrets of a Stock Exchange Specialist, where I go into detail, almost on a trade-by-trade basis, of what it was like to trade during the crash of 1987. Remember, I was on the floor making markets during the crash of 97. That one-day drop was comparable to a one-day drop of about $4,000 or $5,000 or $4,000 or $5,000 points. And you know, a lot of the traders I know got entirely wiped out. In the book, I go through a step-by-step, encounter of how I traded during that on my, experience while trading on the floor of the stock exchange. And lastly, bonus number 4, we're going to give you our Secrets 2.0 course. This is where we take it up to the next level. We give you more advanced different ways and edges in which to trade the market. So this is an amazing, amazing offer with all these different bonuses. You see what their all the costs are for what they value is for many of these bonuses. So let's break down what our special is. Okay, you're going to get strategy number 4 with all the bonuses. Okay, you're going to get the add-ons and my PDF of my book. Here's our online summit special. Now, usually if you purchase all these separately, it would cost you over $3,100. Okay, we have a great offer for all of you today. We're not going to charge you this. We're going to go with a magical number that I'm sure you've all heard many times today, for $297 for a limited time only. You'll get all of this. Okay, now one thing I didn't mention as well is that not only are you saving close to $2,800, but you're also, with this, you're getting educational correspondence. You see in the very bottom there of the list. That means you'll get my personal email address. You can contact me whenever you'd like, during the weekend, in the middle of the night, during trading hours. Ask me any question about any of these, any of the bonuses, any of the different insights and ways in which to trade strategy number 4 for different markets or time frames, and I will get back to you as soon as possible. So it's almost like having your own personal mentor right there with my personal email address. So all of this is included for just $297. I can almost guarantee that a good majority of you lost more than that this past couple of weeks or so with the market. So you owe it to yourself, really, to take this course, because a year from today, you will have wished you became a member of this course. We have students telling us that we've presented this before in the past. I believe last year we presented this, where they said, Steve, this has really turned my trading around for the very first time. I'm consistent. So this is what we want to do. This is our goal, to make you a consistent trader. Take advantage of this great discount, this great offer. And here's how you do it. Contact my sister site, which is Pro Trader Strategies. I developed all the courses with them. They're in charge of all our pricing, and you can call them directly, I would say, if you have any questions, at 310-598-6677. Now, that link you see at the very bottom will take you to the sign-up page. It'll also take you to more information about this online special. I believe it was just posted in the chat box on the GoToWebinar column on the far right. So if you want to click that on, that's a live link, and you'll be able to get more information, okay? I believe we have about 5 or 10 minutes left for any questions. So as I promised you, I'll leave this information up here, and I'll take any questions you have. Let me see here. It says, Derek says, what do you mean by, how do you get the 50-period simple moving average line? Okay. Well, the 50-period simple moving average is probably on, it's on any platform, on the MetaStock platform. It's just simple there. It's right there on the top indicator box. It's just right there under moving average. And you just format it to say 50. It's a simple moving average, and you just want to look at the number of periods, and you can define it in any way you want it to look. It doesn't have to look the way mine was. It can be a straight line. It can be, dotted or dashed, could be a different color, okay? But the main thing is, remember, you want to have it plotted. I see some questions here that people are saying, well, it doesn't matter what time frame, and can we use it? Let me backtrack here. Someone was saying 50-period weekly or daily data. Well, remember, the 50-period is based off of whatever time frame you're looking at. So in other words, if you're looking at a weekly chart, then it's 50 periods. It's an average of 50 weekly charts. If you're looking at a 5-minute chart, it's a 50-period moving average of 50 5-minute charts. So it's just based off of the time frame. Remember, as I stated in the opening statements, there's no need to overcomplicate things. You don't have to look at a higher time frame to find out what this smaller one is doing, or vice versa. Just whatever time frame you're looking at. If you're looking at a daily bar chart, then you want a daily 50-period moving average. It's that simple, okay? So it's really, really simple. And like we said, go experiment with yourself. If you thought that this presentation was just too simple and was a lot of bunk, I can almost guarantee you that your eyes will light up when you see how, if you apply this to your last 5 or 10 trades, how this could have helped you, okay? Will this work through earnings reports? Well, once again, there's no statistics involved in anything that we do, because we're an educator. We're not giving you any systems that have to work, but all I can tell you is my personal experience. I stopped looking at earnings 4 decades ago, okay? I just don't look at them, and I use this on an everyday basis. Now, we have traders who use this in conjunction with their fundamental analysis. We're not here to tell you how not to trade. We're only here to give you information to enhance your trade. So if you want to use it in conjunction, it's entirely up to you. But it's been my experience, after seeing, let's say, an earnings report comes out, and let's say the stock goes straight down, okay? Most of the time, in my experience, that stock has already been below the 50-period moving average. Or if it goes straight up, if there's tremendous report or tremendous announcement, most of the time the market's been already above the 50-period moving average. So it's just in sync what it's already been doing, okay? Let's see.
We have one out of YouTube, if you want to.
Oh, sure, yeah, I'll take that. That's great.
Merle wants to know, do you really read emails and respond in the middle of the night?
Yeah, I do. Trust me. You can ask, Brett, you can ask Brett. Sometimes I'll send him. Brett is the founder of Proprietary Strategies. I will be sending Brett emails at 2 or 3 in the morning. So it just, it goes back to my, when I worked on the floor, we had to be on the floor sometimes at 4 a.m. So I'm used to getting up early. And also we have a number of members that are in Europe in different time frames, and they're sending me, according to their hours. It's in the middle of the night, so sure. In fact, I was answering emails before this presentation today on the weekend. So yes, I actually do that.
Okay, that's the only question we really have out of you. I do want to say, I do want to read this out loud from GoToWebinar that you can probably see it. Thank you for your valuable presentation. I really enjoy it. Thank you. Thank you very much for the excellent presentation. Oh. That's like 3 thank yous in one comment.
That's a lot of thank yous, yeah.
Yeah, that's the kind of gratitude I can get behind.
Well, one of the things we like to do that we're extremely proud of in our presentations is we always want to give you some educational information. So whether you don't want to become a student of mine or not, we always want to leave you with something. So these 2 edges I shared with you, the 50-period moving average and top bottom 25%, those are things that I really feel strongly that can increase your odds for consistency. I really do. I mean, so even if you don't decide to become a student of ours, take those and use them, and they'll really increase your odds. Now, strategy number 4, through our testimonials, from students around the world, is our most popular and powerful method. So it's a great offer, and on top of that, you're getting all these bonuses. and you're getting my personal email address. So this is a great offer for only $297. I can't think of a better way to increase your odds, okay? And it's extremely simple. It is really something that is not very difficult to learn. People are saying, when does this system not work? Remember, this is not a system. Remember, a system requires that everyone trade the same way every time. This is a strategy. A strategy is rule-based, about 60 or 70% rule-based, but about 30% left for discretion. The discretion means where you want to enter, where you want to exit, where you want to place your stop. So where it may not work for someone, it may work for someone else using the exact same setup. For example, let's say there was a buy signal in Apple, okay? Now, one trader may want to say, you know what? I'm going to buy at the market on the opening the next day, okay? Another trader may say, you know what? I'm going to use one of Steve's more conservative entries and place a limit at a lower designated point that we teach you in the course. They're both okay. It's just how you want to do it. Now, let's say the stock gaps up and the trader buys at 5, the first trader buys at 5 points higher, okay? And the stock starts to sell off. He says, oh, wow, I did a wrong thing. So he sells and exits with a 3 or 4 point loss, okay? Just starts to get too scared. Well, that's his own decision, but he made the decision of buying at the market as well. Now, the other trader waits and it comes down to his limit and he buys. Now, 2 or 3 days later, the stock goes up, okay? Now, it wasn't as if the signal was bad. It was just your choice and how you decided to trade it. So really, ultimately, the results you get are due to the research and the paper trading that you put in and seeing what best works for you. The signal can be traded multiple different ways. That's why nothing we have is back tested. Trust me, I used to teach and trade systems that had research back testing going back 20 years, and they had phenomenal numbers, phenomenal results. And in 2008, each and every one of those systems blew up because the market changed. So I don't put a lot of faith in everything being 100% rule-based. I think you need a little bit of room for discretion and for your own insight, okay? Very simple, easy to follow. Thanks for the information. You're more than welcome. And like I said, we're not here to tell you that you have to trade this way, but because we gave you those first 2 rules, I really suggest going back and checking out those first 2 rules and see how they could have helped you. I can almost guarantee that you would have increased your results by using this. And if you start to see that your last 10, 20 trades really could have improved, then there's no reason not to become a member of the strategy number 4 course and take advantage of this, okay? Because you've just gotten the first 2 rules of the course, okay? Yes, this is a MetaStock webinar, but yes, you can apply it to other platforms, but we're here promoting MetaStock today. So it works great on MetaStock, and you see all the examples were here done on the platform. So it's very simple, it's very easy. You can use the scanner, you can, it's just really simple to apply, and we highly recommend it. And the system, the process is very simple as well. Well, I think that's about it, unless there are any other questions on YouTube. I just want to thank Jeff for inviting me once again. Great crowd here today, great audience, and I really look forward to all of you becoming students of mine in the strategy number 4 course. Thank you so much for attending.
Thanks for coming. Great job today, Steve. Appreciate
Thanks,
it.
Jeff.
All right, we'll see you at the next one. That's great. Okay, let's go ahead and I'm going to go ahead and give me a second to kind of reorganize everything right here. All right, there we go. Okay. All right, great job. We hope you're enjoying everything. I think it's a great day. I think we're doing great today. So I do want to remind you about the Trader Summit Action Pack. Again, it's normally $4,989 for all of this individually. Collection of some of our most popular add-ons, our data, everything that you need to get started. Give us a call, 800-882-3040. Chat live with us at metastock.com/sales-chat, and we can help you get set up with that. Do want to thank Stocks and Commodities Magazine for being awesome sponsors of the summit for so many years. They do get a free magazine. Go to metastock.com/traders-summit. Fill in the registration form to register for today's event and say, yes, I want the free magazine, and then sign up for any of the other bonuses that you want as well. And they are a great sponsor. We really, really do appreciate the support that they give us. We are offering, if you just want to try out MetaStock, the award-winning software that's been rated #1, not 25 years in a row, 27 years in a row. We can do that as well. Just give us a call, 800-882-3040 or metastock.com/saleschat. So in any case, our next presenter is a good friend of mine, and I almost struggle to kind of figure out the best way to introduce you to Oscar Carboni. Oscar is a force of nature. I think I'll leave it at that. He's from Vegas. He does an OmniCamp that's in Vegas, and he's one of the most entertaining speakers. And so let's go ahead and bring him on here. Oscar, how are you doing today?
Jeff, can you hear me?
I can hear you.
Very well. Show my screen. And can you see the video?
We can see live with Oscar right now, and we can see your face. Everything's loaded in. Everything's looking good. How would you introduce yourself? Since I was having a little bit of a hard time. Force of nature, I thought, was probably the strongest introduction I've given today.
I've been told I'm an anomaly, if that helps.
I know you're entertaining, and I'm interested to see what you've got to say. So I'm just going to get out of the way. Thanks for coming today, Oscar. It's good to have you here.
Jeff, thank you so much. One question, can I move the camera off of my chart so I don't see it in front of me? Right now I see the camera on top of my chart. That will not disturb what you guys are seeing, correct?
Yeah, it should be just like a window. I usually throw it somewhere where I don't have to look at it.
Then I think we should be ready to go.
All right, you're up.
All right. First off, MetaStock, thank you so much for inviting me. Traders, my name is Oscar Carboni. I have been working with MetaStock since I'm 18 years old. I have used everything on the street that's out there extensively. Nothing could ever take me away from MetaStock. Their tech support, everything about them has been fantastic. Jeff, thank you so much for having me. Scott, everybody there, appreciate you guys, and keep doing what you do. You've helped this industry greatly. So again, I am Oscar Carboni, and I started literally 39 years ago down in the trading pits when I was an 18-year-old kid. And, you know, I quickly jumped onto something called technical analysis. And when I started in the business, I'm going to tell you right now, I'm going to teach you some really simple techniques today that Wall Street uses. And if you want to know somebody who might know whether what Wall Street uses or not, I've been working there since 1982. My last trade in the pit was 2006 because the floors went electronic, and I've been trading and doing the exact same thing ever since I left the trading pit. I opened up the day I left the trading pit, maybe a month later, I opened up a trading room. And then that trading room, I stood around pros all day long, and we made jokes and we discussed markets. And when markets moved, we went trading room, which is my pit. I just replaced my pit. The room is free. There are no credit cards required. In fact, don't get nervous. I'm not here to sell you anything. I don't have anything to sell you. I do run an OmniCamp, which I only accept 3 students 4 times a year. So it's very, very limited. And there are a lot of you here. So many of you would never make my camp. It's something so exclusive. I do not put it on the internet. I do not broadcast it. I never fill a room with anybody. I only hand choose 3 traders 4 times a year to join me live in Las Vegas. And I'll show what I'm capable of and what technical analysis is capable of. So very interesting things I'd like to go through with you right now. And the trader before me, he kept saying something all along that absolutely is true. Simplicity. He was correct. You must be simple in your approach. And I'm going to show you some fantastic, simple techniques. But what I am here to tell you is that the chart before your eyes and any chart that you look at is a visual look at all the news, all the reports, inside information no one's supposed to know about, what the government's going to do, what they did to, and traders' reaction to such is all built into this chart right before your eyes. You do not need to listen to the information coming from the internet. You do not need to listen to anything. The chart will tell you what's coming next. Now, the thing about that is you need to know what they're using on Wall Street, the street itself. You need to know what they're looking at in order to call your charts properly. And I kid you not, I am a master at these techniques that I've learned on Wall Street. I've studied with the likes of Pete Stottlemyre while he was using his market profile. I've studied with C&D Commodities, which is Richard Dennis, Carolyn Dennis, with the Turtles. Wilbur got sent in from Chicago to New York, and I traded with him and studied with him. I went to the New York Institute of Finance and studied under John Murphy, the master of all masters. And that's when I was just getting warmed up in this business. And what I'm here to tell you is that if you read this chart correctly, you will make the best calls anyone has ever seen in your life. Now, we've got an hour together, and I've got some time. So what I'd like to do is take you through a little bit of the past so that you can. Street makes fluff out of. They make things complicated. What I'm going to do is I'm going to show you something that people from Wall Street would never, ever, ever want you to know. And that's this. It's not all that complicated, kids. The algorithms, you know what they're built from? This chart right here, or any chart. Algorithms come from the information on that chart. So they turn it digital. And you can look and see exactly what the high and low is and what the open and close is. They take this very same information and put it in these really tricky things that scare everybody. They call them algorithms, and the street's got their methods. Well, I'm going to show you what the street looks at. Now, there's many other methods that the street uses, but I'm going to show you the biggest ones, the easiest ones to spot, and everything I show you today you can use moving forward. Now, just because I say I'm good at this, I can be talking the birds out of the trees to you right now. So let me show you. If you'll indulge me, I'm going to show you a couple of quick videos about what I've been able to do in the past with technical analysis. Then I'm going to show you what we do right now with technical analysis and my Omni, Oscar's Market Navigational Indicator, which, by the way, is not going to be shown here in this webinar. It only gets shown here at OmniCamp Live, and only the three of you. I'm going to show you a lot of great techniques, but you're not going to learn the Omni here today. That you've got to learn in Vegas. So if you'll indulge me, if you could remember, now how many of you were trading back in the 1980s through the 1990s into 2008? How many of you were traders back then? So if there were a lot of you, you'd remember there was extreme volatility. One of the things about extreme volatility is that many times that extreme volatility can be called before it ever happens. In fact, almost every time you can call the extreme volatility. But what does happen, like the gentleman before me mentioned, there's a lot of trading systems stop working. They work really, really well for a period of time, and then a market move like 1987 happens and they stop working, or 2001 with the trade centers and the system blows up, or 2008. But imagine a system that just consistently can call the markets year after year without too much difficulty. If that's possible, I'd like to know. And I think I can show you that it is. So watch this. If you were a trader in 2008, now I was fantastic with calling the markets on the trading floor for most of my career. The whole time I was down there, I had an analysis service. I did really well. I had 3 houses and sports cards and all the great stuff that comes with being a floor broker, but it went away. Now they say us floor brokers have an edge, and the only way we make money is because we had an edge. Well, let me show you something. It's not an edge. It's knowing how to read the charts. This person before you right here in this video, Oscar Carboni, how would you like to have known in 2007 what the exact high would be before the crash in 2008? And is that even possible? Well, I'm here to tell you that it is possible. And let me show you what I mean by that.
We spoke in yesterday's video about a possible
The
rounded
date is 7/12/07.
And we put another top in a little bit lower a few days later, and we put another top in that's sort of rounded. If we do not take those tops out tomorrow or the next couple of days, then they're going to push them right back down again. However, if that rounded top gets violated towards the upside and NASDAQ makes new highs, away we go. And if you guys recall, for months on end, I've been saying the 1577 level has been my target since this year began.
Traders, you know what the high was? 1576. All through 2007, I told people in these videos, and I do a video night after night, and then I'm in a live trading room on microphone and camera every day, and I told traders we would go to 1576, and the market would stop up there. It hit 1577. Or the other way around, I gave them 1577, it hit 1576. And then the crash started. All right, Oscar, what a fluke. So you got that one right. What a joke. Can you continue on? Let's see what happens next. So now we've made the highs in 2008, and we're starting to crack. And here's the next major call I make.
So if you bulls want to make the case, don't start today because I expect this to be way in the next year. We can see as low as 668 in the S&P traders. 668. We can go that low while we're producing what could be that inverted, big bottoming inverted head and shoulder.
Traders, you know.
Oscar?
I don't have a crystal ball, yes.
I'm sorry to break in. This is Greg Lewis at the controls.
Yes, Greg.
Periodically, your audio is going out, and we can't quite figure out how that's happening. I'm wondering if you have a loose connection on your mic or...
You're getting audio going in and out?
Right, yeah, right now it's working, but about every few minutes it goes out for about 20 seconds. And
really?
I'm sorry, it's nothing I can take care of on our end. And I just wondered if maybe it was a loose mic connection or Okay, well, we'll just cross our fingers then. I guess there's nothing anybody can do about it. I think the main message of your presentation, is coming through. Just FYI.
If it happens again, please let me know.
I will. Thank you. Sorry for interrupting.
No worries. Traders, my apologies. I understand there's been a little bit of audio difficulty. I hope that you're getting some of this. It's going to get much more interesting than this. I just wanted to show you that the strength of technical analysis is unbelievable because I was able to call the top before the crash, way before, the exact top, and the bottom, how low it would go. And then after that, I actually called the low and said the lows are in the next video, but I won't even bother to show you that. So, all right, Oscar, in 2007 and 2008, you made great calls, 2009. So what does that mean? Markets have changed gears. Well, here we are. I'm going to show you something very interesting next. Some of you have seen this if you're Omniacs, and if you're new here, you haven't. I was invited on television to talk about crude oil. The price of crude was $103 a barrel. They invited me on TV and asked me if I thought it would go down or up, and I said down, and they wouldn't take an interview. I get a call a few days later, Oscar, what do you think, up or down? I said down. They wouldn't give me an interview. The third time they called, they wrote me an email and said, Oscar, what do you think? And this time I wrote back, I don't know. What do you think? Enter. They said, we think it's going up. And I don't think it's going up by any means. But I wrote back, well, what do you know? So do I. Just to see what would happen. I get the interview. Now, there's no way I'm going on TV to talk about the upside, even though that's what this lady thinks is going to happen. So I get on, and the first part of this interview you're going to see is her agreeing with me until I mention the downside and the price I think it's going to. And what really happens behind the scenes is she stops the set and calls me a nut and throws me off. Watch this. You don't see any of that, though. That happens behind the scenes.
Oil prices isn't a huge surprise to some. One guest predicted it right here on Money 2 years ago.
For perspective, in 1998, crude was only $9.91 a barrel. In 2001, crude was $14.59 a barrel. Then you move us out to 2009, crude was only $35 a barrel just in 2009. So that tells us at the rate we're moving, we should have crude oil back down under $40 a barrel by mid-2015.
I don't know about that. You had me until you said 40.
Now, right at this point, she stands up and they gaff me with the hook. And I'm off this. Get out, Oscar. You're a liar. You're out of here. So on the way out the door, I'm going, Melissa, I gave you a projection. I'm a fantastic analyst. That's not a prediction. That's for crazy people. I gave you a projection. Crude will be trading under $45 a barrel come 2015. And she throws me off the set. Then she invites me back.
President of Omni Trading Academy. So Oscar, I gotta say I love you. You're like tweeting at me the last couple of days saying, I was on your show and I predicted this was gonna happen. So I said that can't possibly.
It's actually not true. They contacted me.
But of course we found it. You saw it. You said it was going under 40 by mid 2015. We're pretty darn close. When do you think we go under 40 here?
I think it will continue to move lower. I think you'll actually see the price of 30, 35, and then 30 might be.
Point being, the Omni called it from 103 to 45. And it was right on the money. So where does that take me? So, okay, so I was able to make these great calls in 2007-8, plus during my career on the trading floor prior to. What can I do today? Well, that's what's really important, right? Not what we did in the past, because who cares? So honest, you were good in the past. What are you capable of today? That brings me to this presentation. I'll teach these things to you at OmniCamp. If you're lucky enough to be one of the members, we'll discuss that at the end, but let's move forward. Simple things like how to draw your trend lines properly, or the proper use of a well-placed moving average can make a huge difference in your trading. Now, this is what Wall Street watches. I kid you not, and you'll see why as the presentation goes by. You are looking at gold. Gold right now, if you follow it, isn't something that I would call a plateau or a flat. So I define it and I look and I go, okay, that looks like a plateau to me, right? You got these two purple lines, makes a plateau, market stays inside of the plateau. So what do you do when it's in that plateau? Well, simple things that Wall Street does is they sell it when it gets up here, they buy it when it gets down here, and they continue to play that all the way through until it stops. So here, it hit the bottom, the top, bottom. Simple stuff. Hits the top, it's supposed to go down from there. Hits the bottom. But what happens when it hits the bottom this time? Bingo, it hits the same fantastic average that every time the market gets near, the street pays attention to. So if you'll notice, when it went underneath, big drop. When it got above, massive rally. Turned into a formation called a bull flag. We'll get to that. But for now, we're looking at this, how you would trade inside of something like a flat. You just simply sell the extremes with the stop, buy the bottoms. Now, when you come to the bottom of a formation and you hit a moving average, the street, I kid you not, Wall Street is paying attention. This happens to be a very, very widely used moving average called the 50-bar moving average. The street watches the 50 and the 200 like clockwork. I am from Wall Street. I kid you not. These are simple techniques. What else can work really well? Simple trend lines. Now, algorithms are using the bottom of this day and the bottom of this day and the bottom of this day in tabular form, but it's the same thing as the visual chart. If you buy along these trend lines, especially if you've got the Omni pointing in your direction, you can make money almost every time, and the stop doesn't have to be large. So what I'm trying to show you is a well-placed average and well-placed trend lines are simple, and the street sees it. And what you want to do is go with what the street sees. If they see it, they use it. It makes it a self-fulfilling prophecy. And really, that's what this is all about, is to be a self-fulfilling prophecy. So we're going to get slightly more complicated, but I'm never going to complicate this for you at all. I'm going to show you the simple techniques the street is looking for. So we just looked at gold and a well-placed average. Look at that perfect buy off that average and the bottom trend line. This one, just a perfect buy there. And of course, my Omni gave me a buy signal on that day, and we had trades on the upside in gold on that day. I am a day trader, though. Whenever we get into omni trades, we're out by the end of the day, so that if some alien beam comes and sucks President Trump out of his bed at 4 a.m., it doesn't affect our positions at all. I want to be flat every night. There's too much going on in this world. So I'm a day trader. Been doing that my whole life. So that's gold. Let's go look at some other interesting charts here. Let's go here. So now we're looking at the E-mini S&P weekly. Oscar, you were good in 2007. You were good in 2008. You made a call in 2014, 15 for crude. Big deal. What are you worth today? Well, let me show you what I'm worth today. It's not me. It's technical analysis. I'm the messenger boy. I can just read charts well, and I teach others how to do that. Here comes COVID, traders. It comes out of the woodwork. China shuts down. We shut down, and the world falls apart. And every analyst on TV was calling for the end of the world. You heard it all. Everybody that you heard from, and what they were calling this portion of the move right here, they were calling this a bear market. And I stood on my head, stamping my feet in my videos and said, listen, do not listen to these talking heads on television. This is not a bear market. You're not in a bear market officially unless you take out the low of the previous major dip. It's not what happened. So when we get here, I had the guts to use my analysis and get in front of YouTube and get in front of all the traders around the world who tune into my trading room and watch me everywhere. And I said, this is a very interesting juncture. It is a double bottom. We have not taken out the previous bottom to the left. I am calling bottom. And I did that in a video, just like I did in 2008. I called bottom, and this is what happened since. Using a simple technique called the double bottom. Now, how would you use this for yourself? What you do when you approach a big double bottom like this, and this is a massive double bottom on the weekly bar chart. So every one of these bars represents a full week's worth of trading. Here's what you would do. You would never, ever buy this red bar when it first tests, nor are you buying this green bar until it does what? It closes back above the double bottom. Then you call it double bottom, and then you jump in and start buying from there. You do not buy it when it first gets there. You do not buy it when it penetrates through. You buy it when it finally closes back above that double bottom. So I literally posted this as a question mark. And once we settled above, I turned my double bottom question mark in my nightly videos into an exclamation point. Now, Oscar, you called the bottom of Corona? Are you kidding me? You did it again? I absolutely did that for all of my Omniacs on YouTube video night after night in my live trading room. And a little perspective on why most traders will not hold a live trading room. They would never have the guts to stand in front of people live and give them trades that work consistently for 15 years in a row. No one's got the guts to do that, because what they want to do when they give you a trade is be on a plane in another city. They don't want to be in your living room with you. They don't want to be responsible, because many times the techniques only work for certain people. For instance, if you give somebody 5 different areas to buy or sell a trade and leave it up to them to guess, if you gave me 5 different areas to buy and sell a market, I'd spin the gun and blow my brains out. It's Russian roulette. How am I supposed to know which of those 5 worked for me? But the author of that trade could go, well, oh, you took the other 4 that didn't work. Well, you should have went with us. We took the 5th one. That one worked. Nonsense. You know what I'm saying? It's not how this works. You need to have exact buy points, exact where you're getting in, exactly where you're getting out, and exactly where the stop gets hit in case you're wrong. Not 5 places, not 10 places. No one's got the guts to do that. Me, you will find me in that room every day, putting these trades before your eyes, living them with you, being the guy standing right behind those trades, and they are extremely consistent. Why? I don't have any special gift at all. I know how to read these charts like Wall Street taught me. So let me continue showing that to you. So somehow I called the bottom. That's ridiculous. How could I have done that? Well, this chart in conjunction with this next chart is exactly how I did it. These 2 charts told me the bottom, the bottom was going to be in. The one you just seen, the S&P Weekly, and the Dow Transportation Average Weekly. Why? The Dow never even penetrated the bottom previously. It stopped cold at it. The Transportation Average, which, if anything's moving in this country, if you're making a product and shipping that product and people are buying that product, everything has to move. The raw material has to be transported to your factory. People have to go to your factory to help build the product. Then it's got to be transported from the factory to the outlet, and then trucks have to come pick it up, or individuals from that outlet. Every bit of that is transportation. If transportation average sees it, it's real. So the transportation average nailing this double bottom, and the E-mini S&P nailing the double bottom, told me, just go with the charts. Do not listen to the street. They're always wrong anyway. Do not listen to the crowds. Don't turn that television on. The chart is whispering right now. So what is on this chart is the double bottom, just like you've seen in the E-mini S&P, and we famously called the low in COVID, the Corona lows were called by our Omni on live YouTube and in my live trading room using simple techniques like these. Now, the other thing that's a really monster for Wall Street is the 200 bar moving average. Forget the 50 is good. The 200 is gold. When the market gets by a 200 moving average on any size chart, weekly or daily, the street reacts. Look at the reactions everywhere. Look at this. Look at the reaction here. Even though it went down a little, big reaction up, held here for years. Held here again for a full year. When it broke, major break. Boom. When it tried to get above and couldn't, it broke again. Why? Because simply the street is reacting. Wall Street's jumping all over that simple 200 bar moving average. They will jump all over it. They will sell when it stays below for a couple of days or weeks if it's a weekly. They'll start selling like you see them do here. If it tests it and gets back above, they will buy. Simple, kids. This is simple stuff that anyone can spot. Now, that's what you want to use. The more traders on Wall Street that spot this and use it, the more of a self-fulfilling prophecy analysis becomes. So we've looked at the double bottom. Let's go look at something else interesting. We need to change charts. No wonder why. Let's go look at something else more interesting. So we see that there's a couple of lessons on this chart. So what I have to tell you about this webinar that we're looking at is I had no charts or nothing to do 3 hours before this webinar. I went and looked at the charts that I use every day throughout my trading life, and I posted them in front of my eyes and said, well, this ought to be fun. And what I'm going to do next, basically, is show you the charts that I use live as it happens, what I'm using today, and what you should probably be looking at. So what is on this chart? Well, one of the first things I'll tell you, the lesson on this chart is, and it's an Oscarism that's well known, when we see a double top, we sell a double top. When you see a double top that is really far apart, like this one, really far apart, when you see that double top, you can sell it blindly. Very few of double top formations that large will not produce. Almost all of those produce. When we see a double top, we sell one. That double bottom is not the same. The double bottom, you have to wait for the double bottom to hold, like I showed you, let it settle up above, then you can start buying. When you see a double top, you can sell right into it usually. There's a difference there. Double tops, you can be more aggressive on. What else is on this chart? If you look closer, I'm going to show you another simple technique that Wall Street loves. You know what it's called? A parallel channel. They absolutely love the parallel channel. And look at it. Top, bottom. Top, not quite bottom, but close enough. Once it started going up, they bought it again. It just tends to stay inside the channel, sometimes for years on end. And Wall Street is not blind. And then you couple the channel with the 200 bar moving average, another thing Wall Street loves, as you've been hearing. And I'll just keep reiterating the simple techniques that Wall Street likes. And if they like it, you like it. So look at the average holding and the bullish parallel channel. Then you get some volatility. It spikes once above to create the double top, comes right back in the channel. Started with the spike below, but held the 200, right? Settled above. Once again, we bounced off the 200. Now, interestingly enough, One of my YouTube fans came to me just a few days ago and said, Oscar, what do you think of the dollar? And I said, wow, what a great time for you to question that in my YouTube video. And that night, I presented this very same chart and said, perfect timing to ask me about the dollar. Look where it is. Repetitive patterns. They are the cornerstone to technical analysis. This stuff is not difficult. It's easy to spot. What to do with this analysis? Well, that's a little more difficult. Certainly coming to my OmniCamp, I can explain how to use this analysis. But a good pair of eyes can basically, in common sense, shows you what to do next. When it hits a spot where it always holds, well, that's the mentality you use. It always holds. Why? Because rule number one, the market is always right. Rule number two, if you think the market seems wrong, acts wrong, is behaving wrong, please refer back to rule number one. It's always right. You go crazy thinking it's wrong. It's always right. You just have to learn how to listen to it. So, simple techniques. You've seen the double top, the double bottom, 200 bar moving average, channel, 50 bar moving average. These are simple. There's not a lot of them. The street loves this stuff. They react to it all the time. So we just looked at the parallel channel combined with the 200 bar moving average in the dollar. Let's go see what it does in the euro. Check this out. Another technique I'm going to throw at you now that's simple to spot, and the traders on Wall Street just jump on it when it happens. This is called a head and shoulders formation. It's got to be huge. It's got to be big, big one that lasts for months on end. It can't be little. But a head and shoulders will tell you that the market is going to go down next. Now, is this a head and shoulders? Well, if you look, picture a human standing here, right? Left shoulder, head, right shoulder. Does not need to be symmetrical. Just needs to look to the eye like a head and shoulders, and it will project lower. Remember, though, it's got to be a larger style head and shoulders. I kid you not, Wall Street is looking at that. So look what happens. It builds a shoulder, a head, a shoulder, and Wall Street starts selling and stays on the selling. But watch what Wall Street looks at. Comes down out of the head and shoulders, bounces off the 200, they buy it. Gets below the 200, they try to sell it. It starts to have a little difficulty, and boom, now we start failing at the 200. Failed here, failed here, failed here. The selling begins. Look what happens. Major volatility. Where's it stop? The street knows the 200 here too. So I'm not saying it's the only thing to use. We use the 50, we use the 200, we use the head and shoulders, right? We use flags, bull flags, bear flags, channels, but simple stuff. Simple to spot. Street watched techniques are what you want to be using. Technical analysis is very powerful. Does this not look like something that's about to go down right here? When you expect that to head down? Sure does, right? Because why? It stops at the 200 and makes its turnaround. Does almost every time. So the simple mentality, keeping this simple, trade it when you see it. Now, of course, I'm blessed. I've got this thing called the Omni, which is Oscar's market navigational indicator, and it will tell me whether I'm buying or selling at these key points. Once again, that's not being introduced here, but let me show you the simplicity. Now, the street doesn't have my Omni. It's very, very well kept. So the street doesn't know my Omni. The street knows the stuff you're seeing, and that's what you should be paying attention to. So that was euro that you just seen. We had the dollar before that. So what we've looked at so far were simple street watched techniques. The ones I've covered so far, even though we've been together a short time, is simple trend lines drawn properly are magical. Moving average usage, you see that the 200, this is absolute unequivocal proof that the 200 is key to street managers, to the street and fund managers. 50, yes. 200, major. Double bottoms, we went over. How to handle them. Don't just buy those. Wait for them to recover, then buy. Double tops. When we see a double top, we sell them blindly. I showed you parallel channels, how the street watches them, the head and shoulders. And then, of course, I reiterated additionally, showing you how the 200 moving average works. Well, I'm going to continue on this for a little while till I beat it into your heads, because it's simple stuff that will help you make good trades. Now, we all know this is a very, very risky game, right? Risk, risk, risk. None of this works 100% of the time. It never will. Trading is risky. Trading options is risky. Trading futures is risky. Trading ETFs. If it's tied to Wall Street and it's tied to your trading account, it is extremely risky. This is not suitable for all traders. Analysis is not suitable for all traders. Trading is not suitable for all traders. Pacemaker, if you're wearing a pacemaker, please don't do this. It's not going to be suitable for you. If you don't know the risks, if you don't put your stops in first, if you don't realize you can lose way more than you actually have in your trading account, then you don't understand the risks. Trading futures is a seriously risky game. The leverage is fantastic. So please know, with these techniques, a stop always has to be placed. Now, I'm not here to sell you signals or sell you anything. I'm here to show you what Wall Street pays attention to, but never, ever trade without stops. So what else does Wall Street pay attention to? Let's go to the daily. Let's go look at another chart that's got some wonderful formations on it. Oh my goodness, look at this. This is like going to Disneyland. Look at all the great stuff on this chart. We're gonna have so much fun. All right, so now let's talk about these things called bear flags. The street can spot them like that. Algorithms spot them. Why? Because they know what to look for in tabular form. It's the same thing as looking with your eye, but it's easier with your eye. This is what's called a bear flag. It's a series of quick down days. Boom, 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 boom. That represents your flag pole. Then the flag, which is basically a consolidation moving towards the upside. This thing right here is your flag, and it will equate to lower. If it's a bear flag, it is bearish, it equates to lower. So the bear flag has the flagpole that quickly comes down, like I'm showing you here. Then it creates the sideways consolidation, and what happens next? Exactly what's supposed to happen. Simple. Then there's something called a bull flag, which is the exact same opposite. First, a series of quick days that run up, then a sideways to lower consolidation. That's your bull flag. And bull flags work really, really well, just like bear flags do. Now, because technical analysis, we're blessed, it's a fine art and it's not a science, it's okay to call this a flag even though you had that little blow through right there. Same thing down here. That doesn't stop this from being a valid flag. This is a fine art, kids, not a science. In fact, this makes you better than algorithms because algorithms lose their minds when you get a blow through. We, as humans, go, hey, no big deal. So I like the fact that this is a fine art, not a science. This is a bull flag, and it worked extremely well. Do they all work? Of course not. But the next time we run into a flag, it's another bull flag, and that one worked. So bear flag, check, worked well. Next thing we see is a bull flag, check, worked well. Next formation, another bull flag, check, worked well. Then we see another bull flag, and that's where we know that nothing is 100%, right? Never. This is a fine art, not a science. But if you traded this flag, you were right. If you traded this flag, you were right. If you traded this flag, you were right. It's okay to give up a few points on the one that didn't work out. And that is how you get consistency in your favor. If you see a flag, you trade the flag. And if you trade every flag that you see, like Wall Street does, you will find that they will be consistent 8 out of 10 times. Simple stuff, kids. But this is what Wall Street looks at. I know this might not seem like it, but these are algorithms. You just don't realize they're breaking down the chart into tabular form and calling it an algorithm. The movement of the chart, it's the same thing I'm looking at, but more simplistically. I want to know what the daily trend is going to be for the day. Now, this could absolutely be another bull flag building right here. This could be a bull flag, and it might dip a little on Monday and head right back up, or it could be another one that doesn't work. I would have to assume it will work because most of them do. So that's your E-mini S&P, and on this wonderful chart, we had a bear flag, a bull flag. We realize that it's a fine art, not a science. It's okay to have little blow-throughs like this one and that one and still be considered the same formation. We know nothing is 100%. And look at this. You probably didn't even notice. The street always pays attention to these things. The whole thing is a perfectly ran channel. It goes from the bottom to the top, works its way back, all the way to the bottom, takes weeks, months. Now, there's also smaller channels inside the bigger channels because you can just do this and the smaller channels inside the larger channels, and look at how many times this channel would make money for you. So believe it or not, I kid you not, this simple analysis, it seems simple. This is what the street pays attention to. I kid you not. You can see it happening before your eyes. Look at how many times buying this would have helped you. Boom, 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 boom. And selling it here, right? Gets back above, you start buying it again. So simple is fantastic. And the street's looking for the same thing I am, the simplicity behind the moves, and you should be looking for those as well. Remember, I'm running a live trading room 24 hours a day at livewithoscar.com. No credit cards, no nonsense. Just come on in, create a username, and find me. I'll try to show you how to do that towards the end of this. So now let's look at something else. Let's move to another interesting market. Dow Jones Transportation Average. Now, this is going to be an example, once again, of how well the street pays attention to the 200 bar moving average. It's simple to spot Wall Street mentality, kids. That's what you want to be involved in. Now, let's go back. If you think I'm kidding about this average working, look. Anytime it comes into play, dramatic move takes place. The street starts paying attention every time. Every time. Isn't that tremendous? The street will pay attention every time it gets to it. You'll get some volatility, but then it'll make its move. When you're under, you stay under. When you're above, you stay above. That's the mentality that the street is using. Look at all the instances that the 200 bar moving average, the street just jumped all over it when it got there. Now, we're not supposed to know this. We don't know why it's moving. Look at this. Perfect, perfect. I mean, it's just perfect the way it holds. Now, when it finally cracked, monstrous crack, right? What's it crack down to? All the way down, and what's it start? A parallel channel on the way back up. Are you starting to see that the street makes these formations happen? If you can spot them, the street makes these things happen. And who cares why or how? But they're working really, really well. So you failed at the 200 bar moving average after that massive run up, but it did it in the form of a channel. And look at how many times, if you sold the top of that channel, it pays. And then when it gets above, it blasts off, gets above 200, gets the street to look at it. It doesn't work. And boom, they go crazy on the downside again. And what does it do? It holds. Boom, it holds here. It holds here. Next move, where these question marks are. That should be what happens next, right? Maybe not right now, but according to this, it's to the top, to the bottom, to the top. Well, guess what? To the bottom. Parallel channels are very, very powerful. Street mentality, kids. I am of the street. I'm just trying to open up your eyes to the simple stuff that's out there that they are using, but they describe them with fund names like quants and algorithms and you name it. But this is what they're doing, just in tabular form. It doesn't always look like a chart. So let's go take a look. You see how well it worked on the Dow Jones Transportation Average, that 200 bar moving average? Watch this. Watch how insanely better it works on the Dow itself. Almost no violations at all. Holds, 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 holds. When it breaks, massive. Finally, it breaks and it's massive. The 200 bar moving average works even better on the Dow Jones Industrial Average than it works on the transportation average. Fantastic indicator to use. Simple. Nothing, no trickery behind these things. Then we're going to look at another technique on this chart. That technique is called another head and shoulders, but there is a difference. This is a very small head and shoulders. It happened very quickly, just a few weeks, and it was done. This is only a daily bar. No matter what you will read in books, no matter what you're going to be taught in courses, no matter what anyone teaches you, from this moment forward, remember this. A small head and shoulders is nothing more than a continuation pattern in the same direction. It will not top the market. A large, monstrous one, you might be calling the top of the market. You see a small one? No, it's a continuation pattern. And this is not what you'll find in books. Most books will tell you that it's a head and shoulders, and that means the market's going to turn. Not a chance. Continuation pattern. 39 years doing this, kids. That's a continuation pattern, not a topping pattern. So very nice techniques on every one of these charts that the street uses. And if you'll look here, once again, once you failed at that moving average, it's starting to pick up momentum. And what else? A good old parallel channel. You might not have even noticed it, huh, kids? This is all inside of a good old-fashioned parallel channel, as it should be. And look at how often that channel will work for you if you just use it for what it's made for. So, does this work on stocks? I showed you commodities. I showed you a bunch of indices. Will this work on stocks as well? Absolutely, positively, 100%. In fact, let's just name a few. We'll take a look at a few of mine, and then we'll start to look at what you guys like. So, do parallel channels work on Netflix? Does the 200 bar moving average work on Netflix? You tell me. Let's look at how many times this would have worked for us if we bought it. Let's just see how many times this would have produced for us. It's out of control, the amount of times that this will produce for you. Every time? Of course not. Almost every time? Absolutely. Sometimes you get a one-day through, but it goes right back. So these channels are phenomenal, and because they're so visual and they work so well, Wall Street works with these more than you could ever imagine. And look at how well the 200 bar moving average has worked on Netflix, just like it worked on all the indices markets I showed you, and the gold and everything else. So Netflix, let's look at something opposite side of the spectrum, like ALGN. Look at ALGN. It's got a head and shoulders, left shoulder, head, right shoulders, but this one's massive. It starts in October and it goes all the way through March. October, November, December, January, February, March. Okay, I get that one, right? That we call the head and shoulders. It should produce a down move. What happens next? Right when you come out of the right shoulder, it breaks the 200 bar moving average, goes into a bear flag, and falls apart. What's it do next? It comes rallying back to the 200 bar moving average and fails. Down, down, down. Goes back, gets above the average, and what's it do? It explodes. While it's doing all of this, what did it create? Once again, I know I'm pounding these techniques in your head, kids, but this is the simplicity behind this. A parallel channel. And it worked really well. Look at how many times the parallel channel would have worked for you. And the 200 bar, and the head and shoulders, and the flag. Now, of course, I've got way more techniques than this, but I just wanted to touch the surface of some of the stuff that I look at that tells me where the market should go next. And believe me, it works really, really well. Now, there's so much to teach you and so many techniques that I can show you, but there's so little time for us to do this together. Right now, at least we've gone over some simple things like the power of simple trend lines, the moving average, street usage, the 50 and the 200, but the 200 is key. Double bottoms, how to react. Double tops, just sell them blindly. Parallel channels, very strong. The head and shoulders formation, it works on commodities, and I just showed you it works on stocks. Look at a line. Not just commodities, right? It works well. Bull flags, bear flags, all of these techniques work really well. This is all street mentality. Wall Street loves flags and channels and the 200 bar moving average. I kid you not that trading is easy, but it's that simple to come up with these techniques that will tell you not what you should do next, where Wall Street's going next, and that is what you should be doing. Now, if you would like, it's really simple to get involved with me. If you just go to livewithoscar.com and you log in, if you've got a username, if not, click register. You fill out this and that's it. No credit cards, no nonsense at all whatsoever. The moment you log in, you'll end up at something called the Omni page. On the Omni page, if you're someone following my signals, you'll see where I'm buying and selling. But what I'd really like for you to do is click Omni Chat and join me in Omni Chat. Once you click Omni Chat, you will end up in a trading room where you will find me live on camera. That's me right now. Hi, kids. Usually the other camera's facing me just like this is, so I'm on two cameras, live in a trading room. I can't lie about my trades, kids. I can't fake any of this. You guys are here to hang me if I get it wrong. So this is about as real as it gets. I spend my entire life in this trading room running trades. Here's what we did on Friday. Thursday night for Friday, I put out a video, and in that video, I said, you know what? Omni's bearish. Omni's looking for the downside in S&P, but S&P doesn't usually have 3 down days in a row, so we're going to go trade in another arena. We're going to trade gold. And if you followed my recommendation for Friday, I said, traders, we're going to buy gold from 1729.5 on down. Place your sell stop below 1717. That happened. Next flash update comes out. It's me sending a video telling you what I want to do the next day. 2 hours later, another flash update comes out, and it says, OmniX, we are now long gold between 1729.5 and 28.5. It's now trading at 1733. Here are your Omni targets, 1737 and 1743. So we're long down to 28.5. It's already at 33. I'm telling you to take profits at 37. And if not, take them at 43. But I continue to help you. I say if you're not going to take your profit at 37, when able, and if you're staying in for the second target of 43, once we get to 37, you move your stop to break even. Now you're in a trade where you can't lose. You didn't take the first profit objective, 37. You want the second one, 43, but I tell you to move your stop. Then as the market moves higher, I say, bingo, we just hit 1737. If taking your profits, cancel your stops. If staying until 43, make sure your stops are at break even. And finally, towards the end of the day, bingo, 1743 achieved. We bought them here. We sold them here, a monster fat day in gold, and all the Omniacs were in tune with what I wanted to do. So that's what happens at my site. I send out an email, a text, but basically we click OmniChat and go into the chat room. You just simply log into chat. And once you click this chat room, you are live with me. There's a camera that goes only in one direction. I'm on the camera and microphone, not you, so don't freak out. No one's going to see anybody weird there or anything. But you can join me live and hang out with me in my live trading room while we go through these trades. Now, for everyone watching today, I am going to give you a 2-week free trial. The room's always free, but I give actual recommendations that I don't give out to a lot of people. But I'm going to give everyone watching a 2-week free trial to my recommendations. Very simply, just fill out the form that you used to join this webinar. And you have a chance at the bottom of that form to click for my free trades. What I didn't show you is the Omni, which tells us exactly where to buy and sell and where to place our stops using these techniques on top of it. So if you'd like to join me, it's very simple. If you want to come out to one of my Omni camps, that's very exclusive. Only 3 of you would be able to come out. That we'll talk about if you ever join me in the trading room. At this point, I'd like to open up to questions. If you've got a stock that you can think of and you want me to analyze it, you call the stock. If I've got the data, I'll pull it for you. Jeff, I can't see where the questions are at this point. I've got too many windows in front of me. If you can tell me if there are any questions, I'll be more than happy to answer them.
Yeah, we have questions. Absolutely. We have, and by the way, ever since Greg cut in on your audio, it's been great. We've heard.
Thank you, Greg. You fixed it.
I think it's because I cut in that it's been great. Another point, Oscar, despite the interruption, I have to say your presentation, the live viewers have spiked since you've started. So obviously bad audio didn't hurt your viewership at all.
How high did we spike? Just because I can't believe the stats.
I don't want to put out particular numbers, but a good 20%.
Good. Glad to hear. Now, on purpose, I didn't announce it to my own crowd. I didn't announce it to the crowd in the trading room. I announced it to everybody else that's part of my crowd, just to not get the regulars. I wanted to see if we can get new people because the regulars see this every day. So that worked out well. We did get new people instead of my regulars who joined me in the trading room every day.
Well, I'm enjoying it.
Well, thank you. So I would love to be able to analyze some charts for any of you traders that are out there right now that would like to look at a specific stock or commodity.
Lee Hansen wants to know, did you say that the gold was going up and the dollar was going down?
So what I showed was that the dollar has reached a point where it almost always holds. So let's go back to that dollar chart. I believe it's on here. Let's go out to a weekly. Let me see if I can show this to you. Weekly. So what I was showing to my YouTube fan who asked the question, which I'll of course show here, is that almost every time you get to the bottom of this channel in the dollar on the weekly chart, now it's not a daily, it's a weekly, the street comes in and buys it. And when it in conjunction with the 200 bar moving average, they absolutely come in and buy it. Look at what happens. So that just took place the last 2 weeks. Right now, I'd have to think we're going back into buy mode in the dollar. Now, of course, if we end up with bars that come down, and the next thing you know, we're looking at this, well, then, of course, we'll change our opinion completely, because now the cycle has finally broken and we stop holding this. For now, the mentality is the market, the street likes it, the market likes it. We should like it whenever it gets down this low.
Derek wants to look at UCO.
UCO. Ooh, well, that, oddly enough, is a stock that you can't really analyze, because it's just below the 200 bar moving average, obviously, but it's got no volume and it's really got no range. Unless something's wrong here. Something could have been. There you go. Uh-huh.
Yeah, that's an oil ETF. It's like USO, but it's I think it's a double.
So why, of course, these bars over here look so small is because you have to add in this massive movement. So it makes all the bars here look really small. They're probably not that small. But at this point, I think you'd be better off analyzing the crude oil itself than the ETF of the crude. And then if you want to buy the ETF or sell it, you do that. So I would say we look at the crude, the actual market, and then if you like it, you do something about the ETF. So let's go to a daily and see what that looks like. So crude on a daily, just looking at this very quickly, and let me mark this as crude oil for us. If you look at this, it's doing exactly what I tell you the street makes these things do all the time. It's building its parallel channel already. It's finding areas where the street likes to come in and grab. So it's starting its way back up. Now, if you ask me, the biggest challenge is this. What you want to see happen is this gap get filled and then move higher. You need this gap filled. It's working its way up, but we don't want to just hit the gap and stop. We want to hit the gap and get above the 200 bar moving average. Then you can really have crude take off. That's technically. Fundamentally, the whole country's allowed to go back out and drive and fly and do stuff. So you better believe this is going to start to go higher, because we're allowed to now use gas, right? We weren't allowed to use much of this for the last 3-4 months, but we can now. So I would think it's got to be crude, has to be bullish fundamentally. Technically, I like it, especially if we can fill the top of this gap.
So you don't think they're going to start paying people to take oil again?
You know, that's the first time I've seen it in 39 years. I don't expect to see it again for quite some time.
RNG, Oscar, RNG from Dennis.
RNG for Dennis. Well, there you go. That's a good looking stock. So RNG, let's label that for you, Dennis. And this is a daily. So for this stock, you've seen it's had some volatility, but once again, remember that simple, I just took you through 40 minutes of the simple techniques. See how the street even paid attention to a single stock when it got down there? They always do. So just keep that in mind. I mean, why not go with it when the street does? So looking at this is developing something I like to call an F flag, which, you know, we didn't really cover a lot of F flags. So what do you have on this chart? At first glance, if you don't see it, there's an inverted head and shoulders right here. Left shoulder, move this up for the head. And then there's a right shoulder. Now, none of this needs to be symmetrical, by the way. It just needs to look like it is one. So right off the bat, you put in an inverted head and shoulders. That should tell you that the market will tend to go higher. So we turn that arrow around. So the market will go higher when you have an inverted head and shoulders. 100% of the time, of course not, but almost always you'll get a market to do what you're seeing this one do now. It did break out of the head and shoulders and move higher. So this is called an inverted head and shoulders. This is the opposite. Now, we didn't see these while we were doing our presentation. Had I spotted one, I would have, of course, brought it to our attention. But this is the inverted head and shoulders, which is the opposite of when the head is up here. That's a bearish signal. This is a bullish signal. And that seems to have worked really well. And now we're starting to build something in this chart I like to call an Oscarism, if you will, called an F flag. And a lot of times you get into an F flag and it'll just continue on for quite some time. So I like what I see here. And I would like it even better if we can just get away from this whole mess. As you can see, there's this whole thing happening here. You could pull it in tighter. You'd like to turn that into a bull flag and watch it go higher, right? Bull flag, turn that into a bull flag. So everything about this chart is bullish, except for maybe short term. It could end up doing what you see a lot of times happens is top to bottom to top to bottom to top. If it's not ready to break out, you'll go to the bottom again. But when it's ready, it should break out on the upside if it's building this big bull flag, which I think it is. So I don't know this stock and I don't analyze it every day, but short, quick analysis. This is what I'm seeing on your RNG. I hope that's helpful. Is there anything else out there?
Oh, we got lots of them. I think we've got too many, but we'll do a couple more. ARES.
ARBS.
ARE, Edward S.
ARES. So ARES, once again, glad to see it's above the 200 ball moving average. You didn't quite get to what you would call a double top here, right? It failed before it ever got there. Right, so no double top was ever hit. Kind of got close, but no double top there. But what you do see happening here is it's building these. Something tells me the stock is not doing all that much volume. And why I can say that is it's trying to build what the street would call flags, but they're ugly looking. So I'm assuming without looking at volume that the volume on this chart is not all that fantastic on this stock. But it's building flags like this one right here. And unless it's not going to work, which is a rare occasion, you've got another one sitting right here. At the same time, you'd have a little baby inverted head and shoulders, but I'm not even going to look at that. And then, of course, you can define this in some way that it's starting to build a parallel channel. Now, you see how odd? All I did was connect the bottom lines. How come it connects the top so perfectly? I mean, this doesn't happen by accident. This is the way analysis works. It all comes together, and it's one big, beautiful picture. You just have to know how to use it. So for me to get a parallel channel out of simply drawing a trend line, and that's all I did was draw a bottom trend line, right? So why would the top work so well? Because the street is paying attention. When it gets to the top, they know what to do. When it gets to the bottom, they know what to do. Once again, traders, I'm bringing you Wall Street. It's really, really not that complicated because they don't like to teach this to people. And this is ARES on a daily. All right. Is there anything else we can look at?
I think we'll do two more. BABA or Topher.
Oh, BABA. No, I'm sorry. So looking at BABA, I guess the last time I looked at this, I had no opinion, but that's all the way back here, whatever was going on. So months have passed. We'll get that out of the way and see if we actually have an opinion. So obviously I was looking at some flag building, or I thought I was noticing a flag building here because you see I had it defined with this, right? So that was probably taking place. Once again, this looks a lot like the stock that we just looked at, ARES, where it never quite made it to its double top when NASDAQ did, just if you remember, a few days back. NASDAQ hit, but these guys ran out of steam before they got there. I would say that you're in a channel right here that can be relied upon. I mean, look at how well that worked. All I did was connect the bottom lows and the tops all seem to come into play. Now, of course, you can pull it in slightly and connect all of them, and that's fair game. So I like what I'm seeing here. I don't know what happens until I do my analysis this evening or Sunday evening for trading Monday, but quick analysis on this. If it stays inside this channel, you probably should like it.
We're getting about 5 people asking to look at gold. So I think that's probably the one we'll finish up with.
So gold, I think we were looking at a gold chart here somewhere, maybe this, yes. So gold, several ways to look at. There's the daily. And by the way, I didn't even bother to point this out, but you might have recognized that this massive flag right here worked really, really well in gold. These techniques, I kid you not, the street just jumps all over this stuff. As simple as it seems. Thank goodness it's simple. So what would you like to see in gold? We have a daily here, but we can look at the weekly as well. On your weekly in gold, you really couldn't ask for a better looking market right now. I think that the gold, with the exception of day trades where it goes down, really looks good here. And it's staying inside of what looks to be a very nice trend here, starting to build itself. Let's see how it fits. We'll move this to the top of that. So it looks like it's staying inside of this right here on the weekly in gold, but I'm going to bring you back to the daily for a moment. So this is the weekly in gold. And if you ask me, I think it's a very nice structure. And this, by the way, even though it takes forever for flags to work, this is a bull flag right here building in gold on the weekly. But on weeklies, it takes forever. Let me move this out of your way. You've got a flag building there as well. But on weeklies, because each bar takes a week, you could have another 10 weeks in this flag before it pays off. Let's go back to the daily for a moment. On the daily, I've told you that this is a plateau. This plateau, if you ask me, will equate to prices much, much higher. When it goes, it will probably go up almost as high as this plateau. So it'll probably end up going up here somewhere when it finally goes. So that's my opinion of gold for longer term view. Because I'm a day trader, even though we got long on Friday and it worked well, you can see me selling this on Sunday night into Monday. That depends on my Omni analysis. If the Omni says jump, everyone who follows the Omni asks how high. We've all learned that the hard way. So the Omni will tell us if it's bullish or bearish, and then the analysis will tell us where to get in or out. But I wanted you to see what the street looks at, and I kid you not, I am of the street. These are the things that they would never want to show you, but I hope they're helping. I hope you're writing some of these down, and I hope you come to my trading room where I can continue to help you to understand how this works.
And just to reiterate that, they could go to livewithoscar.com to do that.
That's correct, livewithoscar.com.
Okay, awesome. Oscar, thanks for the time today.
Well,
Great job.
Thank everybody for tuning in. Jeff, thank you so much for having me. I hope I taught you a little something here about what the street looks at. And please come join me in my free live trading room anytime you need advice.
All right. Great job, Oscar. Really appreciate it. Great session. Okay. Let's go ahead and going to go ahead and just kind of dismiss Oscar. Thank you for, I love Oscar. What a great presentation. And we'll go ahead and wrap up. Thank you for coming today, everybody. Let's go ahead and kind of just go back to the sides real quick here. Do want to say, I hope you enjoyed today. What a big day. What a great day. I love these things. Anyway, one last reminder, you can get your Trader Summit Action Traders Pack or whatever you want to call it. It's a 50% discount. Instead of $49.89, you get $25.45. It includes all the great add-ons that we talked about, the award-winning MetaStock software, 3 months of learnmetastock.com, Unleash the Power of MetaStock, 2 years of Stocks and Commodities magazine. Normally $4,989, here today, $2,545. Give us a call, 800-882-3040. You can chat online live with us at metastock.com/sales-chat. And one last thank you to Stocks and Commodities magazine for sponsoring today's event. We really appreciate what they do and how long they've been with us and supporting the Online Trader Summit. So for me, thanks for coming today. I really appreciate it. I hope you enjoyed it as much as I did. One last answering of the when will you be sending out the videos? If you registered if you're in the GoToWebinar room, within 1 hour, you'll get the recorded videos. It'll be sent automatically. I set it up to go this morning. It's just going to go up to our YouTube channel. So right here, Control V. Send to all. Dave says, can you write off the cost for your system on your federal taxes? Now, I'm not a tax attorney. You have to be trading as a business. There's a lot of things that kind of go into whether or not that qualifies. If you are trading as a business, it could be considered a tax expense or a business expense. We have a pretty good people we work with called Traders Accounting, Traders Tax Accounting. But I would recommend that you consult a tax attorney. If you're using it as a business expense and you're an official business trading, yeah, should work. Again, consult an attorney. You're welcome, Eugene. Good to have everybody here. We'll see you again at the next one. And I appreciate everybody for coming. Give us a call, 800-882-3040. chat online live with us. It's been a long day. MetaStock.com/sell-chat. Good to see you today. Thanks for coming. We'll see you at the next one. Stay healthy. Stay safe.